Hey, hi guys, this is the Arpita Tulsyan here. So yes, let's start with the ICAI case scenarios for CAFinal IDT. As you all must be knowing that for May 26, September 26 and Jan 27, our ICAI has released 55 case scenarios for CAFinal IDT. So yes, here I am. As you can see the file on the board, everyone. You can simply download this file from the ICAI website, or if you want to download the marked PDF, because while solving this case scenario, I will be doing some markings in the file itself. So this marked PDF will be available on my Telegram channel. So you can join Arpita Tulsyan channel and there you can download, or you can download it from my website arpitatulsyan.com. Yes. And we will try to solve all the case scenarios, all the 55 case scenarios, as you can see here. Yes, in the least possible time, because I know how important the time is for you at this moment. Yes, now these MCQs are going to help you for MCQs also, and it is going to help you for descriptive also, because anyway we have to discuss the concepts also here. Okay, so let's create a history by solving these 55 MCQs together at a stretch. Yes, can we start, everyone? I think we are good to go. Let's start with the first one. Yes. Chalo, I'm reading the first case scenario. Everyone, let's start it. Vidyut Corporation Limited is a public sector undertaking engaged in the business of generation of electricity from conventional and non-conventional sources. The government of India holds 75% equity in the said company. Okay. And balance equity is held by institutional and domestic investors. The company has taken separate registration under GST in each state where it has business operations. The company has its head office in Delhi and its power plants are located in states of Bihar, Odisha and Chhattisgarh. Following transactions were carried out by the company during the month of February. Okay. So basically HO is in Delhi and power plants are situated in 3 other states. Okay, now this is a public sector undertaking having 75% equity is there with the government of India and balance with other investors. Okay, so wherever we see the relevance of PSU coming, or wherever we see the relevance of government entity coming, so it is going to have impact in this particular question. Let's try this. Now first one, sale of electrical energy to DISCOM, that is distribution companies, that is so and so. Then bank interest received on saving bank account and fixed deposit. Bank interest received, we have already studied this in the exemption chapter. Bank interest received on saving bank account and fixed deposit. Can we say it is specifically exempted? Interest income is exempted from GST. Yes. Okay. Then house rent recovered from the employees for residential accommodation provided to them. House rent recovered. So company has taken this rent from the employees for residential accommodation. Can we say even this is exempted specifically? Because the house has been given on rent to unregistered persons, to employees, to unregistered person, and that too for their personal use only. So this will be totally exempted from GST. Then rent collected from banks, ATM, post office and shops located in office premises. Can we say we have taken rent from banks, ATMs, etc. and we are assuming that these banks, ATM, post offices would obviously be registered under GST. So can we say this is normally taxable? This will be normally taxable under forward charge mechanism. We are also registered and the other person is also registered. So this is renting of commercial property by a registered person to another registered person. So we will see the status of the owner here in commercial property. Remember I told you the status of the owner becomes very, very important. So if the owner is registered, then forward charge mechanism will be applicable. Then sale of metal scrap. Sale of metal scrap, which is covered under chapter 72, excluding TCS at the rate of 1% as per the Income Tax Act, to Birla scrapers, unregistered person under GST. So we are registered person is selling it to unregistered person. Can we say when registered is selling it to unregistered, at that time RCM will not apply? Right, RCM will not apply because RCM will be applicable only when the recipient is a registered person. So can we say this is normally taxable under forward charge mechanism? Yes, and this is excluding TCS at the rate of 1% as per income tax. So we have already studied in the value of supply chapter, inclusions and exclusions, that TCS as per income tax will be excluded while calculating the value. And this value is anyway excluding the TCS. So can we say directly on this value, the GST will be applicable under forward charge mechanism? Then, in addition to above information, following transactions where, one more thing, other income is given here, no further information is given. Now, in addition to above information, further transactions were also carried out during the month of February. A supply order for stationery items was awarded by Delhi HO to Messrs Stationery Mart, New Delhi for rupees 3,36,000 including GST at the rate of 12% in January. The vendor supplied stationery items worth 44,800 including GST and issued the tax invoice in February. Okay, so basically the vendor is Stationery Mart. Can you see this? Messrs Stationery Mart is providing it to whom? Messrs Stationery Mart is providing this to Delhi HO. Is going to supply the stationery to Delhi HO. What is the contract amount? Contract amount is 3,36,000 including GST. Now the vendor is supplying stationery in installments. So 44,800 value of stationery, it's supplied in the month of February and invoice was also issued in the month of February. Delhi HO had made the payment for the same in February. The remaining amount was paid in April on supply of balance items. So basically contract was entered in January. Part of the stationery we received in February. Balance stationery we are going to receive in the month of April. So can we say here Messrs Stationery Mart is going to supply it to Delhi HO, for which Delhi HO is going to do the payment to the Stationery Mart in installments. Yes, but can I say Delhi HO is a PSU? Delhi HO is a PSU. If Delhi HO is a PSU, then can we say TDS provisions will be applicable here if the contract value exceeds rupees 2,50,000. Do you recollect that? So yes, here the contract value is exceeding rupees 2,50,000. Okay, when you check this 3,36,000, it will be excluding GST. So can we say this will be 3,36,000 divided by 1.12. So can we say contract value here is equal to 3 lakh, which is anyway more than rupees 2,50,000. So TDS provisions will be applicable. So whenever the payments will be done, whenever in February and April, whenever Delhi HO is going to do the payment to Stationery Mart, it is going to deduct the TDS there. Yes, so now can we say in the month of February, now it is purchasing a stationery worth 44,000, but that is including GST. So 44,800 divided by 1.12 or divided by 112 into 100. So that gives me 40,000. Means can we say now the TDS will be applicable on 40,000 for the month of February. Yes, and whenever the balance payment is going to be done in the month of April, accordingly the TDS will be applicable in the month of April also. Yes. Okay, then Odisha plant purchased office furniture for rupees 2,80,000 during February from an unregistered dealer. Okay, we purchased office furniture during February from an unregistered dealer and rate of GST on the said furniture item is 18%. So even if we have purchased it from unregistered dealer, we have nowhere studied this under RCM provisions for furniture. So ignore it for the timing. Then a board meeting was for raising the term loan for project expansion was held in February. The Delhi HO paid 20,000 each as sitting fee to 4 independent directors and all of them are registered under GST who attended the meeting. Further, it paid 80,000 to one of these directors who had rented the office building to Delhi HO. Okay, so can we say first we are paying something called as sitting fees. We are paying sitting fees of 80,000 totally, that is 20,000 each to 4 independent directors. Can we say on director sitting fees, RCM provisions will be applicable? Because whenever the independent directors are providing the services to the company in capacity of a director, whenever a director of the company, doesn't matter even if he is registered or unregistered, whenever he is providing the services to a company or a body corporate which is located in a taxable territory, at that time RCM was applicable, that is company is responsible to pay the tax. So here when Delhi HO is paying this sitting fees of 80,000, can we say here Delhi HO will have to pay the tax on this under RCM? But that will not apply to this renting, because renting service is not done in the capacity of a director. Yes, we have taken this example in our class also. So here, can we say for rent? For rent, can we say FCM will be applicable? So can we say for that rent, that one director will be liable to pay the GST on the same? Yes. Okay. Then after that, for safety and security of its HO and power plants, the company engaged the private security as well as CISF. Following payments were done in February in respect of the said services. Bihar plant, Odisha and Chhattisgarh plant paid so and so amount in February to CISF, and similarly the Delhi HO paid 5 lakh rupees to ABS Security Services Private Limited, paid on 11th of February. Okay, so what have we studied for security services? Where did we study about security services? We studied that whenever security services are provided by any person other than body corporate, okay, any person other than body corporate to a registered person, okay, to a registered person other than composition, then in such cases RCM provisions will be applicable. So now we will have to check is the supplier a body corporate or is he a person other than body corporate? So if the supplier is other than body corporate, okay, if the supplier is other than body corporate, then in that cases RCM will be applicable, otherwise FCM will be applicable. So can we say here they have given the full form of CISF stands for Central Industrial Security Force, and here ABS Security Services Private Limited, this is anyway looking like a company, so it will come under your body corporate. Now the Bihar plant purchased a machinery in February from Messrs. Sahu Enterprises Patna, which is not registered, for 86,000. Full payment was done in February. Rate of GST is 18%. Okay. So now can we say here, we have purchased it from whom? We have purchased it from an unregistered person, and we have purchased a machinery. So we have not at all studied this under RCM, and here the value is also 86,000. So can we say even TDS provisions will not become applicable? Yes. Now all the above amounts mentioned are excluding GST wherever applicable unless otherwise specified. Based on the facts of the case given, choose the most appropriate answer. Yes, let's try to solve, see if we are able to do it. Now, the value of taxable supply on which GST is payable by Delhi HO under forward charge. Okay, Delhi HO, how much is the value of taxable supply under forward charge for the month of February? So now see this. Can you see this Delhi HO part? Yes. Delhi HO, income of Delhi HO we have to check. Okay, now first of all, bank interest. Can we say this is anyway exempted? Yes. Next, house rent also we have discussed, even this is exempted. Okay, rent collected. Can we say this will be taxable, and that too under forward charge mechanism? Okay, take the figures in your calci everyone. 48,000 will be the amount here. Acha, sale of metal scrap, no sale is done. And then there is other income. So we are assuming this other income is also a taxable income under forward charge mechanism. Add 2,50,000. How much is it coming to? It is coming to 2,98,000. Can we say these were the transactions, these were the sale transactions done? And whatever is given below the table, can we say these are the inward supplies? So maybe for these transactions, RCM will be applicable. But here they are asking only about FCM first, only about forward charge mechanism. So can I say my answer is coming to 2,98,000? B will be the correct answer. Yes. Okay. Then next one. The value of taxable inward supply on which GST will be payable under reverse charge by Bihar power plant. So for Bihar power plant, when is RCM going to become applicable? Let's see from here. So for the first one, it is stationery item. So on stationery item, there is no RCM applicable. Okay, then point B and then for point B is anyway about Odisha plant. We have to see only for Bihar. Chalo, let's go to the third one. Third one is talking about Delhi HO. Yes, so Delhi HO RCM. Which one will be the correct answer? Delhi HO paid rupees 20,000 each as sitting fee to 4 independent directors. Yes. Acha, they are asking for whom? They are asking for Bihar, not Delhi, sorry. They are asking for Bihar. So now see the first point. First point is for Delhi HO. Second point is for Odisha. Third one is for Delhi. Fourth one, yes, in security services. We have to see from whose point of view? We have to see from Bihar point of view, right? So Bihar plant. Can we say there is only one transaction for this Bihar plant? Yes, and here for Bihar plant, it has paid 10 lakh rupees to CISF. So can we say for CISF, they have not mentioned whether it is a body corporate or it is not a body corporate, and nothing is visible from the name also. So we'll assume that the service is provided by a non-body corporate, that is a person other than body corporate. So if a person other than body corporate, that is CISF, is providing services to the Bihar power plant, then can we say RCM provisions will be applicable? So on this 10 lakhs, CISF will not charge any GST, but can we say Bihar plant will have to pay the GST under reverse charge mechanism? This is the only transaction, right? Okay. And then the last point, Bihar plant purchased a machine from unregistered person. So this was nowhere coming under RCM, right? So now can we say only on this 10 lakh tax will be payable? Let's see the question. So the inward supply on which tax is payable under reverse charge, can we say that will be only rupees 10 lakh? Yes, basic rupees to 10 lakh will be the correct answer. Yes. Okay. Then let's go ahead to the next one. The value of supply on which TDS under section 51 shall be deducted by Delhi HO while making payment to that stationery mart. In the month of February, how much payment were we doing? Do you recollect, for the month of February, we were doing this payment of 44,800. But when you are doing the payment, when you are deducting TDS has to be deducted on the value excluding GST. So 44,800 is including the GST. Can you see this? It is including the GST at the rate of 12%. So 44,800 divided by 112 into 100. So that gives me 40,000. So on 40,000 rupees, TDS will be applicable for the month of February. But ma'am, the contract was of 3,36,000. I agree. But in the month of February, you are doing the payment of only how much? 40,000 plus GST. So for the month of February, you will deduct the TDS only on 40,000 rupees. So see what is the correct answer. 40,000. A should be the correct answer there. A should be the correct answer. Yes. Okay. Then after that, next one. Let's go to the next one. The value of taxable inward supply on which tax is payable under reverse charge by Delhi and Odisha. Okay, Delhi, reverse charge mechanism. Can we say this independent director? So 80,000, on this 80,000 tax will be paid under reverse charge mechanism by Delhi HO. Yes, and then from Odisha point of view, you have to go and check this table. So can we say Odisha will have to pay tax under RCM on this 8 lakh. Same CISF was providing the service, so RCM will be applicable. So 80,000 for Delhi and 8 lakhs for Odisha. Yes, 8 lakh and 80,000 and 8 lakh. So B will be the correct answer here. B will be the correct answer here. Yes. Acha. Then after that, which of the following statements is most appropriate with respect to sale of metal scrap by Chhattisgarh plant? So what did we discuss about sale of metal scrap? Can we say it will be taxable under forward charge mechanism? Because we have supplied it to unregistered person, so RCM cannot become applicable. So can we say it will be taxable under forward charge mechanism? And that will be including TCS or excluding TCS? It will be excluding TCS, that we have already discussed, that is as per the value of supply, it will be excluding the TCS. Chhattisgarh. So can we say TCS will be applicable, your GST will be applicable on this 45,000 rupees. On 45,000. Yes, 45,000, but that too under forward charge mechanism. So can we say B will be the correct answer here? B will be the correct answer here. Because this value, first of all, it will be under forward charge mechanism because it was supplied to an unregistered person. And secondly, on this you will not add the TCS and then calculate the GST. Excluding the TCS, GST will be applicable. Right? And the last one, which of the following supplies is or are not taxable under reverse charge mechanism? House rent recovered from the employees for residential accommodation. Can we say this is This is not taxable under reverse charge mechanism because this is anyway exempted. Acha, rent collected from bank, ATM, etc. This was also coming under FCM. Right? This was also coming under FCM. Why? Because we have rented commercial property to registered persons. Sale of scrap to Birla scrappers. Even this was coming under FCM because Birla scrappers are unregistered. So you cannot make RCM applicable there. So which is the correct option? Choose the most appropriate. A, B, C. Can we say in all the three RCM is not applicable? So 1, 2 and 3. Can we say B will be the correct option, everyone? All the three. In all the three, either it is not taxable or it is not taxable under RCM. Manageable till year, everyone. Manageable till year. Simple till year. Yes. So we are, with this we are done with the first case study. Yes. So did you understand how they have compiled the provisions from multiple chapters and they are testing it to you? Okay, so here basically TDS provisions were there, then your value of supply provisions were there, RCM provisions were there, that you have to apply all of it taken together, Yes, sure. Can we go to the next one, everyone, now? Okay. Chalo, let's go to the next case study, going on to case study number 2. Everyone, here it is. Yes, so let's start with this. I'm reading the second case scenario. Vardhaman Limited, herein referred to as a company registered in Delhi, has operations in multiple states across India. The company has taken separate GST registration in all the states where it operates. Very good. During the month of January, the tax team presented the following information in its report to the management. The company sold goods valuing 5 crore rupees from its warehouse located at Kandla Port, Gujarat. Okay, warehouse located at Kandla Port, Gujarat to a buyer located in Ahmedabad by way of transfer of title in goods. The responsibility of clearance of goods shall be on the buyer. The goods were imported by the company from Vietnam and were not cleared for home consumption. Okay, so basically these are imported goods and which are kept in the warehouse, and when the goods are kept in the warehouse, we have sold it to a buyer located in Ahmedabad. Can we say this is not a supply as per schedule number 3? Do you recollect? It is not a supply as per schedule number 3, goods sold from warehouse before clearance for home consumption. So this is not a supply. Okay, this is what we know till now. Okay, this is what we have analyzed till now. Then the company got a favorable advance ruling order on a particular issue from the authority of advance ruling Rajasthan. Okay, from Rajasthan AAR, it has got some favorable advance ruling. The application was filed by the company through its registered place of business in Rajasthan. Okay, so basically if we have at all got any AAR ruling from Rajasthan AAR, then it will be applicable, it will be binding only on my Rajasthan office. Right, it will be binding only on my Rajasthan office and my Rajasthan jurisdictional officers, not to my other offices. This we have already studied in Authority for Advance Ruling, AAR chapter or Advance Ruling chapter. Then the company received an order from adjudicating authority in Maharashtra, maybe about the Maharashtra office, wherein demand of tax amounting to 1 crore and penalty amounting to 10 lakh and interest amounting to 25 lakh was confirmed by the AA. The dispute in this case was similar to the issue for which a favorable order from AAR was received by the company in the state of Rajasthan as discussed in the second para above. Okay, so now this adjudicating authority order pertains to Maharashtra, but they are of the opinion that we have got favorable ruling from advance authority in the above point, so we will apply that order. Can they apply this order for Maharashtra? No, they cannot apply, because here the second point that we studied, that is applicable only for the state of Rajasthan and not for any other state. Okay, anyway, the company feels that it has a strong case in the matter before the appellate authority. So basically it will go for an appeal. Let's see what question are they asking about that. Then the company has issued tax invoice in relation to certain supplies wherein the total tax collected from the recipients amounted to rupees 3 crore. Subsequently, it was noticed that the supplies were not liable to GST and the amount has been wrongly collected by the company from the recipient. So if we have collected something in the name of tax, then we will have to pay it to the government. This is what we have studied, right? Okay, let's see. And then a special audit was initiated by a chartered accountant. Special audit we have already studied under section number 66, right? nominated by the state tax authorities of Madhya Pradesh against the company in the state of Madhya Pradesh. Let's see what are they asking. Now, based on these facts, let's answer the below questions. First one, in relation to goods sold from its warehouse in Kandla, Gujarat, the company shall not be liable to pay any tax or duty, right? Why is the company not liable to pay any tax? Because we have already studied that it is not a supply as per schedule number 3. So later, whenever that person is going to clear the goods, from its warehouse, at that time it will be liable to pay the customs duty as well as the GST on that. So as of now, for this sale, there is no GST applicable because it is not a supply. Right? Then after that, going to the next one, in relation to advance ruling order received by the company, that AAR Rajasthan, whenever it was giving the ruling, the order is binding on whom? The order is binding on the company only in Rajasthan, but all jurisdiction officers no, across all states no. The order is binding on the company and jurisdictional officer in Rajasthan. Yes, C is the correct answer. That is, it will be applicable on the company which is there in Rajasthan, and means of my office which is there in Rajasthan, and my jurisdiction officer who is there in Rajasthan. Okay, not across all the registrations. So C is the correct answer. Then, in case the company prefers an appeal before the appellate authority against the order passed by adjudicating authority in Maharashtra, the amount of pre-deposit to be made by the company. Okay, pre-deposit provisions were recently amended, where we studied that whenever we are going and filing the appeal, let's say to the first level of authority, that is appellate authority, 100% of whatever you have agreed, okay, 100% of whatever you have admitted you have to pay, plus 10% only of the tax, right? 10% only of the tax due that you have to pay, okay, only of the tax due, and that was restricted to 20 crore or 40 crore. Remember, 20 crore for CGST and 40 crore for IGST. Okay, so now here we are not accepting anything because they haven't given any information. So my demand of tax is 1 crore, penalty is 10 crore, and interest is 25 lakh. So can I say I have not admitted anything? If I have not admitted anything, then zero will be paid. And whatever I have not admitted of that tax 10% will be paid. So 1 crore multiplied by 10% will give me 10 lakh. Okay, and I have to restrict it to 20 crore or 40 crore. But anyway, my amount is very less. So can I say my pre-deposit amount will be rupees 10 lakh only? So C will be the correct answer. Yes, please remember, whenever you are not admitting that amount, of that unadmitted amount, you just have to take 10% of the tax due. Yes. Okay. Then, in case where the tax has been wrongly collected by the company from the recipient, then the company shall pay such amount to the government. This we have already discussed. And the last one, in case of special audit being conducted in the state of Madhya Pradesh. So, special audit we discussed about section number 66. Now, they are asking about the remuneration, etc. So, can we say all the remuneration to the chartered accountant, all the expenses, everything will be borne by the commissioner? Yes. Is payable by the company? No. It is payable by the company? No. Is payable by the commissioner, but expenses will be reimbursed by the company? No. Expenses of the examination and audit of records, including remuneration, shall be paid by the commissioner. Yes, because this was a special audit which was conducted by the commissioner, so that person is going to pay it, right? Simple, everyone, manageable. Multiple chapters got tested here, na? Especially the small chapters got tested here. Manageable. Can we go ahead to the next one, everyone? Let's read the third case scenario. Can we start with it? Yes. Chalo, I'm reading the third case scenario. Let's do it. Super Level Limited is engaged in manufacturing of taxable electronic goods. Its retail showroom is located at Mumbai, as well as 2 manufacturing units located in Mumbai and Nagpur are registered under the same GSTIN under GST in the state of Maharashtra. Okay, because both of them are situated in Maharashtra, so it is not mandatory to take a separate registration for the other 2 units. Very good. The company has a manufacturing unit in Bangalore registered under GST in the state of Karnataka, and another retail showroom located in Ahmedabad registered under GST in the state of Gujarat. So apart from Maharashtra, it is Karnataka and Gujarat. The company has provided the following details with regard for the month of October. Okay, whatever information is given is for the month of October. Now, retail showroom at Mumbai. Can you see this? Sale of taxable goods from Mumbai showroom, Mumbai unit, Nagpur unit. This is the sales. Purchase of taxable raw material. Payment made for security. Interest received on fixed deposit. This we know that this is the exempt supply. Sale of security. Sale of security is also, can we say this is neither supply of goods nor supply of services, securities? Yes. Okay. Then sale of agricultural land in the vicinity of the manufacturing plant. Can we say even this is this is considered as not a supply? Yes. Land and immovable property. We have already studied in schedule number 3. Then sale of old factory building which was not used anymore. Similarly, even this is not a supply. Then following additional information is provided by the company. In case of Mumbai unit, payment for security services for the month of October has been made to Safe and Secure Solutions Private Limited, a company not registered under GST. Okay, for security services, first we have made the payment to Safe and Secure Solutions Private Limited, a company which is not registered under GST. So for security services, just some time back we had revised the provision that when the supply is done by a person other than body corporate to a registered person other than composition scheme, then in that case RCM will be applicable. But here the supply has been done by an unregistered person to me. Okay, and then similarly for Nagpur unit, the payment for security services for the month of October has been made to Vigilant Solutions, a partnership firm registered under body corporate. So this is again other than body corporate. Other than body corporate has provided the services to a body corporate. Right? We are a company. Yes, we are a company. Okay. So here RCM will be applicable. Right? Now see what are they telling us here. October being the Diwali month, the retail showroom at Mumbai has sold combo packs of food processors and electric irons. Combo of food processors and electric iron at a discounted rate to boost its sales. Each combo pack has been sold at a price of 6,000 rupees. Out of the total sales of retail showroom reported in the table above, retail showroom total sales is of 6,50,000. Okay, so out of that 1,50,000 is on account of such combo packs. Can we say combo pack sales is nothing but a mixed supply? We are doing a mixed supply of food processor and electric iron, and these are not generally sold together. So can we say highest rate will be applicable on this 1,50,000 because it is a mixed supply? And for this purpose, electric irons were specially procured by the retail showroom from the market, since the company does not manufacture the same. Few electric irons have been sold individually also. Okay. And total sales of such electric irons is 36,000, which is included in the sales reported in the table above. Okay. So basically in this 6,50,000, we have got some combo sales of 1,50,000. Can you see this? There are some combo sales of 1,50,000. Then there is some iron sales of 36,000 and balance is normal sales. Right? Okay. Now, this was for the month of October, right? This was for the month of October. Okay. Then Nagpur unit issued credit note for 1,80,000 to its buyers in the month of November towards discount on account of making timely payment, and the buyers were aware of such discount at the time of sale in October. Okay, so basically sale was done in the month of October, for which they did the timely payment. So now they are getting a discount, for which we are issuing a credit note for 1,80,000. Can we say if the buyer was aware, if we were aware about that discount, then in that case we can issue the credit note. And all the buyers have also reversed the proportionate ITC on receiving the discount, except one buyer who received credit note for 23,000. So this we had studied in value of supply chapter, section number 15.3, exclusions. That is, discount will be excluded from the value provided the recipient have reversed the proportionate amount of ITC. So can we say 1,80,000 will be reversed, but 23,000 will not be reversed because one of the person did not reverse the ITC on this. Okay, and Nagpur unit reported sales of 16 lakhs in the month of November. Okay, the above table that they had given, that was for the month of October. This table is for the month of November. Now, further in the month of December, Mumbai unit received 3,15,000 as interest on delayed payment of sale consideration from its buyers. GST is separately recovered on the same if applicable. The interest pertains to the sales made in the month of October, and Mumbai unit reported sales of 12 lakh in the month of December. So can we say the Mumbai unit has received some interest on delayed payment? So interest on delayed payment, whenever we are receiving it, at that time its time of supply will become applicable. Do you recollect time of supply chapter? Time of supply, we had done section number 12 and section number 13 for goods as well as services. And the last subsection in that section 12.6 and 13.6 was talking about interest on delayed payment. Yes, so can we say this interest on delayed payment? The sale was done in the month of October, but the interest was received in the month of December. So can we say this interest will be taxable, but in the month of December only? Yes, okay. Then stock valued at 7,30,000 was transferred from Mumbai unit to Nagpur unit. Can we say this is not considered as a supply because it is transferred from one unit to another unit, and both of them are not distinct persons because they are not separately registered under GST. It is considered as one single person only. And further stock valued at 6,80,000 was also transferred from Bangalore to Ahmedabad. When you're transferring it from Bangalore to Ahmedabad, at that time it will be considered as a supply because these two are considered as distinct persons. And the same was billed at 5 lakh rupees. Okay. Then last, on 23rd October, a truck carrying the finished goods of Mumbai unit was intercepted, stopped by the proper officer, and the proper officer was of the view that e-way bill was not prepared in accordance with the provisions of the GST law, and the truck along with the goods was seized by the proper officer under section 129. The seizure order was passed on 23rd October and the same was communicated to us. So we came to know about our seizure order on 24th of October. So if we want to go for an appeal etc. later, can we say the time periods is going to start from 24th of October? Yes. Now, for this case scenario, the applicable rate of GST on electric irons procured from the market, electric irons, the rate is 18% and for all the other goods, it is 12%. So can we say here, when electric irons were sold, rate of GST will be 18%. In combo also, food processor and electric irons was sold. So can we say it will be taxed at the highest rate, that is 18%. And balance goods will be taxed at the rate of 12%. Yes, okay. Then after that, all amounts mentioned in the case scenario are exclusive of taxes wherever applicable. Now you have to give the answer of the below case scenarios. Can we try everyone? Let's give it a try. Now, the value of taxable supply made by Nagpur unit during the month of October. Taxable supply during October and its gross tax liability without considering ITC for the month of November. Careful, taxable supply for the month of October and gross liability for the month of November. This is what you need to calculate. Let's calculate everyone. Nagpur unit taxable supply. Nagpur unit taxable supply. Let's see. Nagpur unit taxable supply. Can we say this is only one, that is 13,50,000? Yes, it will be 13,50,000. That is my taxable supply. So 13,50,000 will be the answer for this. And then gross liability for the month of November. The table was for the month of October. So leave the table now. Come to the other information that is given. Nagpur. Yeah, here it is. Can you see this? Nagpur unit. Its sales for the month of November was 16 lakhs. But do you recollect that credit note? So from 16 lakhs, we will get a deduction of 1,80,000 for credit note. But we will not get the deduction of 23,000 because the buyer had not reversed the ITC. Yes, let's do the calculation. 16 lakhs minus 1,80,000 plus 23,000. Can I say my sales will be 14,43,000? On that, the tax liability, normal tax liability is at the rate of 12% multiplied by 12%. I am getting my tax liability as 173,160. 173, 160. See the answers, everyone. Can we say this is the correct answer? C is the correct answer. Manageable? Yes. Okay. Then the next one. Please be careful with the months. Second one. The value of taxable supply made by Mumbai unit during the month of October. Okay. Taxable supply for October and gross liability for the month of December. So first see the tax liability. How much is the tax liability for the month of October for Mumbai unit? Can we say it is 12,50,000 year? This will not come. This will not come because it is not a supply. Yes. And Mumbai had only done that. Achha, this was the retail showroom at Mumbai. We are just doing it for the Mumbai unit. Here it is. Mumbai unit. Mumbai unit. Check the fourth point. This 3,15,000 we had already decided that it will be taxable. It will be taxable in the month of December. Stock transfer will not be taxable. This we have already discussed because they are not distinct persons. So fifth is also not taxable. That's it. So can we say for Mumbai unit, the gross, the taxable supply will be 12,50,000. That is my answer. 12,50,000 is the value of taxable supply. This one. So at least I know that this is the answer, but let's check the gross liability for December also. How much is the gross liability for December? For December, the above table was for October, so leave it. Mumbai unit gross liability. Mumbai unit gross liability for December. Here it is. Can we start the calculation? So can we say gross sales for December is 12 lakhs. Take 12 lakh in your calci. Plus one more thing will be taxable in December, that is 3,15,000. And they are telling they are going to collect the GST separately. So 3,15,000 is excluding GST. So can I say my sales is coming to 15,15,000 multiplied by 12%. 1,81,100 will be my tax liability. Yes, it is matching. So my answer is D. Just be careful with the month. Just be careful with the month. Chalo, let's go ahead. Now, which of the following statement is correct with regard to gross tax liability for outward supply made by retail showroom at Mumbai? Gross tax liability for retail showroom at Mumbai. Okay, retail showroom at Mumbai. Now, they have not given the month. So, see from the answer. In the answer, they are talking about which month? October. So, now let's see the gross tax liability for retail showroom in Mumbai. Okay, here it is. Retail showroom in Mumbai for October. Retail showroom in Mumbai for October. Can we say 6,50,000? And we have done the calculations here separately. So, on 1,50,000, 18% will be applicable. So, 27,000 is one tax liability on this 27,000. Acha, then on this 36,000, again 18% is the tax liability, that is 6,480. Yes, and then on the balance means 6,50,000 minus 1,50,000 minus 36,000. Balance sales is how much? Balance sales is equal to 4,64,000. On that 12% will be applicable. So my tax liability is coming to 89,160, everyone. Total. This one is coming to 55,680. So add all the three. 55,680 plus 27,000 plus 6,480. All these three. So if you add all these three, you will get 89,160. Are you getting it? This was that combo mix supply. 89,160 is the correct answer. Yes, here it is. A should be the correct answer. Correct. Chalo, then let's go ahead. Let's go ahead. Next one. Value of exempt supply provided by Nagpur unit and Mumbai unit. Exempt supply during October. Nagpur unit and Mumbai unit. Let's go and check. Exempt supply. Nagpur unit and Mumbai unit. Okay. So can we say yes, this interest is exempted. So 1,08,000 and 0. Achha, sale of securities, etc. These are not exempted. These are considered as not a supply. Right? So there is no other exempt supply. So for Nagpur it is 1,08,000 and for Mumbai it is 0. See the answers. For Nagpur it is 1,08,000 and Mumbai it is 0. A is the correct answer. Yes. Okay, then after that, then let's go to the next one. Value of exempt supply provided by Nagpur unit and Mumbai unit for the purpose of reversing input tax credit under rule 4243 for the month of October. Oh God, means we need to find out that E by F, we need to calculate the E, right? For rule number 4243 for Nagpur unit. Okay, let's do it. Chalo. Now, can we say this is anyway my taxable portion. Now, what about interest? What about this interest? Do you recollect for the purpose of rule 4243 for other than banks, this interest was considered as a taxable supply. So this was included in F, but this was not included in E. Do you recollect this? Yes, exempt supply will exclude this interest. So this will not come in our E. Forget about it. Acha, sale of securities. For sale of securities, do you recollect 1% of the selling price was considered as E? So 4,500 will be considered as E. Yes. For agricultural land, do you recollect stamp duty value was taken? So stamp duty was paid on 1 crore 85 lakhs. So can we say 1 crore 85 lakhs is your stamp duty value? So this will be considered as my E. This 4,500 will be considered as my E. Similarly, for this old factory building, stamp duty was paid on 75 lakhs. So can we say 75 lakh will be considered as E? That's it. Yes. So for Mumbai unit, it will be 75 lakhs plus 4,500. 75 lakh plus 4,500. Yes. And for Nagpur, it will be only this 1 crore 85 lakhs. Which is the correct answer? 75 lakh, 4,500 and 1 crore 85 lakhs. Can we say this is the correct answer? B is the correct answer, everyone. Can you see this? B is the correct answer. Ma'am, why? Can you please show the working again? Yes, see the working, everyone. See the working. As per rule 4243, interest, even though it is exempted, but it is considered as a taxable turnover, it will be excluded from E, but it was included in F. For sale of securities, we were taking 1% of the selling price. So we took 4,500 as E. For immovable property, it was the stamp duty value is required to be considered for E. So stamp duty is paid on 1 crore 85. So can we say this is the stamp duty value? Simple, manageable, very good provision, very good point. Yes. Okay. Then after that, the next one, last one. The Mumbai unit wishes to file an appeal against the order passed by the proper officer authorizing the seizure of the truck and goods transported therein. Which of the following statement is correct? So that order was passed by whom? That order was passed, seizure order was passed by the proper officer, right? That is by the adjudicating authority. So we can go and file an appeal to the appellate authority. If we are going and filing an appeal, we can go and file it within a time period of 3 months from the date when we came to know about the order. So it was communicated to us on 24th October. So 24th October plus 3 months, November, December, January. So can we say maximum till 24th of January? Till 24th of January of the next year, you can go and file the appeal. Check which is the correct answer. Appellate authority on or before 24th January of the next calendar year. You cannot go to revisional authority. You cannot go directly to the High Court. And there are no remedy available. That is again wrong. So the correct answer will be C. Manageable, everyone. Simple question. Yes. Understandable at least. Okay. Done. Let's go to the next one. Okay, so let's go to the next one. Case scenario 4. I am reading this case scenario, everyone. BCM Limited, a public limited company called as a company registered in Uttar Pradesh, is engaged in manufacturing of product A, B and C. Product A is exempt under GST while B and C are taxable under GST. Moreover, company is engaged in making cross-border supplies of taxable product P procured domestically from local manufacturers. Further, it is engaged in supplying consultancy services. Okay. So, 4 products it is engaged into, and plus it is doing consultancy services. Following information is provided by the company for the month of January. The company manufactured product A and exported 1000 units of the same worth 8 lakh to Germany. Okay, so product A it manufactured and exported. So product A, even if it is an exempt product, but when you are exporting it, it will be still considered as a taxable supply, a zero rated supply. Okay, then the company supplied product C of value 35 lakhs to Dhriti, Noida, Uttar Pradesh, including product C worth 10 lakhs supplied to SEZ unit of Dhriti Limited in Noida. So supplies to SEZ, can we say even this will be considered as zero rated supply? Yes. Then the company imported specialized heavy textile machinery from China on 2nd January with CIF value of 55 lakhs and FOB value of 53 lakhs. Okay, FOB was 53, then you added insurance and freight, and then it became 55 lakh. It sold the said machinery for 62 lakhs in high C to Swadeshi Textile Limited. While clearing the goods for home consumption, Swadeshi Textiles Limited filed the bill of entry. It filed the bill of entry for rupees 63 lakhs. Okay. After clearing the machinery for home consumption, Swadeshi Corporation sold the machinery to Gargi Industries for 70 lakh rupees. Fine. So basically we imported something. After importing it, we sold it in high seas to Swadeshi Textiles. Swadeshi Textiles then filed the bill of entry. Can we say in case of high seas sales, the event of taxation will be at the time of filing the bill of entry? Yes, because we had studied in case of high seas sales, the tax liability is going to arise only when the goods become the mass of the goods of the country, that is at the time of filing the bill of entry. Okay, and after that it is sold to Gargi Industries for 70 lakhs. Now, the company purchased product Z for rupees 10 lakhs from Prism Corporation, Japan on 5th January and directly routed product Z for supply to Ginseng Corporation, China for 1 crore 20 lakhs or maybe 12 lakhs, maybe there is a typo error here, on 15th of January. Okay. So now can we say we purchased it from Japan and we sold it to China? It is out and out supply. Yes. So can we say this is not a supply at all as per schedule number 3? Then the company purchased product D as a merchant exporter taxable at a concessional rate of 0.1% for 7 lakh. A wider tax invoice dated 1st January from Shravan Limited. Okay. Do you recollect that manufacturer exporter and the merchant exporter? So manufacturer exporter can supply to merchant exporter at 0.1% of GST and the invoice dated was 1st of January. Product D was removed from on 2nd of January from the premises of Shravan Limited, supplied directly to a registered warehouse. Shravan Limited has procured inputs. So, okay, manufacturer exporter has purchased inputs X and Y worth 1,60,000 taxable at 18% for manufacturing product D. Product D was exported by the company to Gates Inc. So, ultimately we exported it to USA. FOB value of product D exported is 8,40,000. Okay, so finally this was exported at 8,40,000. Now, the company also supplied consultancy services to its subsidiary XYZ Inc. located, subsidiary company, XYZ Inc. means it is already incorporated outside India and registered in Florida, USA. It gave some consultancy services. So, can we say this will be considered as export of services? Right, this will be considered as export of services because here when we are supplying the service to XYZ Inc., this is not merely my establishment of distinct person. This is not merely my establishment of distinct person because that other person is registered specifically in the other country. Okay, and it has also provided these consultancy services to its branch office located in San Diego, USA for rupees 12 lakh and 24 lakh. Value of supply is determined in both the cases as per rule number 28. Can we say it has done 2 exports? One is to its subsidiary company and another one is to its branch. Can we say only first one will be considered as export and second one will not be considered as an export? Because when we are supplying it to our branch means it is our distinct person only. If it is my distinct person only, then can we say it is merely an establishment of distinct person? And do you recollect the conditions of export of services? It should not be merely an establishment of distinct person. So this will not be considered as an export, right? This will not be considered as an export. And plus, because this is not considered as an export, do you recollect we had studied it in exemptions chapter, last page in our textbook. In exemptions chapter, we had studied about some IGST exemptions. Yes, so there we had studied that if we are doing any supply of services, by an establishment in India to its establishment outside India, which are considered as establishment of distinct persons, that was considered as exempted. If you want, I can just show it to you also once in our textbook, so that you will also come to know where is it written. I'll just go to the exemptions chapter. One second. If you have my textbook or any other faculty's textbook, please come to exemptions chapter, and in exemptions chapter towards the end they will give you the IGST exemptions. Please come to that. Yes, here it is. Can you see this IGST exemptions which are given here? Here I will show it to you. Can you see this point? This is my 4th edition revised book. Can you see this point? Services supplied by establishment of a person in India to any establishment of that person outside India, my branch outside India, which are treated as establishment of distinct person, provided the place of supply of the service is outside India. That is the supplier, location of supplier is in India, location of recipient is outside India, place of supply is also outside India. Okay, but they are merely establishment of distinct persons. So this will not be considered as an export, but this is an exempt supply. Okay, this is considered as an exempt supply. Please try to understand this. This is very, very important. Okay. This will be considered as an exempt supply. 24 lakh will be considered as exempt, and 12 lakh will be considered as export, taxable supply, zero rated supply. Now, then the company sold a future derivative contract at NSE, which was due in the month of Jan for 20 lakh. So can we say this is securities? If it is securities, it is neither supply of goods nor supply of services, and said contract has no delivery option. Okay, no delivery option, so it cannot be considered as goods. Okay, now rates of GST is 6%, 12%. All the figures given above are exclusive of GST wherever applicable. Amounts given in respect of import-export in rupees have been derived after the conversion thereof, though transactions were undertaken in convertible foreign currency. Can we say even this is one of the important condition for export? That is, the consideration should be received in convertible foreign currency. Yes, BCM Limited makes zero rated supplies under bond or LUT. Okay, wherever possible it is doing under bond or LUT, and it wishes to avail all the concessions, benefit, exemptions, etc. Chalo, now let's start with the MCQs. First one, company can take ITC of dash on product D procured by it as a merchant exporter. So do you recollect merchant exporter was procuring it from manufacturer exporter at 0.1%? Yes. What was the value of the goods procured? Where is it given? Yes, here it is. We have purchased it for 7 lakh rupees. For 7 lakh. So can we say 7 lakh multiplied by 0.1%? 7 lakh multiplied by 0.1%. That will give me how much? That will give me rupees 700. Yes, that will give me rupees 700. So ITC will be available. ITC will be available for 700 rupees. Yes. Where are we registered? We are registered in Uttar Pradesh. And where is the supplier registered? Supplier was registered in Maharashtra. So can we say this is two different states? So IGST credit will be available to me. So 700 of IGST credit will be available. Yes. Next one, if the company does not export product D procured by it as a merchant exporter. So this we had studied it while doing our merchant export provisions, that whenever manufacturer exporter is supplying it to the merchant exporter, okay, merchant exporter has to export it outside India within a time period of 90 days from the date of invoice. That is, whenever the manufacturer exporter is going to do the invoice to the merchant exporter, from that day within 90 days it should be exported outside India. Okay, 90 days from the date of invoice. So 90 days. Let's check when did we receive the invoice. What was the invoice date? So invoice was dated 1st of January. So 1st of January plus 90 days. Let's do the calculation. 1st of January plus 90 days. Okay, plus 90 days means, can we say 30 days of Jan are gone? Okay, 28 days of February is gone. 31 days of March is gone. Jan, Feb, March. So how many days are gone till here? Can we say 89 days are gone? One more day is left. So can we say 1st day of April? So export should be done maximum till 1st of April. Yes. Okay. If you want, I will show this also in our book, everyone. This we have it in our import and export chapter under GST. Maybe I will search it with the name 0.1%. Wait. Here it is. Before the refunds chapter, 1 second, I'll just show it to you. Merchant export 0.1%. Can you see this? Then he will be eligible to take the credit. This also we had discussed. Yes, and then it should be exported within a period of 90 days from the date of issue of tax invoice. Okay, if you are using my textbook, you will find it under import and export under GST. Chalo. Then compute the value of zero rated supply made by the company in the month of January. Zero rated supply means all the exports plus the SEZ, everything you have to calculate. So can take your calci, everyone. Let's do the calculation. So can we say first we exported this 8 lakh rupees. Take 8 lakh rupees in your calci. Then we supplied it to SEZ worth rupees 10 lakh. Even that will be included here. Right. Then after that, this high seas sale, that is not my export. Okay, then out and out will also not be considered as an export. Then yes, here when we purchase those goods from Shravan Limited as a manufacturer exporter, then we exported it to USA, and value of export was 8,40,000. Add 8,40,000 there. Yes, then after that, consultancy services. In this, only the first one was considered as an export. That is, only 12 lakh will be considered as an export. That is 38,40,000. Yes, 38,40,000 should be the correct answer. Yes, 38,40,000 should be the correct answer. Then after that, assessable value of machinery cleared for home consumption is assessable value in cleared for home consumption by Swadeshi Textiles. So in case of high seals, they were telling us that tax liability will arise at the time of filing the bill of entry. And at the time of filing the bill of entry, what is the value given here? Value given is 63 lakh rupees. Yes. Then after that, the next one, value of exempt supply made by the company in January for the purpose of reversal of ITC. Okay, E we have to find out. So can we say one E we already know, that is this export done to its branch. So that is one of your exempt supply. And then can we say this securities. Can we say, so 1% of 20 lakhs. So 20,000. So 24 lakh plus 20,000, at least this is my exempt supply. Rest, this is my out and out supply. This was my taxable supply. This was my high seas supply. Yes, rest everything was taxable. So only two will come under exempt. One is this 24 lakh. Ma'am, why is this exempt? Because this was not considered as export, and then we studied it in exemptions chapter that it is exempted. Right, so 24 lakh plus 1%. Do you recollect, in case of value of securities for the purpose of rule 42-43, we take 1%. So 24 lakh 20,000 will be the correct answer. Then after that, okay, done. Manageable till here? Yes. Okay, let's go to the next one. Chalo, I'm reading the next case scenario, everyone here. Vision Weave Private Limited manufactures taxable textile products. It has two manufacturing units in Kanpur and Agra, both in Uttar Pradesh, a manufacturing unit in Punjab, and a retail showroom in Lucknow, Uttar Pradesh, and another retail showroom in Delhi. So Kanpur and Agra, both of them fall under Uttar Pradesh itself. Punjab is separate, and a retail showroom in Lucknow, Uttar Pradesh. Okay. And another retail showroom in Delhi. So 1, 2, 3, 4, 5. 5 places we are having our offices, but 3 of them are situated within the same state. The company has the policy of obtaining single registration for all the place of businesses located in a state. Okay. So Kanpur, Agra and Lucknow will be registered under a single GST number. The company has provided the following details with regard to the month of January. Amount is in rupees. Now see what are they telling. Retail showroom at Lucknow, Kanpur unit, Agra unit, sale of taxable goods, purchase of taxable raw material, payment made for security personnel services. We have done this similar kind of adjustment today. Freight paid to Fleet Wave Cargo and unregistered GTA. Oh, unregistered GTA. So we know that RCM will be applicable here. Yes, then freight paid to horse cart puller. Horse cart puller is totally exempted from GST. Loading and unloading charges paid to laborer, payment to Swift Ride Services Private Limited towards rental of 4 Innova cars AC hired for senior officers of manufacturing unit, renting of motor vehicle. RCM we had studied renting of motor vehicle when it is done by other than body corporate to body corporate, then only RCM will become applicable. But here this person is a body corporate, so RCM provisions are not applicable. Here it is done by a body corporate. Yes, so your FCM will be applicable. Like for Swift Ride Services, FCM will be applicable. For us anyway, it is an inward supply. Then rent paid to Lucknow Municipal Corporation. Lucknow Municipal Corporation is a local authority. So renting of immovable property by government to any business entity, was taxable under RCM. So your RCM is going to be there for us. Then interest received on fixed deposits, this is exempted. Fees paid to state government for certification relating to safety of workers, and such certification is a statutory requirement. So this we had studied in exemption chapter. This will be exempted. Sale of securities is neither supply of goods nor supply of services. Same for agricultural land, it is falling under schedule number 3. It is not a supply. And old factory, again it is not a supply. Now, following additional information is provided by the company. In case of Kanpur unit, payment made for security services has been made to Guardian Shield Security Private Limited, a company not registered under GST. Company not registered under GST. For also your, can we say RCM provisions will not become applicable? Your RCM provisions will not become applicable because RCM provisions in case of security services will be applicable only when the services are provided by a person other than body corporate to a registered person. Yes. And for Agra unit, the payment for security services for the month of January has been made to Peacekeeper Security Solutions, a partnership firm. So Peacekeepers is a partnership firm. So this is a person other than body corporate. Other than body corporate is providing services to a body corporate. So for this Agra unit, RCM will be applicable. For Agra unit, RCM will be applicable. So for this RCM will be applicable. For this RCM will not apply. Here RCM will be applicable, but your RCM will not apply. Acha, GTA anyway we know that RCM will be applicable. Right? Then after that, see what are they telling? Fleet Wave Cargo, that same unregistered GTA, has issued the invoice for GTA services on 5th Jan on Kanpur unit and Agra unit. But can we say it is unregistered? So we know that this is services, and that too in case of services, this is RCM. So we have studied in the time of supply chapter that if the service is provided by an unregistered supplier, then in case of unregistered supplier supplying services to a registered person will have to issue an invoice on himself within a time period of 30 days from the date of receipt of goods or services. Yes. Now, while Kanpur unit made the payment on 27th Jan, Agra unit made the payment on 28th March. Tax invoices were issued by Kanpur unit and Agra unit on 1st Feb and 27th Jan respectively. Okay, so what will be the time of supply? Time of supply of services in case of RCM where the supplier is unregistered will be date of payment or issue of invoice. Invoice by whom? Issue of invoice by the recipient, whichever is earlier. So for Kanpur unit, what was the date of payment? It was 27th Jan 27, and Kanpur issued the invoice on 1st Feb. So here whichever is earlier will be 27th of Jan. And for Agra unit, when did the Agra unit do the payment? It did the payment on 28th March 28, and it issued the invoice on 29th Jan 29. So can we say whichever is earlier will be Jan 29. That will be the time of supply if at all that is required. Then stock valued at 7,30,000 was transferred from Kanpur unit to Agra unit. So this is not considered as a supply because we all are registered within the same GST number, so we are not distinct persons. Further, stock valued at 6,80,000 was also transferred from Punjab unit to Delhi. This will be considered, this is transferred at 5 lakh. This will be considered as a supply because state changes. So that person will be considered as my distinct person. All the amounts are exclusive of GST. Wherever applicable, Agra manufacturing unit and retail showroom located in Delhi are eligible for full ITC. Maybe this has some relevance. Based on the facts, please give the most appropriate answer. First one, the aggregate value of inward supplies which are exempt from GST. Inward supplies exempt from GST received by Kanpur, Agra and Lucknow retail showroom will be how much? Let's see. Exempt inward supply. So this is exempt. This 5,000 is exempt. Yes. Acha, this is exempt, but this is not my inward supply. This is my outward supply for which I have received the interest. So this is outward supply. They are asking only about inward supply. This is my inward supply. This was exempted. So 15,000 will come. Sale of securities, please don't call it as an exempt supply. It is neither supply of goods nor supply of services, and these two are schedule 3, that is non-supply. So basically this 15,000, 30,000 and this 5,000, 35,000 should be the correct answer. 35,000 should be the correct answer. Then, which of the following transactions undertaken by Kanpur and Agra falls under schedule 3? So agricultural land, yes, it falls under schedule 3. Old factory building, yes, it falls under schedule 3. Sale of securities does not fall under schedule 3 because sale of securities is neither supply of goods nor supply of services. And interest received is exempted. It does not fall under schedule 3. So only 1 and 2. So A should be my correct answer. Then the value of inward supplies received by Agra and Kanpur units and retail showroom during the month of Jan on which GST is payable under RCM. Okay, inward supply RCM will be how much? Can we say for Kanpur? For Kanpur it will be this 35,000. For Agra it will be this 1,50,000. And for this retail showroom, it will be this 3,20,000. So 3,20,000, 35,000 and 1,50,000. 3,20,000, 35,000 and 1,50,000. Can we say D is the correct answer? Yes. Okay, then after that, let's go to the next one. The time of supply. Wow, we have already found out the time of supply. What will be the time of supply? It will be for Kanpur 27 Jan and Agra 29 Jan. Kanpur 27, Agra 29. C is the correct answer. Then the value of supply made from Kanpur unit to Agra unit and from Punjab to retail showroom at Delhi during Jan is. Kanpur to Agra is not a supply. And Punjab to Delhi, it will be 5 lakh. Had they billed it at 5 lakh? Yes, they had billed it at 5 lakh, so that will be value because they had told that they are eligible for full ITC. Do you recollect this? We had studied in our valuation rule that if the recipient is eligible for full ITC, then in that case we can take the invoice amount. So 5 lakh will be considered there. Yes. Okay, done. Manageable everyone, simple now? Yes. Okay, let's go ahead everyone to the next question. Okay, I'm starting with the next case scenario. Case scenario number 6. Let's read it. Data Limited commenced business of trading of taxable goods in the state of Assam on 1st April. Aggregate turnover of the company crossed rupees 20 lakhs on 31st May and 40 lakhs on 15th of July. The company made the application for registration on 25th of July and the certificate was granted on 30th July. The company had opted to file the return on monthly basis under the regular scheme. The company was exclusively engaged in supply of taxable goods only. Okay, so as per the registration procedures, if we are engaged in taxable supply of goods only, then 40 lakh limit will be applicable for all the states except for those 10 states. Yes, that is your MMNT state, SAM state and STP state. Do you recollect that MMNT is Manipur, Mizoram, Nagaland, Tripura. SAM stands for Sikkim, Arunachal Pradesh and Meghalaya. And STP there stands for Telangana, Puducherry. Do you recollect that? Yes. So basically for MMNT, that is Manipur, Mizoram, Nagaland, Tripura. SAM stands for Sikkim, Arunachal Pradesh, Meghalaya, right? And then your Puducherry, Uttarakhand and Telangana. For these, except for these states, yes, except for these 10 states, you can take the benefit of 40 lakh rupees for the purpose of registration. This is what we had already studied. So can we say this person becomes liable for registration only on 15th of July? Yes. And has it applied within a time period of 30 days? Yes, it has applied within a time period of 30 days. If it has applied within a time period of 30 days, can we say effective date of registration will be 15th of July? That is the date when the person became eligible for registration. Yes. Okay. Then the company had following ITC lying in the books related to input and input services on different dates. Inputs. Okay. So this we had studied in section number 18. So can we say this person became liable on 15th of July? So whatever inputs are there as on 14th of July, only inputs, that credit will be available provided it was purchased during the last 1 year. Yes. Okay, then after that, during the month of October, the company has installed solar panel at its office premises. Details regarding the installation of solar panel were as follows. List price is this much. Additional information not adjusted. Trade discount is 3%. Okay, so minus 3%. Local taxes paid is 15,000. So this will be added to the value. And freight, etc. as a condition of sale will be 12,000. So this will be my total value of solar panel. Now, apart from above, Data Limited received 2 lakhs as advance payment on 2nd October from Mr. Prem, a customer, with respect to taxable supply of goods of 10 lakh. So, we have already studied in time of supply that for goods forward charge mechanism, if you are receiving any advance payment, time of supply will not arise at the time of receipt of advance payment. Now, the company removed the goods on 9th October and issued the invoice on 10th of October. So can we say the last date of issuing the invoice will be on or before the date of removal? Last date for issuing the invoice in case of goods is on or before the date of removal, that is 9th of October. But we issued the invoice on 10th October. So can we say we delayed in issuing the invoice? If we delayed in issuing the invoice, then the time of supply will be the last date when the invoice should have been issued. So can we say the time of supply in this case will be 9th October? Yes. Okay. The goods were received by Mr. Prem on 11th October and Prem had made the balance payment of 8 lakhs on 20th October through NEFT. Yes, so first payment, basically advance payment. For advance payment, the date of payment is totally irrelevant. So the last date of issuing the invoice is 9th of October, that will be the time of supply. And for the balance payment, it will be that last date of issuing the invoice or the date of payment, whichever is earlier. So whichever is earlier will be 9th October. So can we say for both the transaction, the time of supply will be 9th of October only? Okay, then after that, next one. In addition to above, due to oversight, the company failed to disclose a self-assessed outward supply of 2 lakh rupees while filing the GSTR 3B for the month of August. Balance of ITC available in the electronic credit ledger was 10,000 rupees each, which remains till the date of deposit of tax. Company filed the return for the month of August on the due date, that is 20th September. The company disclosed this supply in the return for the month of January. Okay, so this was undisclosed earlier and now they have disclosed it in the month of January and paid the net tax after set off of that ITC available with interest in form GSTR 3B filed on 18th February. Okay, for January we are going to file it on 18th of February. The proper officer issued show cause notice on 25th Feb demanding the penalty for late deposit of tax which has escaped supply. This thing. Note, all the amounts given are exclusive of taxes wherever applicable. All supplies are intrastate and chargeable to GST at 99% based on the facts. Then you have to give the answer. Okay. Let's try one question. So first of all, it has received the registration certificate on 30 July. Amount of ITC available. So that we have already understood that amount of ITC available will be 15,000. That is 1 day prior to your effective date of registration. So 15,000 will be the ITC available. Then in relation to transaction with Mr. Prem, what will be the time of supply? So we have seen for both the transaction, it will be 9th of October. So 9th October for both the transactions. Then what is the total amount of penalty leviable under section 74A with respect to payment of tax on delayed disclosure of outward supply? So we had studied section number 74A11 which talks about penalty in two specific cases. One was non-payment of self-assessed tax and second one was tax collected but not deposited to the government. In that case, there was a penalty applicable, that is 10% of tax involved or rupees 10,000, whichever is higher. This was under CGST, only under CGST. Right? So what is the amount of penalty? Total amount of penalty they are asking under both the laws. So 10% of the tax involved. Now listen. How much was the supply? Undisclosed supply was 2 lakh rupees. Self-assessed tax. Self-assessed tax means the one that you had disclosed it in GSTR 1, but you failed to disclose it in GSTR 3B. So supply value is 2 lakh rupees. Tax on it will be 99%. We are doing only under CGST first. So can we say here my amount of tax involved is equal to rupees 18,000. So tax involved, amount of tax involved multiplied by 10%, that is 1800 rupees or 10,000, whichever is higher. So higher will give me 10,000, but that is only under CGST. So we'll do 20,000. A will be the correct answer. Then the next one, what is the effective date of registration? Already discussed, 15th of July. What is the value of inward supply of solar panel? So valuation you have to do as per section number 15. Take your calci. 5,50,000 minus the discount 3% plus the expenses 15,000 plus 12,000. That gives me 5,60,500. B will be the correct answer. And then amount of total interest to be paid nearest to rupee 1 under section 50 with respect to delayed disclosure. Okay, so we had studied in our payment of tax chapter in our interest under section 50 that whenever there is under reporting, at that time the second part of the interest will be applicable. That is, whatever was your tax amount, on that tax amount interest will be applicable at the rate of 18%, that too on the gross tax liability, that is before set off. Yes, and multiplied by, the period was very, very important here. When was it required to be disclosed? Can we say it was required to be disclosed in the month of August return? August return we filed it on 20th September. So interest is going to start from 20th September itself. Not from 21st September. It will start from 20th September itself. and it will go till the date of disclosure. When did we disclose it? We disclosed it in Jan return, that is which we filed on 18th of February. So it is going to go till 18th of February. Yes. Now, how much was the gross tax payable? How much was the gross tax payable? 2 lakh was the value of supply now. So on that 9%, that is 18,000 was the tax payable, multiplied by 18%, multiplied by number of days. So for September it will be how many days? 10 days. September, October 31 days, November 30 days, December 31 days, Jan 31 days and Feb 18 days, divided by 365. See how many number of days are happening. 151 days. So 18,000 multiplied by 18% multiplied by 151 divided by 365. That comes to how much? This gives me something around 1340 each under CGST. So can we say C is the correct answer? Yes, 1340 each. Okay, mistake area, please don't start the interest calculation from, please don't start it from 21st of September. If you start it from 21st of September, your answer will change. Yes, your answer will change. When you are doing the interest calculation under the first part, that is where there was a delay in filing the return etc, where you were paying the interest on the net tax, there you have to take from the next day after the due date. Okay, but when there was under reporting happening, when you were calculating the interest on gross tax, please take the interest from the due date itself. Okay, very, very important. This is one of the biggest mistake area. Okay, because if you take it from 21st of September, these number of days will come to 150 days and then you will see your answer is coming to D. Okay, but that is incorrect. So please be careful about it. Okay, chalo next. Okay, done. Manageable everyone, very nice case law. Yes, whichever point you're feeling it difficult, please mark it, okay, so that you can refer it, later. Yes. Chalo, let's go to the next one. Okay, let's start reading the next case scenario. Case scenario number 7. Mr. Pukhraj Gupta is registered supplier of goods and services under GST in the state of Karnataka. He provided the following details of outward transactions belonging to the current financial year, full financial year, taxable supply, exempted supply, interest received on unsecured loan not included in above. Interest received is also an exempted supply. Transfer goods to the residence of his brother, a well-known professional, to the residence of his brother, free of cost, but the open market value is 40,000. Okay, so we are transferring some goods to our brother. Brother is a related person, right? But he is a well-known professional. Means, can we say he is not a part of my family member because he is not dependent on me? So can we say we have transferred goods to some outsider only? And that too we have transferred it for free of cost. So can we say this zero value will be taken as the value of supply, right? Okay. Then during the month of April, Pukhraj Gupta provided the following outward supplies. Taxable supply of goods is 4 lakh. The above information was for the entire year. Now they have just given you the information for April. Taxable supply of goods. Then insurance agent service provided to Suraksha Insurance Company registered under GST. For us, this will not be taxable. This will be taxable for the company under RCM, insurance agent services. Then interest received for late payment from various customers. Yes, this will be taxable for us. We have provided recovery agent services to Vipul Limited, a trader of goods. Okay, this will be taxable. Recovery agent services when provided to banks, etc. At that time, RCM will come, not now. Then security service provided to Bachpan school up to higher secondary and unregistered person under GST at its annual day function held at Vallabh Convention Center being outside the school campus. It is outside the school campus. So we had studied when catering, security, etc. When this is security related services, when it is provided within the school premises up to type 1 educational institution, then it will be exempted. But here this will not be exempted. Here it will be taxable. Then renting of motor vehicle designed to carry passengers motor vehicle provided to MC Limited, wherein cost of fuel is included and they have not issued an invoice at the rate of 12% or 18%. Do you recollect that? So this is at the rate of 5%. So can we say body corporate has provided the services to other than body corporate? Body corporate has provided other than body corporate has provided the services to a body corporate. So this will be taxable, but under RCM. So this is not taxable for me. This will be taxable for MC Limited. Yes. Okay. Then after that, received with reference to a contract of rupees 5 lakh for supply of taxable goods awarded by public sector undertaking registered under section 51 in the state of Tamil Nadu. Goods were delivered in the state of Karnataka as per instruction of the PSU. So basically we are supplying Pukhraj. Okay, what was the name? Pukhraj only, right? Yes, Pukhraj. Pukhraj is out of Karnataka. He is providing, he has got an order from whom? He has got an order from a PSU. PSU is registered in Tamil Nadu and the goods were delivered in the state of Karnataka. Okay, goods were delivered in the state of Karnataka as per instruction of the PSU. So PSU basically told me to deliver the goods in Karnataka. Okay, now here the ICAI is assuming that if it is as per the instruction of PSU, means it is bill to ship to model. If it is bill to ship to model, do you recollect what was the place of supply for the first transaction? Place of supply for the first transaction will be the location of the recipient. Yes, so can we say location of supplier is in Karnataka and place of supply is in Tamil Nadu? Place of supply is in Tamil Nadu, so this will be considered as an interstate supply. If this is considered as interstate supply, then IGST will be applicable on this transaction, on this 1,50,000. Yes, yes, here your ICAI is assuming that this is a bill to ship to model. And because this is IGST and because this person is PSU and the contract value is 5 lakh, can we say even TDS will become applicable? Even TDS, because the contract value is exceeding rupees 2,50,000 and because they are considering this as interstate, TDS will be applicable here. Yes. Then further on 20th April, he hired Perfect Planner of Japan to plan and organize his events under a composite contract for all the events. First event was organized at Mumbai while second event was organized at Paris, France. Okay, so can we say as per place of supply, this is organization of event services and here one of the person is outside India. So can we say section 13 will become applicable where one of them is in India and one of them is situated outside India. And there I think section number 13 subsection 6 of IGST Act, we had studied that place of supply will be the location of such event. So location of one event is Mumbai and location of another event is Paris, France. And there we had studied that if multiple place of supplies are coming and even if one place of supply is in India, then the place of supply for the entire transaction will be India only. So can we say for all the contracts, the place of supply is going to be Mumbai only? Yes. Okay. Then in addition to above, proper officer has issued an order under GST dated 10th April and raised a demand of 33 lakhs. Tax is 20 lakhs, interest is 3 lakh, penalty is 10 lakh, 20 plus 3 plus 10, 33 lakhs in respect of an intrastate transaction. The above amounts are related to CGST only. Pukhraj Gupta admitted the tax demand of 5 lakh and interest demand of 2 lakh and disputed the remaining tax, interest and entire penalty. And he now wants to go and file an appeal. Maybe they are going to ask us about pre-deposit. If they are going to ask us about pre-deposit, can I say whatever I have admitted, 100% of that is 5 lakh plus 2 lakh, so 7 lakh plus 10% of the tax. Yes, only the tax. Total tax was 20, out of which I admitted 5. So 15 lakhs is pending. 15 lakh multiplied by 10%, that is 1.5 lakh. So total will be 8.5 lakh of pre-deposit will be required. Yes, then all the amounts are exclusive of GST. Let's give the answer. Now, what is the taxable value of supply for the month of April? Taxable value of supply for the month of April. So can we say this 4 lakh will come? This 10,000 will come. This 40,000 will come. Till here it is 4,50,000. Then plus this 50,000 will come 5 lakh. This will not come because this will go under RCM. Acha, this 1,50,000 will come. That is how much? 6,50,000. That's it. 6,50,000 is my correct answer. Yes. Then amount of TDS required to be deducted under section 51. Amount of TDS required to be deducted. So can we say here the amount of TDS required to be deducted? It was considered as an interstate supply. So IGST will be applicable. So can we say 2% on this 1,50,000, that is rupees 3,000. Yes, this is all based on the assumption that it is interstate. Okay, now listen everyone here. Another viewpoint. Okay, another viewpoint. Imagine if we did not consider this as bill to ship to, then can we say Pukhraj was located in Karnataka? Yes, PSU was located in Tamil Nadu. And the place of supply will be the place where the delivery of the goods get terminated. Delivery of the goods is getting terminated in Karnataka itself. Location of supplier and place of supply, if it is within the same state, then it is intrastate supply. Acha, and we had studied one of the exception in TDS chapter, that if LOS and POS is in the same state and if LOR is in another state, then it is practically not possible to deduct the TDS. So in that case, if we would have not considered this as a bill to ship to transaction, then this was considered as an intrastate supply, and if it was considered as intrastate supply, then TDS provisions was not applicable because LOR was in another state. Okay, in that case the answer would have been no TDS. Okay, but just because of these words, that is on the instruction of the PSU, at the instructions of the PSU, just because of this, because generally whenever your ICAI is using these words, means they are assuming that it is bill to ship to model. Okay. Acha, next, what is the maximum amount of pre-deposit under CGST? That is, so we have already calculated, it was 8.5 lakh. Then next, fourth one, before doing the fourth one, we can do the fifth one. What is the place of supply in respect of transaction with perfect planner? So can we say it was Mumbai for both the events? And what is the aggregate turnover for the current financial year under section 26? Aggregate turnover for the current financial year. So first table we will see. So can we say taxable supply we will take, exempt supply, this interest also we will take. If, in specific cases, example, when you are calculating aggregate turnover for composition scheme, etc., at that time you will exclude it. But while normally calculating your aggregate turnover, all your taxable supply as well as all your exempt supply will be included. So 1 crore 40 lakhs, 3 lakh 50,000 and 2 lakh. So 1 crore 45 lakh 50,000. 1 crore 45 lakh 50,000 will be the correct answer. Yes, I hope this much is manageable, everyone. Yes. Done. Fifth one, we just now discussed that Mumbai will be the place of supply for both the events. Simple. Yes. Okay, let's go to the next one. Chalo, I'm reading the next one, everyone. Let's start with case scenario number 8. Mrs. Farsights, herein referred as FS, is a proprietorship firm registered under GST in Chandigarh and deals in supply of variety of goods including electronic goods and maintenance thereof. FS furnishes the following information for the month of December. So basically, to be remembered here is, we are a proprietorship firm, we are not a body corporate, we are registered under GST, and this is the details given for the month of December. Okay, outward supplies is supply of goods to unregistered person in Chandigarh. Out of the aforesaid apply, goods worth 1 lakh were not liable to GST. However, FS inadvertently charged GST on such goods and collected the same. So we will have to pay GST on that to the government. So this is my taxable supply. Then supply of goods to registered suppliers located in Punjab. On this also I have to pay the tax. And repairs and maintenance services provided to unregistered. You are selling to registered or you are selling to unregistered, doesn't matter. If you yourself are registered, you have to collect the tax and pay it to the government. Okay, then inward supplies during this month of December is purchase of TV sets from registered suppliers. During unloading of the TV sets, 5 LED TV and 2 QLED TVs valued to 2 lakh got completely damaged, but the supplier refused to replace the same. Okay, so from this 20 lakh, 2 lakh totally got damaged. So can I say ITC I will get only on 18 lakh? Yes. Okay, then purchase of washing machine. Purchase of washing machine from unregistered supplier. So he wouldn't have charged any GST, so I will also not get any ITC. Then transportation charges paid to Shri Logistics unregistered GTA. Okay, so GTA is providing the services to us, that is to FS. Can we say here RCM will be applicable because we are registered? So on this there will be two effects. First, we will have to pay the tax in cash, right, at the rate of 5%, that is 5,000, and then we can take the ITC of the same amount. Yes. Okay, then further the following information is also provided related to December. FS received security services from LML Limited, Chandigarh, amounting to rupees 50,000. LML Limited is an unregistered supplier. So we received security services. What did we study about security services? If it is provided by other than body corporate to a registered person, other than composition, right? Other than composition, then only RCM will be applicable. But here can we say it is provided by an unregistered supplier? So the question of GST does not come. Gone. Then rent of shop paid to Municipal Corporation of Chandigarh. This we had done it today. So when it is supplied by whom to whom? When it is supplied by government. Okay, CG, SG, local authority to a business entity, it will be taxable under RCM. So to effect, pay the tax in cash. Okay, what is the rate given? For transportation charges, it is 5%, otherwise it is 18%. So can we say on this 50,000, we will pay at the rate of 18%. Pay in cash 9,000 and then take the ITC of 9,000. Legal fee of rupees 10,000 paid to Mr. Prakash, a senior advocate of Punjab and Haryana High Court for providing legal service. So senior advocate has provided legal service to us. So can we say whenever they are providing legal service to a business entity whose last year's turnover exceeded the threshold limit for registration. My last year turnover was 30 lakh, that had already exceeded. So can we say this is taxable and that too taxable under RCM? Yes, so again same impact. 1800 we will pay in cash and then 1800 we will take the ITC. Okay, then FS procured old and used goods worth rupees 5 lakhs on which GST is payable on reverse charge. Do you recollect in reverse charge goods list we had studied about old and used goods, and they are also telling that it is chargeable on reverse charge basis. Goods were received on 25th December. Supplier issued the invoice on 24th December. Payment was debited from the bank account on 31st December. But the transaction was recorded on 1st of Jan. So whichever is earlier, anyway it will be considered as a transaction of December only. On this also RCM is applicable. So can we say we will pay the tax in cash? So 90,000 we will pay in cash, 18%, na? 5 lakh into 18%. That we will pay in cash and then 90,000 we will take the ITC. Then applicable rate of GST is 18% except for transportation, that is 5%. Ignore the bifurcation. Last year turnover was 30 lakh. There is no opening balance of ITC available. All the information pertains to the same financial year, and wherever stated it is considered as wherever not stated it is considered as exclusive of GST. Now let's give it a try everyone. Very nice question. Let's try one by one. Now, what is the total value of inward supply on which GST is payable under reverse charge mechanism? Inward supply, okay? So, this was my outward supply. This is my inward supply, but here, can we say this will come under RCM? This 1 lakh will come under RCM. Take 1 lakh in your calci. Then after that, can we say on this there was no GST, but on this rent there will be reverse charge mechanism applicable 50,000, add 50,000. Legal fee reverse charge mechanism, add 10,000. Goods 50,000, 5 lakh, sorry. Goods 5 lakh. Are you getting the answer as 6,60,000 everyone? 6,60,000 will be the correct answer. Yes. Then next, the amount of eligible ITC, ignoring the reversal, that can be availed. ITC that we can avail for this particular month. Okay. So now starting from here, can we say here we can avail ITC on 18 lakh? Right? 18 lakh multiplied by 18%. 18 lakh multiplied by 18%. So that will give me 3,24,000. Here there will be no ITC because it was purchased from unregistered supplier. Acha, here we can take the ITC of 5,000. So add 5,000. Obviously we will pay in cash, but now they are asking about ITC. So we will take the ITC, add 5,000. Then for the next transaction, take the ITC of 9,000 plus 9,000. Then take the ITC of 1,800 plus 1,800. Right? And then take the ITC of 90,000. How much is it coming to? Is it coming to 4,29,800? Yes. Okay. Then net GST payable in cash. Net final amount payable in cash. Okay. Now see, this is a full-fledged question, right? Net GST payable in cash. So what is going to be the format? So format is going to be, first take the output tax payable. From that output tax payable, subtract your input tax credit that is available to you. Okay, subtract the input tax credit, you will get the tax payable. Okay, you will get the tax payable, and then you will have to add the tax payable under reverse charge mechanism. Right, this tax payable we cannot add it here because for RCM we have to pay it by cash, right? So that is to be added separately. This is going to be your final answer. Now let's do one by one. Can we say my ITC already I have 429,800? Acha, then next, let's calculate the output tax. How much is the output tax? Can we say here on some goods tax was not applicable, still they have collected it. So we will have to pay it to the government. So can we say on the entire amount GST will be applicable? So 37 lakhs is the total value. 37 lakhs multiplied by 18%. That gives me 6,66,000. So my output tax is 6,66,000 minus 4,29,800. That is 236,200. Plus how much tax is payable under RCM? We have returned. This is to be paid, this 5,000. Then this 9,000, 14,000. Then again this 9,000. 23,000, and then plus this 90,000. So 23,000 plus 90,000, that gives me 1,13,000. See how much is it coming to, total amount. Are you getting as, one second, huh? Did I do any mistake? Let's check. Did I do any mistake, everyone here? This sales I have done. This is 6,66,000. Then this is 2 lakh. Where is it? Where did I write? 6,66,000 minus 429,800. So 6,66,000 minus 4,29,800. This gives me 2,36,200. This is perfect. This is perfect. Then how much is my tax payable? I think I did a mistake here. Under ITC, how much is my tax payable? So transportation is 5,000. Then rent of shops is 9,000. Then legal fee. Legal fee is 1,800. Okay, I took 9,000 there by mistakenly. And for goods, used goods, it is 90,000. So 105,800. This will be 105,800 plus 2,36,200. 236,200. This gives me 3,42,000. Yes. D is my correct answer. Yes, this should be your format and it will never go wrong. Okay. Then the next one, what is the time limit for issue of show cause notice in respect of GST inadvertently charged and collected on the goods and assuming it is not deposited? So your section 74A11 is applicable and along with that section number 76 is applicable. So we have studied that in such cases there is no time limit for issuing the show cause notice. If you are not able to recollect, I have already put the revision video on YouTube where I have covered these 10 small chapters in around 4.5 hours. So please refer it. We have discussed it there. Yes. Done, everyone. Nice question. Very nice question. Let's go to the next one. Chalo, I'm reading the next case scenario. Case scenario number 9. Let's start with it. LLD and Company, a partnership firm, is engaged exclusively in manufacturing of electric equipment in the state of Gujarat. Manufacturing. The firm became liable for registration on 14th April since its turnover exceeded the applicable threshold limit. It applied for registration on 16th May. Okay, means after 30 days it is going and applying for registration and was granted the registration certificate on 20th May. So can we say if you do not apply within 30 days, whenever you are granted the registration certificate, that will be the effective date. Right, this is going to be your effective date of registration. The firm had opted for composition levy under section 10 at the time of registration. Its turnover for the quarter ending June, excluding the turnover till the date it became liable for registration, was 82 lakhs. Means apart from the basic limit, its turnover was 82 lakhs, out of which taxable supply was 80 lakhs and exempt supply was 2 lakhs. Its turnover crossed 150 lakhs on 9th of July. And LLD and Company had opted for withdrawal of composition scheme on the same day. Okay. The firm provided a supply of equipment to GGY Limited, an unrelated limited company, on 20th July, having market value of 21 lakh, wholesale value of 22 lakhs, MRP of 23 lakhs. However, the transaction was done at 18 lakhs. Can we say because it is done with an unrelated party, the actual value will be considered as the value of supply? Yes, so this market value, wholesale value, MRP, everything is irrelevant. 18 lakhs will be relevant. Then, during the month of June, LLD and Company has received one taxable service covered under RCM from a registered supplier, Mr. Sachin Kumar, in the course of intrastate supply. LLD and Company failed to issue any document to Mr. Sachin Kumar relating to this transaction. Okay. Other details for the particular inward service are as follows. Supply of service, invoice raised by the supplier, payment recorded in our books, payment debited in our books, payment recorded in his books, payment credited in his books. LLD and Company has not opted for QRMP. Okay. All the amounts are exclusive of taxes wherever applicable. All are intrastate supply and price is the sole consideration. All the above information pertains to the same financial year. Let's start, everyone. Simple question. Effective date of registration we have already discussed. It will be 20th of May. Yes, that will be the effective date of registration. Then LLD and Company needs to furnish a statement containing that details of stocks or inputs in semi-finished goods or finished goods on the withdrawal of composition scheme. So within 30 days from the date of withdrawal we have to submit, right? So when did we withdraw? We had opted for withdrawal on 9th of July. 9th of July. So from 9th of July within 30 days. So can we say 8th of August? 8th of August, 9th of July plus 30 days. Then the value of supply of equipment made by LLD to GGY, that is 18 lakhs we discussed because it was supplied to an unrelated person and plus price was the sole consideration. Then tax payable by LLD and Company for the quarter ending June will be how much? Tax payable will be how much for that quarter? So can we say for that first quarter it was there under composition scheme because it has withdrawn on 9th of July. So till June quarter it was there under composition. And can we say it is there under manufacturing? If it is there under manufacturing, then can we say the rate of tax will be 0.5%, 0.5% under CGST, SGST of the total turnover, that is taxable turnover plus exempt turnover. So my total turnover is 82 lakhs. Yes, my total turnover is 82 lakhs. We have to take taxable turnover also, and we will take your exempt turnover also. So 82 lakhs multiplied by 1% total. So 82,000. That is 41,000, 41,000 each. 41,000, 41,000 each. Yes. Acha, suppose if this person was a trader. Suppose if this person was a trader, then it would have been only on the taxable turnover. Remember? Then it was only of the taxable turnover. Rates of taxes under composition scheme. Then the next one, time of supply for the purpose of payment of tax for transaction with Sachin Kumar. Time of supply we need to find out here for this particular transaction. So can we say this is a reverse charge transaction and this is a service transaction? So can we say section number 13(3) of CGST Act will apply? And here, but we have received it from a registered supplier. So registered is supplying it to another registered where RCM is applicable. So can I say in this case the time of supply will be the date of payment or 61st day from the date of issue of invoice, whichever is earlier. Acha, date of payment is from the point of view of recipient, because here it is RCM. Date of payment will be, I am the recipient. So LLD and company is the recipient. So recorded in the books or debited in the books, whichever is earlier, that will be my date of payment. Can I say my date of payment will be 7th of August? Yes, or 61st day from the date of issue of invoice. Invoice was issued by that person on 9th of July. So can we say from 9th of July we will take 61 days. So 9th of July, July has 31, 31 minus 9. So 22 days of July, 31 days of August, and we are left with 8 more days. So 8 days of September. So 61st day comes to 8th of September. So 7th August or 8th September, whichever is earlier. So can I say my answer is going to be 7th of August? My answer has to be 7th of August. Yes, here it is 7th of August. Manageable? Yes. And the last one. Which of the following document is mandatory to be issued by LLD and company in respect of transaction with Sachin Kumar? That RCM transaction, and Sachin Kumar was registered. So invoice we need not issue, but can we say at least payment voucher we will have to issue, because we are going to do the payment to that person. So we will at least issue the payment voucher. Done, done, and done. Let's go to the next one. Let's start with the next one, everyone. Case scenario number 10. Mr. Suraj Rao of Bhilwara, Rajasthan is a registered person under GST and is filing monthly returns. His turnover for the preceding year was rupees 1.25 crore. He is engaged in the business of various goods and services. He provided the details of the following transactions and supplies which were undertaken during that particular year. During that particular month of February. Yes? Okay. I hope you can see the screen, right? Okay. Now, he executed a hedging contract for the commodity with NCDEX at a price of 1100 per unit for 600 units. Original contract of purchase was made at 1000 per unit. On the date of expiry of futures, that is 28th Feb, the rate of commodity was 900. He squared off the contract without physical delivery. Without physical delivery. So, can we say this is neither supply of goods nor supply of service? He provided repairs and maintenance service related to generator to Mr. Rajendra on 5th Feb, involving both supply of goods being spare parts and supply of service being labor charges. So composite supply is there. He disclosed the value. Oh, he has disclosed it separately. Goods at 10,800 and service at 25,000 separately in the invoice. So if it is disclosed separately, then this will be considered as individual supplies, right? Individual supplies, which will be taxed at individual rates. Details of inward supplies during the month. Purchase of goods for 20 lakhs from a registered person. It includes 5 lakh towards purchase of goods which are exempted. So can we say ITC will be available only on 15 lakh worth of goods? Yes. Then purchased a truck for rupees 8 lakh for transportation of goods for delivery to the customer. No depreciation was claimed. So can I say ITC will be allowed because this is for transportation of goods. ITC will not be blocked under section 17(5). Then incurred 3,50,000 on renovation of office building and debited the expense in the P&L account. Oh, so they have considered this as revenue expenditure. So ITC will be available on this also. Then Mr. Suraj Rao went to Surat, Gujarat for a business meeting which was mandatory under a law for the time being in force in February, and stayed in a GST registered hotel named A1 Hotel for few days. Room accommodation charges was 50,000 was paid for the stay. Okay, so here Mr. Suraj Rao, this person of Bhilwara, Rajasthan, went to Gujarat. Okay, so now can we say here what will be the place of supply? Place of supply will be the location of the immovable property, that is hotel. Yes, so can we say here location of supplier is Gujarat, location of recipient is Rajasthan, and place of supply is also Gujarat. Yes, if LOS and POS is in the same state, then this will be considered as intra-state supply. So can we say here the Gujarat hotel is going to charge CGST and Gujarat SGST in the invoice? So can we say ITC will not be available to the recipient? Where is recipient situated? Recipient is situated in Rajasthan, na? And he is going to get a bill of CGST and Gujarat SGST. So obviously ITC will not be available, because ITC will be available only if either that person is of Rajasthan or he has charged IGST in his invoice. Right? Next one. Other information. Due to the accountant on leave, GSTR 3B for the month of Feb could not be filed on due date, that is 20 March. It was filed late. Fine, interest will be applicable. Suraj Rao collected an advance payment of 2 lakh plus GST for provision of service in the month of September. However, no tax was deposited on such advance money to the government, even though 5 months have elapsed. If 5 months have elapsed, can we say that show cause notice can be issued and penalty under 74A11 can be made applicable? Yes. Then all amounts are exclusive of taxes. It is intrastate except otherwise mentioned. 9%, 18% is the rate applicable, but for spare parts, it is taxable at 2.5, 2.5 or 5%. All the above information pertains to the same financial year. Now, value of outward supply. Value of outward supply with NCDEX will be 0 because it is neither supply of goods nor services. Then amount of ITC that can be availed for stay in the hotel. No ITC can be availed. No ITC can be availed because we cannot avail the ITC of CGST and other state SGST. Then amount of total eligible ITC for the month of February. What is the total amount of eligible ITC? Let's do that calculation. So can we say first of all, on this goods, on this 15 lakhs we will get, on this truck we will get, on this renovation we will get, at least let's do all total of all these 15 lakhs plus 8 lakh plus 3 lakh 50,000. At least this much you can do. Yes. Acha, then for hotel we will not get anything. Okay, multiplied by 18%. How much does it come to? 4,77,000. See if you get that answer. Yes, 4,77,000 is the correct answer. Then after that, the next one, the nature of supply and rate applicable for services provided to Rajendra. Okay, it will be an individual supply, respectively taxable. Simple, everyone. Chalo, let's go to the next one. Let's go to the next one. Case scenario number 11. Messrs. Joes and Company, herein referred as firm, is a partnership firm registered under GST regular scheme in Kerala. Firm is an original equipment manufacturer of motor pumps and engaged in supply of related goods and services all over India and supplies goods through its network of its agents. During the month of August, the firm made the following outward transaction: supplied molds and dies owned by it to unrelated manufacturers free of cost. Market value was 65,000. So can we say it has supplied it to unrelated? So whatever value it has shown, we will consider that value, that is 0. Then it provided training on e-invoice and e-way bill to all of its agents free of cost. Value of such training was 1 lakh. So can we say in case of agent, the taxability will arise only in case of para number 3. That is when there was a supply of goods between agent and the principal. Here there is a supply of service between principal and the agent. So again, para 3 is not applicable here. So because it was provided free of cost, we will take the value as 0. So can we say for the month of August, the value of outward supply is 0. Then after that, going to the month of September, water supply services provided to Kerala Water Resources Management Board, a government body in which 85% control was held by Kerala government. Can we say this is a taxable transaction? Why this is not exempted? Because it will be considered as a government body where at least 90% involvement of government is there. So actually this is not a government body. Yes, and you cannot even consider this as a PSU, and you cannot make the TDS provisions applicable because consideration is exactly 2,50,000. No TDS, because TDS will be applicable only when it exceeds rupees 2,50,000. Then after that, composite supply of goods and services provided to Kerala government in respect of an activity entrusted to municipality in which value of service constituted 25%. Can we say value of goods should be maximum 25%? So here can we say this is not exempted, this will be a taxable transaction, and on this TDS is also applicable because the consideration is more than 2,50,000. Then conducted training program for rainwater harvesting for a consideration of 4 lakh. Conducted training program for rainwater harvesting for a consideration of 4 lakh. This service was provided to central government and 76% expenditure was borne by the central government. So can we say this is an exempt supply? If this is an exempt supply, can we say TDS is anyway not applicable? TDS is applicable only on tax. Whenever there is tax applicable, then only TDS will come into picture. Then, during the month of October, the firm made a supply to its related concern valued under invoice at 5 lakh rupees. Related person 5 lakh rupee, whereas the market value was 8 lakh. Recipient was eligible for full ITC. Oh, if the recipient was eligible for full ITC, can we take the invoice value? Yes, so invoice value will be the final value, that is 5 lakh. Ignore all the other things, open market value, like, kind and quality, etc. doesn't matter. Then the firm entered into the contract for service of 100 pump motors on 15 November for 5 lakh rupees. Deadline for completing the contract was 15th January. However, due to some misunderstanding, the contract was terminated on 20 December where only 50% work was completed. Whenever the contract is getting terminated, can we say we have to make the invoice on the date when the contract was terminated for that proportionate amount? So invoice for that should be made on 20th of December. Now all the amounts given above are exclusive of taxes wherever applicable. All the supply referred above is intrastate unless specified and it pertains to the same financial year. Now give the answers. In respect of outward transactions made during August, can we say value was nil? We have already discussed this. Here. The value is nil, the value is 0. Then what about September? What is the value of exempt supply in September? So in September we did these 3 supplies, right? A, B and C. Exempt is only the third one, that is rupees 4 lakh. Yes. Okay, then the amount of TDS under GST that will be deducted each under CGST and SGST will be how much? So can we say 1% will be deducted here? Here TDS was applicable, na? So 3 lakh multiplied by 1%. So 3,000 each. 3,000 each will be deducted. Yes or no? Then after that, going to the next one. The value of supply made to a related person. Because he was eligible for full ITC, then invoice value was taken. Invoice value was 5 lakh. This we have already discussed. Right? Then the last date for issue of invoice against pump motors for which it was terminated. Can we say it will be the last date for issuing the invoice will be the date of termination, that is 20th December itself. Manageable till here, everyone? Yes. Done. So we are done with 11 case scenarios out of 55. 20% is completed now. Yes. Okay, let's start ahead, everyone, with the next case scenario, number 12. Ecowave Technologies Limited, Coimbatore, Tamil Nadu, herein referred as Ecowave, exclusively manufactures and sells product Z, which is exempt from GST by notifications issued under relevant GST legislations. The company sells product Z only within Tamil Nadu and is not registered under GST. Further, all the inward supplies are also taxable under forward charge. Okay. So it is into manufacturing and it sells product Z, which is exempted from GST. That's why it has not got itself registered. The turnover in the previous year was 55 lakh. The company expects the sales to grow by 20%. Now, owing to the growing demand for the product, now it has decided to increase its production capacity and purchase additional machinery for manufacturing Z on 1st of April. The purchase price of the capital goods is 20 lakhs plus GST 18%. However, effective from 1st August, exemption available on Z was withdrawn by the central government and GST at the rate of 12%. So till now my product was exempted and now the exemption is going to be withdrawn from 1st of August. The turnover of the company for the first quarter ended on 30th June was 50 lakhs. So can we say its limit has already got exceeded? If its limit has already got exceeded, so now it becomes liable for registration from 1st of August, that is the day when the exemption was withdrawn. Okay, now in October, it plans to launch a new taxable product Y. It enters into a contract with Shine Limited, an advertisement company located and registered in Gurugram, Haryana. So Shine Limited is of Haryana to arrange the display of advertisement of newly launched product on a hoarding placed at a prominent location in Bangalore, Karnataka for 3 months of launch. Shine Limited in turns enter into the contract with owner of the hotel located and registered in Bangalore for display of advertisement on the hoarding placed in the lawn of the hotel. We have done the circulars in place of supply chapter. Based on the facts of the case scenario given above, choose the most appropriate answer. Question number 1 to 3 below. Which of the following statement is correct with regard to liability to get registered? So it is liable for registration from 1st of August, right? It becomes liable to register on from 1st of August because it was exclusively engaged in goods. So 40 lakh limit we will check, and that 40 lakh limit has already been exceeded. Then assuming that EcoWave is already registered, assuming that it is already registered with respect to certain taxable supplies being made by it along with manufacture of exempt product Z, other facts remaining the same, can it take ITC on the additional machinery purchased exclusively for manufacturing Z? If yes, then how much credit can be availed? Okay, so the new machinery that we were purchasing, the value was 20 lakh. GST on that was 18%. So can we say 3,60,000 is the amount? Yes. Okay, now we want to take the ITC. Can we take the ITC? Can we take the ITC? So we can take, but can we say we will have to subtract 5% per quarter? Yes. Now this we had purchased it on 1st of April and we are going to put it to use from 1st of August. So for this period, it was used for exempt purposes. For this period, it was used for exempt purposes. So can we say 1st April to 30th June will be 1 quarter? Then next, 1st of July till 1st of August, even if it is a part of quarter, it will be considered as 1 full quarter. So can we say 2 quarters are over? So can we say 5% per quarter? So 3,60,000 minus 10% we can do, 5% for 1 quarter, so 10% for 2 quarters. So this will give me 3,60,000 minus 36,000, 3,24,000. So 3,24,000 is the ITC that you can avail now. Did you understand this? Yes. Why didn't we avail this 3,60,000 earlier? Because earlier we were unregistered, but now when we have got ourselves registered, then we can avail the balance ITC. Okay, ma'am, sometimes we take 5%, sometimes we divide it by 60 months. Please remember, whenever you are availing the ITC, okay, whenever you are availing the ITC, please consider 5%. And whenever you are reversing any amount of ITC, always do it in number of months, that is 60 months. Yes. And then the place of supply of services provided by Shine Limited. Shine Limited was that hotel, right? Or it was the advertisement company. It was the advertisement company. So for advertisement, there was no specific provision. So normal 12.2 will apply. That is location of the recipient. We are the recipient. Our location was Coimbatore, Tamil Nadu. So for Shine Limited, my place of supply will be Tamil Nadu, and Seaside Hotel. Hotel was situated in, for Seaside Hotel, can we say it is renting of immobile property? Renting of immobile property means location of that property, that is Bangalore, Karnataka. So for this, it will be Karnataka. So can we say Tamil Nadu and Karnataka is the correct answer? Tamil Nadu, first one, and Karnataka. Can we say that is the correct answer? Manageable? Yes. Okay. Then let's go to the next one, everyone. Let's try the next case scenario. Very simple. We have the same case scenario in our question bank also. Just that here they have converted it from theory numerical question to a MCQ based question, nothing else. Okay. Let's start. Let's try. Let's try. Can we start? Mrs. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. We are in Jaipur, okay? Supply of laptop along with laptop bag to a customer of Mumbai. So can we say this will be considered as a composite supply? Yes. Then supply of 10,000 kits at rupees 50 each amounting to 5 lakh exclusive of GST to Ram Fancy Store in Kota, Rajasthan. Each kit consists of 1 hair oil, 1 beauty soap and 1 hair comb. So this will be considered as a mixed supply. Then 100 kits are given as free gift to Jaipur customers and all are unrelated. Free gift on occasion of her birthday. So can we say this is the value of supply will be 0 because this is not a supply at all, because there is no consideration involved. Then event management services provided free of cost to her brother, wholly dependent on her for his son's marriage function in Indore. Cost of providing the services is 80,000. Okay. Then after that, 1400 chairs and 100 coolers were hired out to a function garden Ajmer for 3,30,000, including cost of transportation of the chairs. Can we say this will be considered as a composite supply? Main supply is hiring out and along with that we have provided transportation. So this will be considered as composite supply. All the transactions are exclusive of GST wherever applicable. Let's see this, everyone. Supply of laptop along with laptop bag will be a composite supply and kits given to Ram Fancy Store is a mixed supply. So can we say composite supply and mixed supply? Then 100 kits given as free gift is not a supply at all, we have discussed, because there is no consideration. Then event management services provided to Kajal's brother. Can we say here he was wholly dependent on me? So can we say he is a related person? So that will be considered as a supply. We will have to do the valuation. So this will be considered as a supply. This is a taxable supply. And transportation service. Can we say that was also a taxable supply? That is a composite supply. That will be taxable at what rate? Renting rate. Yes. So it is the taxable supply. It is a taxable supply. Second one is also a taxable supply, which is to be taxed at the rate of renting. Yes, simple. In our question bank, we have got a numerical question on that where you calculate the rates of GST, etc. on that. Yes. Chalo, let's go to the next one. Let's go to the next case scenario, everyone. I hope you can see this from the board now. Yes, let's start. Mr. Dhinal Patel is registered under a regular scheme of GST in Delhi. He is engaged in supply of various goods as well as services across the country on his own as well as through its agent network also. So we are of Delhi. Okay, individual person registered under Delhi. During the month of August, Mr. Dhinal Patel made the following outward transactions. He gifted a watch worth 50,000 to Mr. Sudipta Banerjee, an employee. In recognition of him being awarded as Employee of the Year, no other gift was presented. So up to 50,000 there is no problem. GST will be applicable as soon as it exceeds 50,000. So as of now it is not a supply. He provided free training on e-invoice and e-way bill to agents free of cost. This we discussed it. This free services is provided to agent. So the value will be 0. That is the consideration. If it was goods as per para 3, then we would have done the calculation. Then he provided the following services. So basically for August, my value is 0. He provided the following services during the month of September, wherein he received full payment of contract value subject to deduction of TDS as applicable. Supplied printed books and printed postcards to West Delhi Post Office, government, Post Office. Out of the total contract value, supply of books which is exempted is 7 lakhs. This is exempted. And supply of printed postcards taxable under GST is 2,72,000. So can we say this is a taxable supply? Acha, what is the breakup? 2,72,000 is inclusive of GST because this is full contract payment. What is, all values are inclusive of GST at the rate of 18%. Go reverse, divided by 1.18. How much is the basic value then? Basic value will be 2,30,508 plus GST. Yes. Okay. Then after that, the next one. So this one is an exempt supply. This one is a taxable supply. Then supplied service of maintenance of street light in municipal area of East Delhi, and this is an activity in relation to function of the municipality. The maintenance contract involves replacement of defunct lights. However, the value of supply of goods is not more than 25%. Contract value is 3,50,000. Can we say if supply of goods is not more than 25%, then this will be an exempt supply? If this is an exempt supply, then there will be no question of TDS also applicable. And then the next one, supplied service of interior decoration of Andhra Bhavan located in Delhi. Service contract value is 12,39,000 entered into with government of Andhra Pradesh, registered only in Andhra Pradesh. So we are registered in Delhi. Location of supplier is where? Location of supplier is Delhi. Location of recipient is government of Andhra Pradesh, that is Andhra Pradesh, that will be the location of recipient. Place of supply will be, because this is in relation to immovable property, place of supply will be location of immovable property, that is Delhi. So can we say LOS, POS is in the same state but LOR is in some other states? So TDS is not at all possible here. Yes. Then Mr. Deenal entered into a contract for supply of service with Saurashtra Associates on 1st June. He commenced the provision of service on 5th June and completed the provision of service on 10th of October. Invoice is issued on 20 October. He received the payment by check on 15th October and entered in his books on the same day. Amount was credited in his bank account on 18th October. Okay. So out of these two, whichever is earlier, that will be my date of payment, date of receipt of payment. In the meantime, the rate of GST applicable was changed from 12% to 18% on 16th October. Okay, so whenever there is a rate change, first thing that you need to check is whether the check is cleared within 4 days of rate change. The rate change happened on 16th October and the check was cleared on 18th October. Yes, so they did everything properly. Right? So now here we need to find out that what will be the time of supply and what rate will be applicable here. So can we say in case of a supply of service, if the invoice is issued within 30 days, if the invoice is issued within 30 days, here the service got over on 10th October, invoice was issued on 20th October. So can we say time of supply is going to be what? Time of supply will be date of payment or date of invoice, whichever is earlier. Date of payment is what? 15th of October, or date of invoice is what? 20th of October, whichever is earlier. Whichever is earlier means 15th of October. Yes, but then we had studied that whenever there is a rate change, then section number 14 will apply, which is an overriding section. Acha, in that we made multiple columns. Do you recollect? Yes, first column will be supply of service. Next column will be date of invoice. When was invoice issued? When was the payment? And then what will be the time of supply? So can we say here, when did the rate change? Rate change on 16th October. What about provision of service? Provision of service was done on 10th October itself. Means it was before the rate change. Invoice was also before the rate change. Yes, and date of payment. Date of payment is also going to be 15th October. Means even that is before. Yes. Everything is before only. Everything is before only. So can I say in these two, in this case, it is going to be what? Whichever is earlier, date of invoice or date of payment, whichever is earlier. Now what was my date of invoice? My date of invoice was 20th October. Or date of payment. Date of payment will be 15th October itself because my check got cleared within 4 days. Yes, so 15th October or 20th October, whichever is earlier. Whichever is earlier means 15th October. Right? So 15th October is going to be my time of supply. 15th October is going to be my time of supply. And what was the rate applicable on 15th October? It was the old rate only. So old rate will be applicable. Then Mr. Dhinal rents out a commercial building owned by him to Bharat for the month of October, for which he charges the rent of 19,50,000. Mr. Dhinal pays the maintenance charges of 1 lakh for the October month as charged by the local society. So we are collecting the rent and we are paying the maintenance to the society. These charges have been reimbursed to him by Bharat. Also, Mr. Dhinal has paid municipal taxes of 2,85,000 which he has not charged from Bharat. Okay. So can we say here, when we are supplying this renting of commercial building property to Mr. Bharat, we are charging rent also and plus we are charging maintenance charges also. Right? We are charging maintenance also plus we are charging rent also. Rent I am keeping with myself and maintenance I will go and pay to the society. Municipal taxes I am not charging it from him but I am paying from my own pocket. So can I say my value of supply will be 20,50,000? Yes. Then, during the month of December, Mr. Dhinal hired the services of Sun Limited, an event management company registered in Delhi, for organizing 2 events, one in Bangalore and one in Japan. So, can we say here, it is a domestic transaction only because event management company is also in India and we are also in India. So, place of supply, where the event is in India, the place of supply will be such place. And if the event is outside India, then the place of supply, then what will be the place of supply? Place of supply will be the place where we are, place of supply will be the place where who is situated. Where who is situated? What will be the place of supply in such a case? Yes. It is going to be the location. It is going to be the location. It is going to be the location of this person. Location of such person. That is the location of recipient. That is Delhi. That is Delhi. So for Japan, the place of supply will be Delhi. Okay. Assume all the days covered above are working days. All the supplies are intrastate. Let's give the answers. Now, in respect of outward transactions made during the month of August was 0, na? August was 0. So nothing, nil. August was nil. Right? Chalo, then going on to the next one. Let's go to the next one. The amount of TDS under GST that will be deducted against the supply made for the September month. Amount of TDS. What will be the amount of TDS? Let's go and check, everyone. So on the first transaction, see 7 lakh was anyway an exempt supply, so no TDS. And here also, what is the value? The value is 2,30,508, na, basic amount, which does not exceed rupees 2,50,000. So no TDS will be applicable. Then anyway, second one was an exempt supply, so no TDS. Third one, TDS was not possible because LOS-PS was in one state and LOR was in other state. So can we say no TDS will be applicable at all? Nil. Then value of supply made to Bharat for the month of October. Let's go to the month of October. Yes, it will be 20,50,000. We have already calculated. 20,50,000 rupees. Yes, municipal taxes cannot be added because that we are not collecting from our tenant. Then time of supply we have already calculated. Old rate and 15th October. Already calculated. Place of supply also we have calculated. In both the cases it will be Delhi and Delhi. Acha, do you recollect? For admission of the event, the place of supply was the place where the event was conducted. But for organization, it is going to be the location of the recipient only. So here, for Bangalore also, it is going to be Delhi. Yes, when it is provided to a registered person, it will be the location of recipient only. So for Bangalore as well as Japan, the place of supply will be Delhi only. Delhi. Yes, then the value of exempt supply for the month of September. Let's go to September. Okay, so September exempt supply. One is the 7 lakh rupee. Yes. Then another one is this 3,50,000, that is total till year 7 lakh plus 3 lakh 50, 10 lakh 50,000. Yes. And last one was taxable, but TDS was not applicable. So can we say 10 lakh 50,000 is my answer? 10 lakh 50,000 should be my answer. Manageable till year? Yes. Chalo, then let's go to the next one. Next case scenario number 15. Let's go to it. Chalo. Now, Messrs All-in-One, a partnership concern and a registered supplier under GST, is engaged in providing various services under one roof. It is engaged in paying tax under regular scheme under GST law. The concern provides the following information pertaining to supply made or input services availed by it during the month of March. Registered person under GST, and it is a partnership firm. So we provided DSA services to Y Bank Limited. DSA services only when it is individual DSA, then only RCM will be applicable. So here it will be taxable for us. This is my outward supply, na? This is my sales. This is my outward supply. So this will be taxable under FCM. Then again, this is my sales. Okay, provided security services by way of supply of security personnel to ABC Private Limited, a registered person under GST. So for security services, what did we study? For security services, we studied that when it is provided by other than body corporate to a registered person, then RCM will be applicable. So we are other than body corporate and we have provided to ABC Private Limited. So can we say here RCM will be applicable? It will not be taxable for us. Then we provided security services. Again, this is my outward supply. We provided security services to PSR trust and unregistered person. So your FCM will be applicable. Then provided renting of motor vehicle for transportation of passengers to Amaze Tours and value of supply included cost of fuel. So renting of motor vehicle when supplied by other than body corporate to a body corporate. Can we say RCM will be applicable? Here Amaze Tours will pay. This was my sales, but this is now not taxable for me. Then provided renting of motor vehicle to Preeti and Company, a CA firm for transportation of passengers. So this is provided by other than body corporate to other than body corporate. So your FCM will be applicable. So here we will have to pay the tax. Then we have availed representation service from PB and Company, a law firm towards consumer court case. PB and Company, we have availed, and we are a partnership firm. Can we say this is exempted from GST? We have already studied this. Rates of taxes is 99%, except motor vehicle, there it is 2.5%. Then we have commenced our business from February. That's the reason my lawyer services were exempted, right? Because last year I was not eligible to get myself registered. So all the supplies are intrastate only. Ignore the provisions relating to ITC. Answer the 3 questions. Let's try. Tax on DSA services and on renting to Amaze Tours is payable by whom? So direct selling was FCM. So all-in-one has to pay. And in this case, it was rented to body corporate. So body corporate will pay. So in first case, all-in-one, and in second case, Amaze Tours. Right? Next one, tax on security services. Tax on security services to ABC Private Limited and to PSR. Security services, ABC and PSR. One was RCM, one was FCM. So when it is RCM, ABC will pay. When it is FCM, all-in-one will pay. Right? So ABC and all-in-one. ABC and all-in-one. C is the correct answer. Then can we say representation services? Representation services from PB, that will be exempted from GST, because when it is provided by a partnership firm of advocate or when it is provided by an individual advocate to a business entity whose last year turnover did not exceed the threshold limit for registration, then it will be exempted from GST. Done. Manageable till here? Yes. Let's go to the next case scenario. Yes. Chalo, let's go ahead, everyone. Welcome Group Private Limited, referred as WGPL, is engaged in supplying hospitality and advertising services. It has its head office in Maharashtra and branches in various states in India. All are registered under GST. All of them are registered under GST, right? Then after that, WGPL head office in Maharashtra provided admin and back office support services in the month of August to its branch office in Kerala using the services of employees working at the head office. While issuing the tax invoice to the branch office, head office did not include the salary cost of the employees involved in providing such services. That is okay. The branch office is eligible for full ITC. Can we say branch office is eligible for full ITC? Invoice value will be considered as the value. Yes, we can trust the invoice value then. Further, in the month of October, this happened in the month of August, right? Now we are talking about the month of October. WGPL entered into a contract with Bright Ads LLP registered in Rajkot, Gujarat for display of advertisement for an award event being organized at a convention center in Bhopal, Madhya Pradesh. The terrace of a hotel located nearby on which the hoardings are to be displayed is taken on rent by Bright Ads LLP from the owner of the hotel, Mr. Kapoor, who is unregistered. Bright Ads LLP raised a tax invoice on WGPL for advertisement. So Bright Ads, when it is raising for WGPL for advertisement service, then can we say 12(2) will be applicable? That is, place of supply will be location of recipient. Location of recipient is going to be Maharashtra. Yes. Then, based on the facts of the case, choose the most appropriate answer. Value of supply of administration work which was given by head office, for which invoice was given by head office to branch, shall be. Can we say it will be the invoice value because the recipient was eligible for full ITC. Then place of supply of service by Bright Ads to Welcome Group. This we just now discussed. It will be the location of recipient as per section number 12(2), that is Mumbai, Maharashtra. Then place of supply of services provided by Kapoor to Bright Ads. He was the owner of that particular property. So can we say here the place of supply will be location of that immovable property? And can we say that convention center was located in Bhopal, Madhya Pradesh? So Bhopal, Madhya Pradesh will be considered as the place of supply. So Bhopal, Madhya Pradesh will be the correct answer. Manageable till here? Yes. Yes. Can we go ahead now to the next case scenario, everyone? Yes, let's start with this case scenario, everyone. Venue Automobiles Private Limited, herein referred as VAPL, a company registered under GST in Delhi, is engaged in manufacturing and supply of automobiles and auto accessories across India. The manufacturing plant is located in Indore, Madhya Pradesh. In the financial year 23-24, it had purchased the raw material, that is metal sheets, and sent the same for painting and plating to the registered job worker, okay, Apex Surface Coaters Private Limited. These raw materials are sent directly from the place of business of supplier. So I, instead of calling it at my premises, I am taking it from my supplier and sending it to the job worker. VAPL has availed the ITC on purchase of such items. The following transactions took place. This was the value of goods sent. This is the ITC on that. This is the date when we purchased it. This is the date when my job worker received it. And this is the date when we are receiving it back. Okay. So basically we know that in case of inputs, in case of raw material, we should receive it back within a time period of 1 year. Yes, whenever we are sending it, we should receive it within 1 year from the date of our sending it. But when our supplier is sending, we should receive it back within a time period of 1 year from the day when the job worker had received it. Right? So now in this case, can you see everyone? In this case, job worker, first case, the job worker received on 15 July and we received it back on 12 July. So can we say this was within a time period of 1 year? No issue. Okay, next one, 27 September job worker received it and we are receiving it back only on 13th October 2024. So can we say beyond 1 year? Beyond 1 year. So can we say here this ITC will be disallowed? Here this ITC will not be available and the value will be added to your output tax liability. Yes. Then similarly, this was sent in 2023 but received in 2025. Again, this will be added. Then this was received by the job worker on 25th Jan 2024 and we received it on 23rd Jan 2025. No problem. Again this, job worker received it on 26th Feb but we received it back on 28th Feb. So after a period of 1 year. So can we say this is also a problem? So 24,000 plus 96,000 plus 42,000 is an issue. Yes. Okay. Then Further, in the month of May, the department decided to conduct an assessment of the returns filed by VAPL. During the course of assessment proceedings, they observed that there are some irregularities and therefore IGST demand order was raised of 1200 crore rupees. The order was issued on 23rd July and it was communicated to me on 28th July. Aggrieved by the order, we preferred an appeal before the first level, that is the AA, on 30 July. Immediately within 2 days, we filed an appeal. Appellate authority passed an order against my company demanding same amount 1200 crore on 25th August and it was communicated to me on 29th August. VAPL wishes to file an appeal against the same and the company admits the liability of 100 crore but litigates the balance demand amount and it goes to the GST 80. Now you have to give the answer. Determine the total amount to be added to the output tax liability in accordance with section 143. So basically it is talking about job work. Can we say 24,000 plus 96,000 plus 42,000? So 24,000 plus 96,000 plus 42,000. That gives me 1,62,000. 1,62,000 plus interest. 1,62,000 plus interest needs to be added there. Yes. Interest at what percentage? Normal interest at 18%. Interest at 18%. So can we say D is the correct answer? Yes. Okay. Then after that, the next one. Check the next one. The total amount of pre-deposit required before GST 80, second level of appeal. So there we were admitting 100 crore. Na? So 100 crore we will have to pay 100% and plus 10% of the balance amount. Can we say 1200 minus 100? That is 1100 crore multiplied by 10%. That will give me 110 crore but restricted to 40 crore only. Yes, amendment restricted to 40 crore only. IGST liability. So 100 crore plus 40 crore. 140 crore will be the pre-deposit amount. Right? And the next one, last date up to which we can go and file the appeal to GST 80 against AA's order. So when did we receive the AA's order? AA passed its order on 25th August. We received on 29th. So 29th August plus 3 months. Assuming no extensions. So 29th August plus 3 months. August, September, October, November. Can we say 29th November? 29th November will be the last date for filing the appeal. Manageable till here, everyone. Simple till here. Yes. Are you able to understand how are we supposed to do all these things? Yes. Okay. Okay, let's continue ahead, everyone. Let's start with the next case scenario. Case scenario number 18. Opulenza Limited, a registered supplier located in the state of Madhya Pradesh, is engaged in supply of taxable goods. It has been regularly complying with its statutory obligations under the GST law. For the financial year 24-25, it duly filed all its monthly GST returns within the prescribed timelines. In the course of scrutiny conducted in August 25, the proper officer noticed an inadvertent short payment of CGST and SGST totaling of 4,60,000 pertaining to the month of October 2024. On account of a bona fide error. Before issuance of the show cause notice by the proper officer, Opulenza, before issuance of show cause notice, it paid the tax of 1 lakh rupees on the basis of its own ascertainment along with interest and penalty, if any, on 15 September and informed the proper officer. So basically, short payment was of 4,60,000, but before issuance of show cause notice, it has paid 1 lakh. So can we say they are hinting towards section number 74A? Yes, in the ordinary course of its business operation on 10th October, Opulenza Limited engages Malhotra and Sons as an agent to sell the goods on its behalf. Acting in such capacity, Malhotra and Sons sold the goods to Bravian Associates on 25th October on behalf of Opulenza Limited. Subsequently, in Jan, in connection with a separate inquiry initiated against Opulenza, Sudarshan Chaturvedi, the CEO of the company, was summoned by the Central Tax Officer. Someone required him to present in person and produce the books for the purpose of the inquiry being conducted in respect of the said company. Assume that the due date for filing the annual return has not been extended and limitation period for issuing the order under section 74A has not been extended. Give the answers below. Now, first one, the last date for which the show cause notice can be issued by the proper officer. So, 42 months is the time period, 42 months from the due date of filing the annual return. Yes, now let's see that was for which financial year? That was for financial year 24-25. So, can we say time limit for, first of all, the due date for filing annual return for 24-25 is 31st December 2025. From there, we will take 42 months. 42 months is nothing but 3.5 years. So, first of all, 3 years will be 31st December 2028 and then plus more half a year. So, can we say 30 June 2029? 30 June 2029 will be the last date for issuing the show cause notice. C will be the correct answer, everyone. Yes. Then, if the short payment of tax is on account of fraud, other facts remaining the same, the last date for issuing the show cause notice, it will remain the same, na? Whether it is fraud case or whether it is non-fraud case, doesn't matter. The time limit for issuing the show cause notice is same 42 months. Right? Then the amount of penalty, if any, payable on payment of tax of 1 lakh rupee that it paid before issue of show cause notice, that will be nil because it is a non-fraud case, na? Inadvertent error, bona fide case. So the amount of penalty will be nil. Suppose if it was a fraud case, then it would have been 15% of the tax due. Then Dash is or are liable to pay the GST on sale of goods by Malhotra and Sons in terms of section 86. Okay, Malhotra means that agent transaction, right? So both will be liable. We have studied this in liability to pay the taxes. The principal and the agent will be jointly and severally liable. And then the last one, maximum penalty that can be imposed on Sudarshan Chaturvedi. Sudarshan Chaturvedi was that CEO who was summoned. What if he does not go and attend the summon? Then 25,000 each. 25,000 each is the maximum penalty. This is there under section 122. Subsection 3. Yes, see, there will be few things which maybe you would not have revised or maybe you are not able to remember, but now we are using a reverse approach, that is we are doing the question and from that we are trying to recollect the provisions. Yes, let's go to the next one, next question, next scenario. Core value traders. Core value traders is engaged in supply of taxable goods. It has its head office in Uttar Pradesh and branches in Rajasthan. And Bihar. It is registered under GST in Uttar Pradesh, Rajasthan and Bihar. Moreover, it has obtained a registration as ISD in Uttar Pradesh for distribution of credit pertaining to services which are billed commonly at the head office but utilized by the branches also. Basically, it has taken both the registrations, right? Then with effect from 1st September of the current financial year, the regular GST registration is cancelled retrospectively and the cancellation order is passed on 15 September. So with effect is this, but order date is this. Okay, at the time of cancellation, the supplier has not availed the ITC on certain eligible issues, invoices issued in Feb and March of the preceding financial year for inward supplies of taxable goods on which ITC is availed. Further, ISD registration is also cancelled with effect from 1st September, same. Okay. Now, subsequently, on filing an application for revocation, the cancellation of registration is revoked on 15 December. Wow, if my cancellation is revoked, then I have got more 30 days time, right? More 30 days time to avail the ITC. The firm wishes to furnish its GSTR 3B on 21st December of the current financial year and wishes to claim the ITC. Yes, it is possible because the time is available till 14th of Jan. That is 15 December plus 30 days. Annual return is filed on 31st December. Based on the facts, give the answer. In respect of cancellation of regular registration, last date of filing the final return. So, final return is to be filed within 3 months. 3 months, right? Or from the date of cancellation or from the date of order, whichever is later. So, later is 15 September plus 3 months. 15 September plus 3 months, September, October, November, December. So, can we say 15th of December? 15th of December will be the last date for filing it. Yes. Similarly, which of the following statement is correct in relation to final return to be filed by core value traders up to cancellation of ISD registration? For ISD registration, final return is not required. It is required only for the regular one. Then core value traders is entitled to claim the ITC in respect of the invoices issued in Feb and March of the preceding financial year in the return for the month of September furnished up to 14th of January, that we have already discussed, 30 days from the date after revocation. Manageable till here? Let's go ahead to the next case scenario. Next case scenario, simple one. Let's give it a try, everyone. Swar Sadhana Private Limited, a company registered under GST in Ludhiana, Punjab. Okay, this is registered in Punjab, is engaged in a business of organizing musical events and cultural programs. The company is owned and promoted by Pandit Hari Prasad Tiwari, a renowned classical singer of national repute. With a view to promote classical music amongst youth of the country, Swar Sadhana Private Limited decided to organize a live musical event titled Hari Prasad Tiwari Musical Concert at Gurugram, Haryana. So event is at Haryana. Okay, organizer is Swar Sadhana of Punjab. For the purpose of planning, coordination and execution of the event, Swar Sadhana entered into a contractual agreement with Supriya Private Limited, an event management company registered in Delhi. Okay, so Supriya Private Limited is registered in Delhi and it is going to provide comprehensive event management services and for a total consideration of 10 lakh rupees. Now, in order to host the concert, Supriya Private Limited booked the lawns of Hotel Damdam, a hotel registered in Gurugram. So Damdam is registered in Gurugram for holding the musical concert. The hotel charged a lump sum consideration of 4 lakh for providing the venue and related facilities. Swar Sadhana Private Limited fixes the entry fee at 5,000 per person. 400 tickets were sold and total collection was 20 lakh rupees. Applicable rate of GST on all supplies is 18%. Now you are required to give the answer. Okay. Now, place of supply of services provided by Swar Sadhana to audience for admission. Can we say when Swar Sadhana is organizing the event for the audience, the place of supply will be the place where such event is held. So where is the event held? Can we say the event is held at Gurugram, Haryana? So for the first one, it is going to be Gurugram, Haryana, right? And tax payable on said services. Can we say here Swar Sadhana is of Punjab, but event is going to be held in Haryana. So IGST will be applicable here. Yes. So Haryana and IGST. Haryana and IGST. Can we say C will be the correct answer? Total collection was 20 lakh multiplied by 18%. Next. Place of supply of services provided by Supriya Private Limited to Swar Sadhana. This was for organizing the event. When the event is organized here in India itself, the place of supply will be the location of the recipient. Location of recipient is Swar Sadhana. Swar Sadhana means Punjab. Ludhiana, Punjab. So Ludhiana, Punjab is the correct answer. Yes. One of them is situated. Supriya is situated in Delhi. Swar Sadhana is situated in Punjab. So can we say IGST will be applicable? Yes. 10 lakh was the total consideration multiplied by 18%. Then place of supply of services provided by Hotel Damdam to Supriya. So can we say in case of immovable property, the place of supply is going to be the location of the immovable property. Location of immovable property is Gurugram, Haryana. And in case of hotel, the location of supplier, Hotel Damdam is also in Ludhiana, is also in Gurugram, Haryana, and place of supply is also in Gurugram, Haryana, right? Both of them is in Haryana, so CGST, SGST will be applicable. CGST, SGST will be applicable, right? So C is the correct answer there. Chalo, then going on to the next one. Let's go to the next one. Next one is a very different case scenario. Case scenario number 21. Very different case scenario. Let's try to do that, everyone. Let's try to do that. Yes. Okay, let's understand this. So Supernova India Limited is a 100% subsidiary of Supernova LLC Japan, registered under GST in Gujarat. Okay, so basically Supernova is registered in Gujarat. Yes, it is registered in Gujarat. Supernova Inc. Singapore is another subsidiary of that Japan company. So one is in India and one is in Singapore. And it is engaged in supply of industrial goods to customers across the world. In India, Supernova Inc. Singapore sells the goods to a subcontractor registered under GST in the name of Alpha Limited in the state of Maharashtra. Alpha Limited imports the goods from Singapore and carries out the required technical process on such goods in the factory located in Maharashtra. So now you have to think from Alpha Limited point of view. It is importing the goods and doing some operations on it and then selling the goods. Okay, then the goods are sold by Alpha Limited to Supernova India Limited for further sales. So basically Alpha Limited is selling it to Supernova India Limited. As a holding company, Japan company is recovering an amount equivalent to 20% of the sales made by Supernova as commission on monthly basis. So the main holding company is taking some commission. Now, during the month of January, Alpha Limited imported the goods worth 10 lakhs from Singapore. The interstate purchases of Alpha from domestic market is 2 lakh. So import is 10 lakh, interstate purchase is 2 lakh during the month of January. The value of processed goods sold by Alpha Limited to Supernova is 10 lakh sales. And further, Supernova India Limited paid an additional amount of 2 lakh for transportation and handling to a third party, which was contractually agreed to be paid by Alpha Limited. Okay. Now, Alpha Limited has also charged an amount equivalent to 12,000 on such processed goods as some other taxes. So basically, now when we are supplying the goods to Supernova, can we say value will be 10 lakh plus transportation of 2 lakh plus municipal levy of 12,000. This is the value of the supply. That is 12 lakh, 12,000 will be the sales of Alpha Limited to Supernova India. Then Supernova India Limited sold the goods purchased from Alpha Limited in the month of January as per the details given below. 6 lakh worth goods to X Limited, a customer located in the state of Rajasthan, and 8 lakhs worth to Y Limited, a customer located in state of Gujarat. Yes, there is no opening stock and closing stock. Okay, so basically Alpha Limited was first importing it from Singapore. Then it sold it in domestic market. Then it did some domestic purchases also, and then it processed the goods and further it sold it to Supernova at so and so prices. Okay, Supernova, whatever these goods were purchased by Supernova, they sold in Rajasthan also, they sold in Gujarat also, right? Now, further an employee of Supernova had visited the manufacturing facility of Alpha and had stayed in the hotel located in Mumbai. In the month of February, at the time of checkout from hotel, the invoice was issued of 1 lakh. The hotel had issued invoice in the name of Supernova and charged GST at CGST, SGST. Out of such amount, the amount recoverable from the employee for non-official stay is 50,000 rupees. Okay. Fun Events Limited, an event management company located and registered at New Delhi, Delhi, had organized the cultural event in the month of Feb for Supernova in Mauritius. Opening balance of ITC of Alpha as well as Supernova is nil, and there is no other inward or outward supply transaction for Alpha Limited in January and February apart from these. Subject to the information, assume all the conditions for ITC is fulfilled. All the above transactions are exclusive of GST wherever applicable. GST is applicable. Intrastate this and interstate this, basically 18%. Custom duty is nil. IGST is applicable on import. No additional duty or cess is applicable. Give the answers below. Okay, so basically you have to think from Alpha Limited and Supernova Limited point of view. Now they are telling you to find out the tax liability, total GST liability net of ITC of Alpha Limited for the month of January payable through GST portal. Okay, so net final tax liability you have to find out of Alpha Limited. Let's start the calculations, everyone. So what was Alpha Limited doing? Alpha Limited was importing and then it was supplying here. Yes, it supplied it to Supernova at 12,12,000 that we have already calculated. So can we say my outward supply is 12,12,000 on which IGST is applicable? Yes, so 12,12,000 multiplied by 18%. So can we say my output tax payable is equal to 218160. Yes. Now here, what is the place of supply? What is the place of supply? What is the location of the supplier? Where is Alpha Limited situated? Where is Alpha Limited situated? Alpha Limited is situated in Maharashtra. Okay, I'll write it here. Alpha Limited is situated in Maharashtra. Okay, where is Supernova India situated? It is registered in the state of Gujarat. Okay, and Alpha is delivering the goods to Supernova. So can we say movement of the goods is getting terminated? Movement of the goods is getting terminated in Gujarat. So that will be the place of supply. LOS is Maharashtra, place of supply is Gujarat. So that's why it is interstate supply, and that's why I said IGST. So on 12,12,000, we will calculate 18% taxes. This is my output tax liability minus input tax credit. Now, can we say we have imported some goods plus we have done some local purchases. Acha, we had imported goods worth 10 lakhs. So on that we will get ITC of 18%. That will be 1,80,000. Acha, how much did we procure from India? We procured 2 lakh rupees goods from interstate purchases from India. So 2 lakh multiplied by 18% interstate. So 36,000 ITC you will be available. So 218160 minus 1,80,000 minus 36,000. So can we say 2160 is the net tax payable by Alpha Limited? 2160 is the net tax payable by Alpha Limited. Did you understand this, everyone? Yes. Acha, then after that, for Supernova also they are asking the gross IGST without any ITC. Supernova. What is Supernova doing? Supernova was purchasing from Alpha and then it was supplying to the customers. To X and Y it was supplying. Yes, let's try to calculate. When it is supplying to X, Supernova is situated where? Supernova is situated in Gujarat. Now it is supplying it to Rajasthan. Can we say IGST on 6 lakhs? So 6 lakhs multiplied by 18%. Can we say tax here is 1,08,000? And then it is providing it to Gujarat. Yes, Supernova is of Gujarat and it is providing it to Gujarat. Yes. Okay, now listen. See the question, everyone. Again, see the question. Can you see what are they asking? They are asking you the gross IGST liability. Now here, the first one was the IGST liability, but when he is supplying the goods to Y Limited, that is also a customer in Gujarat and we are also in Gujarat. Supernova is also in Gujarat. So when Gujarat is supplying to Gujarat, that will be a CGST and SGST liability. Right? So they are just asking about the IGST liability. So IGST liability will be this 1,08,000 till now. Yes. Acha. Now listen. Please try to understand. Can we say we were also required to pay some commission to our Japan company? Where did they tell us this? Yes, see this. As a holding company, Supernova Japan recovers an amount of 20% of the sales made by Supernova as commission on monthly basis. So basically we have to pay the commission, means this is import of services. This is import of services on which we will have to pay the tax under RCM. And this will be IGST liability only. Acha, now how much is the monthly sales done by us? Monthly sales done by us will be both the sales, na? That is how much? Where is it? Monthly sales done by us is 6 lakh plus 8 lakh, 14 lakhs. So 14 lakhs multiplied by 20% was the commission amount. So can we say commission amount will be 2,80,000? On this 2,80,000 will be paying 18% IGST under reverse charge mechanism. Calculate how much does it come to? 2,80,000 multiplied by 18%. That gives me 50,400. So for the first transaction it was 1,08,000 and for the second transaction it is 50,400. Total comes to 158,400. Yes, so C is the correct answer. Manageable. Okay, then whether ITC is available on the GST paid by Supernova Limited on the invoice amounting to 1 lakh to hotel located in Mumbai, Maharashtra. Supernova is in Gujarat. Hotel is in Mumbai, Maharashtra. Can we say hotel would have charged CGST and SGST? They will always charge CGST and SGST. Right? So in this case, can we say no ITC is available? We have been doing this regularly in many questions. Right? And the last one, check what is the last one. Whether GST is applicable on the event organized by Fun Events Limited for Supernova in Mauritius. What is the place of supply? Obviously GST will be applicable and place of supply will be Gujarat only. Yes, why place of supply? Place of supply will be the location of the recipient. Location of the recipient. Location of recipient is Gujarat. Manageable till here. So can we say B is the correct answer? Simple till here, everyone. Are you able to do till here? Yes. Chalo, let's go to the last one. Next one. Chalo, let's continue. Let's read the case scenario number 22. Nice case scenario. Important one. Doodle Inc. is an entity incorporated in USA and is engaged in provision of various IT related services directly as well as through its subsidiaries located across the world. In India, Doodle India, okay, main company is Doodle Inc. In India, Doodle India, a subsidiary of Doodle Inc. is registered under GST in the state of Karnataka under GST and is providing services to various customers in India. Now, Doodle Inc. provides, the main company, it provides cloud-based storage services to its customers in India. The customers can subscribe to the services by making the online payment directly to Doodle Inc.'s bank account through internet banking and other modes. The terms and conditions for such services are entered between Doodle Inc. and the customer directly without involving of any third party. So, main company is providing services to the customers for which the customers can do the payment. In case of any issue, the customers can call and log the issue at the customer help center which is operated by Doodle India, okay, the Indian office, on the principal to principal basis. For operation of such customer help center, Doodle India is paid on cost plus 10% basis by Doodle Inc. on monthly basis. Because Doodle India is operating a help center in India, so for that it will get some amount. Now, further, Doodle India is engaged in promotion and marketing of cloud-based services on principal to principal basis for the main company. The payment for such services is made by main company to me on monthly basis at cost plus 20%. So basically, first I was taking the money for operating that help center, and now I am taking the money for doing the marketing activities for the main company. Okay, and the activities are carried out in the name of the main company without any reference to the operations in the name of Doodle India. Now, Doodle Inc., the main company, owns the online space for advertisement on internet. It has agreed to sell that online advertisement space to Doodle India for 5 crore rupees per month. Doodle India sells such advertisement space to its customers on its own account. So basically, Doodle Inc. is selling it to Doodle India, and then Doodle India is going to sell it to its customers. Yes. Acha. Now, this sale is done at what value? This is done at rupees 5 crore. Now, Doodle Inc. provides technology support. Okay, main company is providing technology support to Doodle India and charges royalty from us for such technology support at a fixed charge of 25. So, for this technology, basically, we will have to pay 25 lakh rupees per month. And this is exclusively related to this advertisement space. Means only for this transaction, this 25 lakhs is there. Now, in addition to the above information, during the month of January, Doodle India has incurred the following expenses. For running that call center, it is 75 lakhs. For doing promotional and marketing services, it is incurring 50 lakh rupees. Doodle India earned an income. Okay, it earned an income of 8 crore from sale of online space. So, when it is selling it to the customers, it is earning 8 crore rupees. Okay, it is earning 8 crore rupees. Now, Doodle Inc. main company earned an income of 10 crore from NTOR recipients, customers from cloud-based service. Remember, cloud-based service was provided by the main company. We were just acting as a help center. So, main company earned 10 crore. Opening balance of ITC is nil. Now, GST is applicable in all the cases 18%. Okay, all the conditions of ITC have been fulfilled. All the amounts are exclusive of GST. Exports are done without payment of IGST under bond or LUT, and payments received are made in convertible foreign exchange. Okay, so can we say first of all, any transaction between, let's say if we are supplying Doodle India is providing any services to Doodle Inc., can we say that will be considered as export of services? Why? Location of supplier is in India, location of recipient is outside India. If place of supply is also outside India, here anyway the amount is received in convertible foreign exchange, and there, because it is holding and subsidiary company and it is already registered outside India, so it is not merely establishment of distinct person, so it will be considered as export transaction. Yes. Now see what is the question that they are asking to us. Now, what shall be the output tax liability of Doodle India? Okay, of Doodle India without any adjustment of ITC. So basically, we need to find out the outward supply. What is the value of outward supply? So can we say the main supply which Doodle India is doing, that is to the customers in India, that is 8 crore. Can we say that will be normally taxable? So on 8 crore, 18% tax is going to come. Acha, then after that, can we say Doodle India was also providing the services to the main company by opening the help center and by doing the promotional activities? Yes, for that also it was getting some consideration. But can we say that will not be taxable because that is a service provided by Doodle India to Doodle Inc. Export of services. So can we say on export of services anyway there will be no IGST, right? On export of services there will be anyway no IGST. So can we say this is the only amount on which GST will be applicable? So 8 crore multiplied by 18%, 1 crore 44 lakhs will be the final answer for Doodle India. Yes, for that help center and for conducting those promotional activities, etc., we are providing the services to a person who is situated outside India. Yes. Okay. Then after that, next one. Please select the correct statement specifically in relation to sale of online advertisement space service provided by Doodle Inc. to Doodle India. Okay, Doodle Inc. was supplying the space to Doodle India for 5 crore. So can we say this is importation of services for us? Yes, that is importation of services for us. So that is just like your OIDR services. So OIDR services will be taxable here in India. Yes, it will be taxable here in India, no doubt in that. So Doodle Inc. is providing OIDR services to Doodle India. Now Doodle India is registered. So can we say Doodle India will have to pay the tax on it? Yes. See, if OIDR services is received by unregistered person, then that company will have to come to India and pay the taxes. But in this case, it is received by a registered person. So that Doodle India will have to pay the tax on it on reverse charge basis. Can you see this? Yes. Okay. Then what shall be the amount of GST payable by Doodle Inc. for the month of January? Now, how much amount of tax will be paid by Doodle Inc.? Now, can we say Doodle Inc. how much is it selling? Let's see here. Doodle Inc. Okay. How much amount is it selling? So one sale. It was providing something directly to the customers, some 10 crore figure. Yes, Doodle Inc. has earned an income of 10 crore from NTOR. So can we say on this, it will have to come to India and it will have to pay the tax in India. So on this 10 crore, 18% tax will be applicable. This is one thing. Yes, another thing, can we say Doodle Inc. was also selling this online space to Doodle India. So on this 5 crore, can we say Doodle India will be required to pay the tax? On this online advertisement space which was sold by Doodle Inc. to Doodle India, can we say Doodle India will be required to pay the tax on it under reverse charge mechanism? Yes, so Doodle India will pay the tax on it under reverse charge mechanism. That is inward supply. Okay, that is inward supply for Doodle India. So it will pay the tax on it. Okay, and the next one, similarly, when it was providing those technology related services, okay, when it was providing those technology related services for which it was charging royalty. Remember this, it was charging royalty of 25 lakh. Can we say this is also an outward supply of Doodle Inc? Again, can we say this is import of services for Doodle Inc? Right? So here Doodle India will pay the tax on it under reverse charge mechanism basis. Right? So can we say directly only Doodle Inc. is providing the services directly to the customers for 10 crore rupees. Only on that it will have to pay the tax. Right? Only on that it will have to pay the tax. For that, Doodle Inc. will have to appoint a representative here in India and it will have to pay the tax on this 10 crore. So 10 crore multiplied by 18%, that will give me 1 crore 18 lakhs. 1 crore 18 lakhs. 1 crore 80 lakhs. Right? So can I say B will be the correct answer? Did you understand this? Yes? Rest all the services. Rest all the services. The tax liability will come on the recipient because the recipient is registered. Yes. Chalo. Then after that, going to the next one. Let's go to the next one. What shall be the total ITC that can be availed by Doodle India from the transactions undertaken in the month of January? Okay. So now, can we say Doodle India? We are supposed to find out its input tax credit. So can we say on its inward supply? Now, what all things were the inward supply? Let's first try to list that out. Can we say first it has purchased the online space from Doodle Inc. Yes, online space purchased from Doodle Inc. on which it was paying the tax under reverse charge mechanism. How much was the value of that? How much was the value of that? Value of that was 5 crore rupees. We were purchasing it for 5 crore, na? Here it is. Here. This 5 crore, we were purchasing it for 5 crore and then we were selling it to our customers for 8 crore. So, on this 5 crore, 18% I would have paid under RCM. After paying it under RCM, can I take the credit of the same? Yes, we can take the credit of the same. Second, can we say we also received some technology related services from them? Yes. We imported certain technology services that we received from Doodle Inc. That was also import of service on which we will pay the tax under RCM and then we will take the ITC. That was how much? That was 25 lakh. Yes, that was 25 lakh. So 25 lakh multiplied by 18%, that gives me 4.5 lakhs. Yes. Then after that, we were at the help center. How much expense did we incur for the help center here in India? Help center expenses relating to this, that is 75 lakh. So on this also I would have paid the GST. 75 lakh multiplied by 18%, that will give me 13.50 lakh. And then we also did some promotion activities. For that also I incurred certain expenditure of 50 lakh rupees. So can we say 50 lakh multiplied by 8%, that is 9 lakh. This is my total ITC available, 90 plus 4.5 plus 13.5 plus 9. So can we say 117 lakh is the total amount of ITC available? Manageable till here? Yes. So in short, if I want to tell you again, everyone here quickly, if I want to tell you here again, see, when Doodle India is providing that promotion and marketing services to Doodle Inc., that is not taxable because that is considered as export. Okay, this is considered as export and therefore not taxable. Okay, but ITC of this will be available, which we just now took. Okay, next, Doodle Inc. owns the online space and it has sold it for 5 crore rupees to Doodle India. Can we say when it is selling online space to Doodle India, on that Doodle India will be required to pay the tax under RCM. So Doodle India will pay the tax under RCM and then it will take the ITC also on the same. Right? Then after that, Doodle Inc. was providing technology support to Doodle India. Can we say this 25 lakh is also considered as import by Doodle India? So it will have to pay the tax under RCM and then it can take the credit just like we did now. Then after that, these were the expenses which were incurred by Doodle India. So normal ITC will be available on this. This is by inward supply. Then Doodle India earned 8 crore rupees from sale of online. On this, it will have to pay the normal tax in India. Normal tax payable that we calculated. Right? Then Doodle Inc. directly collected 10 crores from the NTOR. So for this is OIDR. So can we say Doodle Inc. will have to pay tax on it by appointing a representative in India? Manageable till here? Yes, this is what we did, nothing else. Chalo, so till here, and yes, please remember holding company and subsidiary company, just like Doodle Inc. and Doodle India is there. Yes, these are not merely establishment of distinct persons, because one of the company is registered in the other country. Yes, so they are not merely establishment of distinct persons. Yes, so with this we are done with how many case scenarios? We are done with 22 case scenarios, by which we have completed 40% of it. Yes, somehow we are approaching 50%. Yes, at least, see, because we have started, we'll reach. Yes, so at least this is done. Manageable till here, everyone? Yes, okay. Chalo, I'm reading the next case scenario. Case scenario number 23, everyone. Let's do it. Abhivyakti Private Limited is engaged in supply of food products under the brand name Superfoods. It has a plant at Howrah, West Bengal. It is a registered supplier under GST and is a monthly return filer. It has allotted residential quarters to its employees within the plant premises. The aggregate turnover of the company during the preceding financial year was 7.5 crore rupees. Okay, following details are provided by the company for the month of September. Sale of superfoods foods product, note 1, we have to refer, we'll check that, 60 lakhs. Purchase of raw material from the market, this is purchases. Rent received from its employees for residential quarters, we have studied, this is anyway exempted. Electricity charges is anyway exempted from GST. Security services. Security services provided by Messrs Suraksha Security Kolkata, a partnership firm registered under GST. So security services, when it is provided by a person other than body corporate to a registered person, so your RCM will be applicable. So we will have to pay the tax. Interest on delayed payment collected from customers, yes, this is taxable. This 60 lakh was also taxable. This is also taxable. Then interest received on FD, this is anyway exempted. Payment to Kolkata Chamber of Commerce, a non-body corporate, towards sponsorship for Investor Summit at Kolkata. So we have paid. To whom? We have paid to Kolkata Chamber of Commerce. So sponsorship services, when it is provided by a person other than body corporate, to a body corporate or to a partnership firm. So we are a body corporate. So can we say here RCM will be applicable? RCM will be applicable. License fee paid to food and FSSAI. So this was exempted. We have studied this in exemptions chapter. Legal fee paid to advocate Mr. Dhruv Banerjee. Legal fee paid. So when legal fee is paid, my last year turnover was 7.5. So when legal services are provided by an advocate to a business entity who is a big business entity, so their RCM is applicable. Then transportation charges paid to an unregistered GTA for transportation of raw materials from mandi to factory. Transportation charges paid to an unregistered GTA. What will be the provision for this? This is from mandi to factory. Yes. Please pay attention here. Here they are telling who is providing you the service. Unregistered goods transport operator. He is not a GTA for transportation of raw materials from mandi to factory. Yes, so can we say only GTA services and courier agency services were taxable? Rest all the transportation of goods by road was exempted. So even this is going to be exempted. It is your inward supply, but it will be exempted from GST. Similarly, here also this person is providing the service. Even this is going to be exempted. He is not a GTA. Then, following additional information has also been provided by the company. Out of the total sales, food products worth 3,50,000, that is 10,000 kgs, were supplied to Department of School Education, Government of West Bengal for a further supply to affected families during the flood. A price-linked subsidy of 10 rupees per kg was received from the Government of West Bengal, which has not been considered in the total sales of 60 lakhs. Okay, so we have received a subsidy of rupees 10 per kg. Can we say 10 rupees per kg? So 10,000 kgs is there. 10,000 kgs is there. So can we say 1 lakh rupees the value of subsidy? And that is not considered here. So can we say we will have to exclude it for the purpose of GST? GST will not be applicable on that subsidy. Valuation chapter section number 15 2E. Then the company had awarded a maintenance contract to Supreme Power Limited Delhi on 10 June for repair of central AC unit installed in the factory for 60,000 with a completion period of 30 days. The maintenance work was completed on 8th of July. However, due to some dispute regarding quality of work, invoice was issued only on 5th September. Can we say invoice was issued late in case of service? If the invoice is issued late, then what is the time of supply? Time of supply will be provision of service or date of payment, whichever is earlier. That is 8th July or 15th September, whichever is earlier. So time of supply will be 8th of July. Then the proper officer levied on the company a penalty of 5,000 for wrongful utilization of ITC. Okay. The company had deposited the tax liability for the month of August on 28th September, late. For August, it has to be deposited by 20th September, but it was deposited on 28th. Okay, rate of GST 18%, all the amounts are exclusive of GST. Let's try to give the answer. The value of taxable outward supply. The value of taxable outward supply made by Abhivyakti Private Limited in the month of September. Okay. September outward supply. Let's calculate, everyone. This is the detail given for September. So let's start with sale of superfood. 60 lakhs minus 1 lakh, 59 lakh we will start with. Okay, then this is my input. Rent received is my income, but this is exempted. Electricity charges paid, this is my input. Security services provided is my input. Interest on delayed payment received from the customers, this will be taxable. This will be taxable. So plus how much? Plus 3,500. Then interest received, this is exempted. Payment done, this is my inward supply. License fees, my inward supply. Legal fees, my inward supply. Transportation charges paid is my inward supply. Subsidy effect we have already given. Maintenance contract is my inward supply. That's it. That's it. So 59 lakh 3,500. 59 lakh 3,500 is going to be my value of supply. Yes, then the next one. Value of taxable supply received in the month of September on which tax is payable under RCM. Inward supply for the month of September where RCM is applicable. Can we say one is the security services? One is the security services, that is 1 lakh rupee. Then your the sponsorship will be there 25,000. And then your legal fees there, that's it, we have already discussed. 1 lakh plus 25,000 plus 30,000. Do the total. 125 plus 30, 1 lakh 55,000. 1 lakh 55,000 is the correct answer. Then what is the time of supply? We have already calculated, it was 8th of July. Then what is the amount of interest payable for delay in payment of tax? So there was a delay of 8 days now. There was a delay of 8 days. But what was the amount of tax? 3,30,730. Let's do the calculation. 3,30,730 multiplied by 18% multiplied by delay of 8 days. Calculate. 330,730 multiplied by 18% multiplied by 8 divided by 365. That gives me 1305. If I round it off, are you getting the answer as that? Yes, okay. Next, last one. Maybe you must have not have done this. In the context of imposition of penalty by on Abhivyakti Private Limited by proper officer of 5,000, which of the statement is correct? What was there here? The proper officer levied a penalty of 5,000 on the company for wrongful utilization of ITC of 5,000. So please remember, whenever you have done any offense, okay, whenever you have done any breach, any offense where the amount is less than 5,000, means it is a minor breach. Okay, when it is less than 5,000, it is minor breach. But when it is more than or equal to 5,000, it is not a minor breach. Okay, here there is an offense of 5,000, means it is not a minor breach. Okay, it is not a minor breach. So penalty is leviable because it is not a minor breach. Actually, it is given under section number 126, which is a one-time read provision. But anyway, okay, we have done it in the question. Okay, we have done it in the MCQs. So our provisions are getting covered in a reverse manner. Done. Manageable till here? Yes, nice case law, nice case study, nice case scenario. Multiple things are getting covered now, here and there. Somehow multiple things are getting covered. Yes. Sure. Can we go ahead, everyone, now? Can we start, everyone? Let's start with the next one. Yes. Case scenario number 24. Let's do it. Okay. I'm reading it. Mr. Ashok, proprietor of Messrs. Office Link Enterprises, is engaged in trading of office stationery items in its stationery store located in Salt Lake City, Kolkata. The said store is taken on lease from Kolkata Municipal Corporation. Okay. During the previous financial year, the turnover was 14 lakh rupees. Mr. Ashok supplies goods within the state of West Bengal only, but purchases stationery items mostly from Delhi and Mumbai. He owns a duplex house in Newtown, Kolkata. He stays on the ground floor and has let out the first floor to an employee of ICAI Bank registered in Delhi for residential purposes. The rent for the same is paid by ICAI Bank to Mr. Ashok. Okay. During this year, he has applied for GST registration on voluntary basis on 2nd April and the registration was granted to him with effect from 9th April. So, 9th April will be the effective date of registration. Okay, now the details of his stock position is on 2nd April is this and on 8th April is this. Office stationery purchased, books, periodicals, etc. purchased. The details of transactions carried out by Mr. Ashok from 1st April to 8th April and from 9th April to 31st March. This much is the sale done to registered persons intrastate. This is the sale done to unregistered person intrastate. Legal fees paid. This is my inward supply. Legal fee paid to an advocate in Kolkata. But my last year turnover was only 14 lakh. Yes, purchase of stationery items, purchase of furniture for own use in the office, purchase of stationery items, Delhi, lease rent of paid to Kolkata Municipal Corporation, transportation charges paid to GTA who has not exercised the option to pay the tax itself, interest on borrowings from BBI Bank, accrued interest on FD, rent received from that bank for the employee. Then Mr. Ashok went to Mumbai for a business meeting, stayed in a hotel. Hotel charged 1 lakh rupees for the stay. All the amounts are exclusive of GST. There is no other supply apart from these, and GST is applicable on all the inward and outward supplies except on transportation of goods at the following rates. So 12% is the rate of GST, and now we are required to give the answer. Let's see what they are asking first of all, everyone. Let's see. Now, first of all, the value of outward supply tax on which GST payable by Mr. Ashok for the financial year is. Okay, so what are you supposed to calculate here? We have to calculate the value of our outward supply. Okay, we have to calculate the value of our outward supply on which tax is payable. Let's calculate. Let's calculate my outward supply. So can I say for this first period there will be no tax because I am getting registered only from 9th of April, right? So can I say on this the tax will be applicable 84 lakhs. Then on this 14 lakhs the tax will be applicable. Okay, then this is anyway my inward supply. This is my inward supply, 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 right? Then transportation charges, inward supply, interest paid on borrowings is my inward supply, accrued interest on FD, this is exempted, we already know it, this is exempted, and rent received. Can we say here we are receiving the rent from ICAI Bank for its employee, and employee is going to use it, for what purposes? Employee is going to use it for its residential purposes. Okay, acha, but when the property is rented to a registered person, okay, at that time the exemption is not available, right? But we had studied that whenever renting of immobile property, renting of residential dwelling is happening to a registered person, can we say here the recipient will be ICAI Bank because ICAI is the one who is liable to pay the consideration. So ICAI will be considered as the recipient. So your residential dwelling is rented to a registered person. When it is rented to a registered person, we know that RCM will be applicable. So here we are not required to pay the tax and ICAI will pay the tax under reverse charge mechanism. Yes, so what is taxable here? 84 lakh plus 14 lakh, 98 lakh. That's it. Only that much is taxable. So my outward supply will be 98 lakh rupees. Manageable till here? Yes. Before 9th April, nothing will be taxable. Please remember this. Yes. Okay. Then the next one. Which of the following statement is correct in the terms of facts? He cannot opt to pay the tax in financial year 26-27 under composition scheme. He is entitled to take ITC on 1st April. He shall be liable to pay the tax under RCM during the financial in respect of purchase made from unregistered person. He is entitled to take ITC. Yes, he is entitled to take the ITC of inputs held in stock as on 9th of April. One day prior to his registration, he can take the ITC. So D is the correct option. Then the next one, check what is the next one. The value of supply on which Mr. Ashok is liable to pay the GST under reverse charge for financial year 25-26. Reverse charge on which he is liable to pay the reverse charge liability. On what all amounts will he be liable? I think there were two of it. Can I say on legal fees? Legal fees will be exempted because I am a small business entity not liable for registration in the last year. So this will be exempted. No RCM provision will also become applicable. Then can we say on this I will have to pay the tax under RCM? Government is renting it to me. So on this RCM is applicable and this GTA RCM will be applicable. On these two RCM liability will come into picture. So on 2,70,000 I will have to pay the tax under reverse charge mechanism. Yes, perfect. Then the next one, which of the following inward supply is not subject to payment of tax under RCM? Shop rent paid to KMC, this is RCM. Okay, they are asking which is not subject to RCM. Legal fee paid. Yes, this is not subject to RCM. This is one particular point. Purchase of stationery items from unregistered, even this is not pertaining to RCM. And transportation charges paid to, this was under RCM. So 2 and 3 is the correct answer. 2 and 3 are those where RCM is not applicable at all. Yes, we have already discussed it. Yes, then after that, next one. Whether ITC is available on, we already know no ITC is available always in case of hotel whenever you go to the other state. Do you recollect this? Yes. Done. Manageable everyone. Simple till here. Are we able to solve it? Yes. More or less also if you are able to solve it, very good. Rest you can cover up with me in the lectures. Yes. So let's start with the next one everyone. Case scenario 25. XYZ Limited is registered with the jurisdictional GST authorities in the state of Rajasthan and operates in multiple businesses. The principal business of XYZ Limited is that of fabricating and installing the body for large transportation vehicles. The chassis of the vehicles are provided by the customers to XYZ Limited. XYZ Limited procures the material for fabrication and installs the same on the chassis against a lump sum consideration agreed amount for material and services. In addition to above business, it is also registered as a GTA. Is engaged in providing services of transportation of goods by road through its own fleet of trucks. It has not exercised the option to pay the tax on the said services. So GST applicable will be 5%. During the month of January, XYZ Limited undertook the following transactions. Provided services. It provided the services of transportation of goods to A Limited, a registered person under GST. In the state of Gujarat and received an amount of 10 lakh as consideration for the same. So now it has provided the GTA services to a registered person. Okay. And we have not exercised the option to pay the tax. Purchased tires for its own fleet of trucks for providing services of transportation of goods and paid 1 lakh for its own purchases. So now we are the GTA. Okay. And we are purchasing tire for our own vehicle. Then we purchased a machinery with advanced technology for fabrication business. 50 lakh rupees. Then XYZ Limited procured certain engineering services from Loomis Inc., a company located in Italy. Consideration paid means importation of services is happening. Maybe we'll have to pay the tax under RCM. Further, certain goods to be used for fabrication business were sent by XYZ for carrying out repair work on the same to Loomis Inc. The consideration paid for such repair work was 5 lakhs. So basically we sent the goods, they did the work and returned it back to us. provided services of transportation of goods to ABC Limited, its related party, and received 5 lakh rupees. The arm's length amount of such transaction when provided to unrelated customer is 7 lakh. Okay. XYZ Limited sold scrap relating to fabrication business of 5 lakh rupees. Purchased goods relating to fabrication business for 10 lakhs, out of which 1 lakh was stolen. So ITC, even if it is available, it will be available only on 9 lakh. Received an advance of 10 lakh rupees for fabrication work on new chassis and 3 lakh rupees towards transportation of goods services from W Limited, a registered person under GST in the state of Maharashtra. So some advance money is being received. Then opening balance etc. is nil. All amounts are exclusive of GST. Tax rate is 18%. Based on the facts, please give the answer. Let's try, everyone. Let's try. Determine the GST liability of XYZ Limited on services of transportation provided to ABC Limited. Can we say our GST liability is nil? Because we have not opted to pay the tax, so the liability is going to be on the other person. Liability is going to be on ABC Limited and not on XYZ Limited. So A is the correct answer there. Right? A will be the correct answer. Last 3 questions. Let's do it. Second one, determine the net GST liability payable in cash of XYZ Limited for the month of January. How much is the net GST liability? Let's do the calculation of that. So can we say, first let's find out the output tax liability that is payable. Okay, let's find out the output tax liability payable. So can we say on transportation business there will be no liability, because anyway the liability is going to be on the other person. Now let's see about the other things. What about the other things? So on this there will be no liability. This is my inward supply, this is my inward supply, this is my inward supply. Yes, on which I will have to pay the tax under reverse charge mechanism. Then after that we provided transportation services. To our related party. Can you see this? Yes, on that also we don't have to pay the tax, gone. Then after that, scrap. For scrap, 5 lakh rupees is the consideration. For scrap, 5 lakh rupees. So on 5 lakh rupees tax will be applicable. So one figure is this 5 lakh rupees. On this the tax will be applicable. Right? Then on this advance of 10 lakh rupees, GST will be applicable, which is for fabrication work, not for transportation. Again, for transportation there will be no liability. So can we say on this 5 lakh and 10 lakh GST will be applicable? Yes. 15 lakh multiplied by 18%, that gives me 2,70,000. 2,70,000 is my output tax payable at least. At least this is my gross tax liability, everyone. Yes. This is not my final answer, but at least this is my output tax liability, that is 2,70,000. Then about my input tax credit, how do I go about my input tax credit? How much ITC is available? Let's try to do that. Okay. So now, first of all, this is my outward, this is my inward supply, second one. Now, can I say this ITC will not be available? For tires, this will not be available because my outward supply is totally exempted. A transportation service for me was exempted now, so any inward supply relating to that ITC will not be available. Acha, but on this 50 lakh I will get. On this 50 lakh multiplied by 18% means 9 lakh ITC I am going to get. This is one figure. Then again on this 15 lakh I can get it. On this 15 lakh I will get it. 15 lakh multiplied by 18%. How much does it come to? That comes to 2.7 lakh. This I will get. Right? Okay. Then after that, for this repair work, please try to understand, this is a very nice point. Now here we have sent some goods. We have sent some goods to Loomis Inc. for repairing it outside India. So can we say we have sent it and consideration paid? Can we say we are sending it outside India for which we are paying the consideration? So there is no GST applicable on this. Right? Then after that, this one was an outward supply, leave it. Scrap is over. Acha, then on this 9 lakh, again, on this 9 lakh, 10 lakh minus 1 lakh, ITC will be available, 9 lakh multiplied by 18%, 1,62,000. That's it. Let's do the total of our ITC. Can we say here it is 9 lakh, here it is 2.7, that is 11.7. Then here it is 1.62. So can I say my total ITC till now is 13.32 lakhs? 13.32 lakhs. Yes. Can I say here there is no tax payable, but there will be some liability under RCM, that import of services, Lumus Inc. 2.7 I will have to pay in cash. So can I say my total liability payable in cash will be 2,70,000 rupees? Yes. Okay, then what shall be the total eligible ITC available? Eligible ITC available, that we have already calculated, it was 13,32,000. Here it is 13,32,000. And last one, whether Lumus Inc. is required to obtain registration here in India, whether it is required for discharging the GST liability. No, it is not required. It is not required. Why? Because Lumus's GST liability was zero. Anyway, the recipient was paying it under RCM. So he is not required to get himself registered. Manageable till here, everyone. Done, done. Yes. So 55 out of 55 case scenarios, 25 case scenarios are done. I hope you all are enjoying it. Brainstorming session, yes? Okay. Okay, so let's start with the next case scenario, everyone. Going on to the next one, case scenario number 26. Bhakti and Sons of Kolkata, a partnership firm registered under GST, deals in supply of electronic goods such as TV, refrigerator, washing machine, etc. It also provides services of repairs and maintenance of the said goods. So it is dealing into those goods plus doing the repairs and maintenance. Its aggregate turnover during the preceding financial year was rupees 4.2 crore. It furnishes the following information for the month of December. Outward supplies during the month of December are as under. Outward supplies, okay? That is your sales. Supply of goods to unregistered person residing in and around Kolkata. So this is B2C sales. Supply of goods to unregistered dealer of Bihar. Supply of goods to registered dealer in West Bengal, and repairs and maintenance services provided. Anyway, whenever you are doing your outward supply, even if it is to registered or even if it is unregistered, doesn't matter. Anyway, you have to pay the tax on it, right? All these figures are in lakhs. So on all the four of these, GST will be payable. Now, inward supplies during the month of December. Okay, let's try to understand this. What about the inward supplies? Yes. Chalo. Now, purchase of TV sets from registered dealers, interstate supply. During unloading of TV sets, one TV worth 25,000 was damaged, but dealer refused to replace the same. We have done the same transactions. So, 30 lakh rupees minus 25,000. Okay, on this amount you can get the ITC. And can we say this ITC, because this is the interstate supply, this ITC will be in the form of IGST, right? Then the next one, purchase of refrigerators from registered dealers, intrastate supply. So on this my CGST and SGST credit will be available because it is intrastate supply. Similarly, purchase of washing machine from unregistered dealers. So can we say on this there will be no ITC available because we have purchased it from unregistered person. Then transportation charges paid to Om Logistics, unregistered GTA. So unregistered GTA is providing the services to us. Can we say when unregistered GTA is providing the service to us, we are required to pay the tax on it under RCM? Okay, so they will give the rate, but still on this 2 lakh, can we say 5% tax, two effect will be there. First of all, we will have to pay the tax in cash, right? And secondly, after paying the tax, we can take the input tax credit of the same. Then after that, payment made to Star Security Services Private Limited, not registered under GST, not registered under GST, for providing security services. So what did we study for security services? If it is provided by any person other than a body corporate. But can we say here the service is provided by a body corporate? Yes, it is provided by a private limited company. So can we say RCM provisions are not applicable here? Okay, if RCM provisions are not applicable, then FCM is applicable, and that person is anyway not registered under GST. So can we say on this there will be no tax applicable because there is no RCM, and FCM is not possible because the other person is unregistered. Then loading and unloading charges paid to laborer, shop rent paid to Kolkata Municipal Corporation. We know that on this we will have to pay the tax under RCM in cash, and then we can take the ITC of the same. And similarly, fee paid to Mr. Das, a senior advocate of Kolkata High Court for legal service. Yes, so whenever we are paying the legal fees to a senior advocate, what did we study for this? So whenever legal services are being provided by a senior advocate to a business entity whose last year's turnover was exceeding the threshold limit for registration. Can we say our last year's turnover was 4.2 crore? So I am a big business entity. So when that person is providing this service to me, can we say this will be taxable under reverse charge mechanism? So same effect will be there, that is pay the tax under RCM, and then we can take the ITC of the same. Then following additional information is also provided. The Assistant Commissioner of Commercial Tax Kolkata has issued a show cause notice to us due to non-display of registration certificate in the prominent location and GST on the name board at the entry of its principal place of business. Bhakti and Sons plea is that the display of GST to general public is not mandatory and it is required for the knowledge of customers, and it is already mentioned in the tax invoice. So can we say our plea is totally incorrect here, because we had studied this in the registration chapter, that your registration certificate should be displayed at a prominent place outside your place of business, or as soon as you enter your place of business it should be displayed there. Okay, if not displayed, then it will lead to a general penalty. Okay, general penalty actually comes under section 125, and there is a general penalty of rupees 25,000. Yes. Then Bhakti and Sons paid the sponsorship fee of 5 lakh rupees to Finmin Limited, registered in Kolkata, for entertainment event organized by Finmin Limited in Assam in the month of October. So here we are paying the sponsorship fee. Can we say Finmin Limited is providing the sponsorship services to Bhakti and Sons? Yes, what did we study in RCM for sponsorship services? So we studied that whenever sponsorship services are provided by a small person, that is any person other than a body corporate. But here can we say the services are provided by a body corporate? So can we say FCM will be applicable here? Yes, FCM will become applicable here. This is the case of forward charge mechanism, that is Finmin Limited will pay the tax on it. Right? Acha, where is Bhakti and Sons located? Bhakti and Sons is located in Kolkata. Where is Finmin Limited located? It is located in Kolkata, but the event is going to be in Assam, right? So now in this case, what will it be an interstate supply? Will it be an intrastate supply? Can we say these are sponsorship services? This is not event organization services. Huh? Can we say it is sponsorship services? Sponsorship services was nowhere covered in place of supply separately. So can we say section 12.2 will apply? Normal section 12.2 will apply. If 12.2 will apply, then can we say the place of supply will be location of recipient? It will be location of recipient. Location of recipient means our location, that is Kolkata. So can we say we are the recipient, na? So our location is Kolkata. So this will be the place of supply. And the LOS, Finmin Limited is the LOS, that is the location of the supplier, that is also of Kolkata. So can we say this will be considered as an intrastate supply for Finmin Limited. Right? Next, GST is applicable on all the inward and outward supplies in the aforesaid scenario at the rate of 18%, except transportation of goods, which is at 5%. Okay, ignore the bifurcation of individually. There is no opening ITC available. All the goods purchased is ex-shop and it arranges its own transportation through GTA. Note, all the above amounts are exclusive of GST wherever applicable. Based on the facts, choose the most appropriate answer. Yes, now see, let's try to give the answers. Which of the following statement is true in respect of sponsorship fee paid by Bhakti and Sons? So for sponsorship, we decided that it is FCM and it is the intrastate supply. If it is FCM, then the supplier is Finmin. So can we say Finmin is required to pay the GST, CGST and SGST, because it is intrastate? This we have already discussed. Right? Now amount you can simply check. What was the amount of sponsorship? It was 5 lakh. On 5 lakh the rate of GST will be 18%. 5 lakh multiplied by 18% will give me 90,000, half, 45,000, 45,000. Then assuming that Bhakti and Sons has a SEZ unit also located in Uttar Pradesh apart from the DTA unit located in Kolkata, both are having same PAN. Assume additional turnover of its SEZ unit is 2 crore in the preceding financial year in aggregate to the aggregate turnover of DTA in addition to the aggregate turnover of DTA of Kolkata of 4.2 in the last year. So basically they are telling for last year SEZ's turnover was 2 crore and DTA's turnover was 4.2 crore. Which of the following statement is correct in respect of e-invoice requirement, right? So e-invoicing, what did we study? Whenever the last year's turnover has exceeded rupees 5 crore, okay, when preceding financial year's turnover has exceeded rupees 5 crore, then in such a case, e-invoicing provisions are applicable, and whenever we take that aggregate turnover, we have to take the full, like on one PAN, whatever offices are there, you have to take the aggregate turnover. So can we say if we do the aggregate of the preceding financial year, our aggregate turnover will come to 6.2 crore, 6.20 crore. Okay, so can we say e-invoicing provisions is applicable to Bhakti and Sons? Okay, but we had studied this specifically in that chapter that e-invoicing provisions are not applicable to SEZ units. It was applicable to SEZ developer, but it is not applicable to SEZ unit, right? So can we say e-invoicing is applicable to DTA unit and SEZ is exempted from e-invoicing? But please remember, whenever you're calculating the turnover, you have to take the aggregate turnover on the same PAN. Then the total value of inward supply on which GST is payable under reverse charge for December. Inward supplies on which GST is payable under reverse charge. So that calculation also we have it ready with us. Three things were there now. So this was there under reverse charge mechanism. We have written here 2 lakhs. Okay, then this 30,000 is there and then this 10,000 is there. So can we say 2,40,000? 2,40,000 is the inward supply on which we have to pay the tax under RCM. Then the total ITC that can be availed by Bhakti and Sons for December. Let's do that calculation for ITC. How much ITC will be available? Everyone take your calci. Now we are going to make the use of this M plus and MRC. Yes. So now let's start. First of all, 30 lakhs minus 25,000. Okay, multiplied by 18%. Are you getting it as 5,35,000? Yes, M plus. Then on refrigerators, 4 lakh multiplied by 18%. M plus. Okay, 2 lakh. On 2 lakh, we will not get any credit because it was purchased from unregistered people. Then on GTA, on 2 lakh, we will pay the tax at the rate of 5% and same amount we will get it as ITC. So can we say 10,000 is available? Okay. Then after that, star security, no tax is there. Loading and unloading. Loading and unloading is, there will be no tax because laborers would have not charged any tax from us. Kolkata Municipal Corporation rent, yes, GST will be applicable under RCM. So 30,000 multiplied by 18%. This amount you will pay also and then you will get the credit also. And similarly for 10,000, 10,000 multiplied by 18%, 1800 rupees. Are you getting the answer as 6,24,700? Total ITC available. Yes, 6,24,700. Let's check. 6,24,700 is the value of ITC available to us. Then the total GST payable in cash by Bhakti and Sons for the month of December, assuming no ITC is claimed or availed by it. Okay, assuming no ITC is claimed or availed by it is how much? Okay, so now can we say, first we will have to do our calculations. First we will have to, now they are telling us assume that there is no ITC that you have availed. So can we say we will have to calculate our GST payable. First our GST payable on our outward supplies. Okay, and then we will have to calculate the GST payable in cash. GST payable in cash on inward RCM supplies. We'll calculate these two and we'll get the answer. Chalo, first let's do the calculation of GST outward supplies. Okay, GST outward supplies. How much is your outward supply? Can we say this amount is our outward supply? So we can add all of it, 12 plus 6 plus 28 plus 4 lakh. So can we say 50 lakhs it comes to? 50 lakhs multiplied by 18%. Can I say my outward tax payable is 9 lakh? Yes, this amount is equal to 9 lakh. Okay, if nothing would have been told in the question, then from this 9 lakh we would have set off our ITC. Okay, but now this 9 lakh we will have to pay. And then what else? Can we say that RCM liability also you are required to pay? RCM liability also you are required to pay. So first one, transportation, 2 lakh multiplied by 5%. That was 10,000 rupees M plus. Then your shop rent 30,000 rupees into 18% M plus and 10,000 rupees into 18% M plus MRC. My GST RCM liability is coming to 17,200 rupees. This I have to compulsorily pay in cash, and the above amount also, assuming there is no ITC to be set off. Can I say total 9,17,200 I will have to pay in cash? Yes, this is assuming we haven't availed any ITC. And then the penalty that may be leviable for failure to display the registration certificate, we have discussed, that is the general penalty of up to rupees 25,000 that we have studied in section number 125. Manageable till here, everyone? Simple till here? Understandable? Yes. Chalo, let's go to the next question, everyone. Let's go to the next case scenario. We are almost reaching our 50% target. Yes. Chalo, let's give it a try, everyone. Let's give it a try. Chalo, let's go to the next next case scenario, everyone. Case scenario number 27. Let's try. Varun Associates is a supplier registered under GST in Delhi. It is engaged in manufacture of product A and product B. Product A is a taxable product, whereas product B is an exempt product. Okay, product A is taxable, product B is exempt. It is also engaged in manufacture of product C, a taxable product which is exported by it to other countries without payment of tax under LUT. Okay, it has furnished the following information regarding purchase of machineries for his manufacturing business. 1st April 22, he has purchased machinery X, which is exclusively used for product A, that is taxable, so no problem. 1st October 23, machine Y exclusively used for exempt product. And 1st May 2024, machine Z, which is exclusively used for zero rated supply. This is also not a problem because this is also considered as a taxable supply only. So can we say credit of this will be already credited to your electronic credit ledger? Credit of this will also be credited to your electronic credit ledger. But this ITC on this 15 lakh would not have been credited to the credit ledger because it was used exclusively for what purpose? It was used exclusively for exempt purpose. Now, from 1st April 2025, Varun Associates started using okay, machinery Y for manufacturing product A as well. So, machinery Y is now going to be used commonly for taxable as well as exempt product. Now, all the purchases and sales are interstate, and the rate of IGST applicable on all the purchase and sales is 18%, subject to the given information, and all the conditions have been fulfilled assuming that way. And Varun Associates has not claimed depreciation on the GST paid on the purchase of the machinery. Varun Associates has not claimed depreciation on the GST, so it can take the ITC. Based on the facts, now you have to give the answers of question number 1 to 5 below. Very simple ITC, basically reversal questions. Okay, now determine the amount of ITC which has been credited to electronic credit ledger during the financial year 22-23. Financial year 22-23 means the first one. Okay, means when this machinery was purchased. Can we say at that time we would have credited 10 lakh multiplied by 18%. 1,80,000 we would have credited already to our electronic credit ledger. So can I say A will be my correct answer? That is already credited because that was used for fully taxable product. So I would have taken normal ITC. Okay. Then after that, the next one. Okay. Then the next one. Determine the amount of GST paid on purchase of a machinery which has not been credited to electronic credit ledger during the financial year 22, 23, 23, 24 and 24, 25. Which is not credited to electronic credit ledger during these years 22, 23, 23, 24 and 24-25. So can we say we would not have credited this ITC on this 15 lakh. So 15 lakh multiplied by 18%, 2,70,000. 2,70,000. Can we say we did not credit the ITC of machinery Y because it was used specifically only for machinery Y only, na? Yes, machinery Y, because this was used exclusively for for exempt product. Now onwards, from 1st April 25, that is from 25-26, it will be used for taxable, for common use, right? Okay, then after that, amount of ineligible ITC in respect of machinery Y, that is TIE, as per rule 43 of the CGST rules, to be added to the output tax liabilities. How much is the ineligible ITC? How much is the ineligible ITC? So can we say now machinery Y is going to be put for common use. So now what are we going to do is, whatever is the ITC on this 15 lakh, we will credit it fully to the electronic credit ledger. But then you will have to reverse also something. Can we say earlier, till now it was used for exempt. So for the per period it was used for exempt, we will have to reverse that liability. Acha, from when to when it was used for exempt? Can we say from the date of purchase, that is from 1st October 2023 till 1st April 2025. Okay, means before 1st April, or we can say 31st March 2025. Can we say for this period it was used exclusively for exempt purpose? Right now, how many quarters is this? Can we say 1st October to December will be one quarter, and then like basically for 23-24, for financial year 23-24 there will be 2 quarters, and for 24-25 for the entire financial year till 31st March 2025 there will be 4 more quarters. So totally 6 quarters. So now let's reverse the liability. Let's reverse this liability for let's calculate how much is the liability for that exempt period. So can we say 15 lakh rupees multiplied by 5% multiplied by 6 quarters. So that comes to multiplied by 18%, the rate of GST on that. That is 81,000. If 15 lakh is the total value of machinery, na? So on 15 lakhs, first calculate the tax. 15 lakhs multiplied by 18% will be 2,70,000. Multiplied by 5% for how many quarters? For 6 quarters. So that gives me 81,000. 81,000 is the amount that we will have to add to our output tax liability. That is, this is specifically for the exempt period. Right? Okay, then what is the time period up to which the common credit needs to be computed for machinery Y? So common credit, can we say now it is going to be used for commonly for taxable as well as exempt purpose? Yes. So now when you are using the that particular machinery for common purpose, can we say we will have to include that credit in our common credit and then divide it by 60, and every month we will have to do the reversal of E by F. Yes, common credit we generally do for how many years? That we do for 60 months, or we do it for 5 years from the invoice date. Right? When was machinery Y purchased? Machinery Y was purchased on 1st October 2023. So can we say from 1st October 2023 we will do the common credit for 5 years. Basically life will be total 5 years only, and that is from the original date of purchase. So can we say 5 years means what? 28. Yes, so 30 September 2028, 30 September 2028, this is the time period up to which we have to do the common credit reversal. Okay, but can we say this will start from when? The common credit reversal will start from when we started using it for common purpose, that is 1st April 2025. So 60 months will not start from 1st April 2025, 60 months will start from the invoice date. And the last one, the amount of common credit, in respect of machinery Y. Now how much will be the amount of common credit? So can I say my common credit will be the entire amount, that is how much my value of machinery was how much? Value of machinery Y, I forgot the figure, 15 lakh. So 15 lakh multiplied by 18%, that comes to 2,70,000. 2,70,000 is going to be my common credit, and then this common credit will be divided, by 60, and then we are going to do the E by F thing. Do you recollect this? So this is the amount of common credit. So B is my correct answer. Manageable till here, everyone? Simple till here, understandable? Yes. Okay, chalo, let's go to the next one, everyone. Let's try the next one. Chalo. Okay. Messrs. Gopinarayan and Company is a partnership firm of advocates registered under GST in Mumbai, Maharashtra. In the month of April, the firm has supplied services amounting to rupees 15 lakhs. The following information is provided in relation to some of the services provided. Herbal Power Private Limited, registered in Telangana, in preceding financial year, as per the provisions of section 22, provided consultation for preparation of an affidavit in relation to construction of a hotel building in the state of Maharashtra. So basically we are advocates and we have provided services amounting to 15 lakh in the month of April. Okay, and then they have given you the details of some services there. So we have provided services to this company and value for that is 50,000 rupees. Then Veranta India Private Limited, registered in Gujarat. We have provided services to them. What service? We have filed a suit in the Gujarat High Court on behalf of this company. We have taken 2 lakh rupees from them. Then Miss Saloni, registered as GST as a saloon service provider in Maharashtra, registered in the preceding financial year. Legal service amounting to 1 lakh was provided in the month of February, for which invoice was issued on 15th Feb. However, the payment is made by the client on 5th April. The firm has charged 10,000 rupees as penalty for delayed payment of consideration. Said penalty is also paid by the client on 5th April. Okay, apart from this, as per the agreement, the firm has paid 20,000 as attestation charges on behalf of the client, mentioned separately on the invoice, which were reimbursed by the client. So this is just like pure agent kind of a thing. Now note, the turnover of Mrs. Gopinaran, that is our company, in the last year was 50 lakh. The firm is solely engaged in providing legal services and does not do any import export to and from outside India. Now you have to give the answers of the 3 questions below. Let's try. Whether the service provided to Veranta India Private Limited is exempt under GST. Whether it is exempt under GST. So if not, whether the tax is payable under reverse charge. So can we say the services which is provided by a advocate or by a firm of advocate, etc. Now here we are providing the service to whom? We are providing they are asking about Veranta Limited, that is to this particular company. Now they are asking whether this is exempted or whether this is taxable and whether this will come under RCM or it will come under FCM. So first of all, can we say it is not exempted? Okay, it is not exempted because the services are provided to a business entity. Okay, so it is not exempted. Now the question that arises is whether it is taxable under RCM or it is taxable under FCM. So can we say here, if the company's turnover had already exceeded the threshold limit for registration in the last year, means that entity will be a big business entity. And can we say it was registered in the last year already, means its turnover had already exceeded the limits. So can we say Veranta India Limited is a big business entity? So here RCM provisions, that is when we are providing the services to Veranta, we are not required to pay any tax, but Veranta is required to pay the tax under reverse charge mechanism, right? So here the tax will be payable under RCM, which is the correct one. Further, the tax shall be payable under reverse charge. No, it is not exempted. So D is the correct answer. Okay, then after that, what shall be the value of supply provided to Miss Saloni in terms of section number 15? What will be the value of supply? So can we say value of supply to Saloni will be this 1 lakh? Plus we have charged 10,000 for delayed payment of consideration. So any amount that we are charging for delayed payment, that will be added to our value. But this 20,000 is as pure agent. So this will not form part of value. Yes. So 1,10,000 will be the value of supply. See if we have this option, everyone. 1,10,000 is the correct answer. Yes. Okay. Then after that, the next one. What shall be the time of supply for supplies made to Saloni in respect of original amount of 1 lakh and penalty of 10,000 given the financial year is not a leap year. Okay. So now when did we do the supply to Saloni? We did the supply to Saloni. Invoice was issued on 15th of February. Payment was done on 5th April and penalty was also paid on 5th April. So can we say for delayed payment of consideration? For delayed payment of consideration, that is this 10,000, the time of supply will be the time when it is actually received. So at least for this 10,000, the time of supply will be 5th of April. Okay, now let's try to find out the time of supply for this 1 lakh rupee. So can we say again this will go under reverse charge mechanism? It is not exempted and the service will go under reverse charge mechanism. So time of supply we will calculate as per section number 13.3. Okay, but the supplier is a registered person. If the supplier is a registered person, then what will be the time of supply? Time of supply will be the date of payment. Okay, or 61st day from the date of issue of invoice, whichever is earlier. This is what we had studied. Yes, now what was the date of payment? Date of payment is 5th of April or 61st day from the date of issue of invoice. When did we issue the invoice? 15th of February. So from 15th of February, let's add 61 days. So February has 28 days minus 15. So 13 days of February is gone. Okay, then 31 days of March is gone, right? And now how many days is left? 17 days is left, right? 17 April. So can we say 17th April? will be the 17th April will be how many days? 61st day. Yes, so 5th April or 17th April, whichever is earlier. So can we say time of supply will be 5th April. So basically for 1 lakh also plus 1 lakh time 10,000 also, the time of supply will be 5th of April. Yes, so can we say D is the correct answer here? Oh, sorry, this is 15th April. Sorry, 5th of April. This is the correct answer. Yes. Chalo, done. Chalo, let's continue everyone with the next case scenario, that is number 29. We have sailed through 50% of the things and we are done with it. Let's continue with the same brainstorming session and enthusiasm. Let's do it everyone. Mr. Veera is a trader of ready-made garments and is registered under GST in the state of Uttar Pradesh. His turnover is 1 crore 80 lakhs during the current financial year. The composition of his turnover is as under. Intrastate is 80 lakhs. Interstate is 1 crore including exempt supplies of 15 lakhs. Including exempt supplies of 15 lakhs. Okay. His inward supplies are as under. Interstate supplies, intrastate, and out of this interstate 20 lakh exclusively used for exempt supplies. So on this 20 lakhs no ITC will be available, and intrastate including 15 lakhs exclusively used for taxable supplies. Okay, let's see what is it. Now, apart from above, Mr. Veera has undertaken the following transactions during the current financial year. He purchased a pickup van for purpose of delivery of goods to his customers. So, ITC on this will be available. It will not be blocked because it is for delivery of goods. He got his showroom renovated, debited all expenses under repairs and maintenance. Because it is debited to repairs to P&L account, ITC on all of these will be allowed. He purchased some t-shirts for 1,20,000 taxable under GST. After 1 week, he gave them away free to its customers to promote his business. So because it was given as free to its customers, on outward there is no tax payable. So on inward we will get no ITC. He sold all his shares during the year for rupees 10 crore and bought a house from that money. So selling of shares is neither supply of goods nor supply of services. But if rule number 42, 43 comes into picture, then for the purpose of including it in E and F, we will take 1% of the sale proceeds. Then the rate of tax is 9, 9 and 18%. All the amounts are exclusive of taxes. Opening balance of ITC ledger is nil. All other conditions of ITC have been fulfilled. Let's try to give the answers. Compute value of exempt outward supply for the purpose of reversal of ITC. What will be the value of exempt outward supply for the purpose of reversal of ITC? So whenever we calculate our exempt outward supply, means they are asking about E. So can we say, first of all, we have got some exempt turnover outward supply, that is rupees 15 lakhs. This will be included in exempt turnover, and one more thing will be included in my exempt turnover, that is this 1% of 10 crore. 1% of 10 crore is going to give me 10 lakhs. So 10 lakhs plus 15 lakhs. 10 lakh plus 15 lakh. Can we say 25 lakh will be my correct answer? Right? Okay, then after that, which of the following statement is true? Mr. Veera cannot claim ITC on delivery goods. Wrong. This is not true. This is false. It can claim ITC on van purchased and t-shirts distributed. No. On t-shirts it cannot. So false. Mr. Veera can claim ITC on van purchased, expenses on renovation and t-shirts. No. On t-shirts it cannot take. Mr. Veera can claim ITC on van purchased and expenses incurred on renovation, but cannot claim ITC on t-shirt. Yes, this is correct. D is the correct answer. Right? Then after that, calculate the amount of input tax credit credited to the electronic credit ledger of Mr. Veera. Ignore individual head. So ITC, basically ITC, how much will be credited to the electronic credit ledger? That amount we need to find out. Let's do the calculations, everyone. Yes, so first of all, on our inward supply, what is our inward supply? Can we say first of all this 1 crore 30,000? This 1 crore 30,000 is my is my inward supplies. This is interstate, including 20 lakh, which is exclusively used for exempt supplies. So now what question they are asking is, how much will be credited to the electronic credit ledger? So can we say, while taking it to electronic credit ledger, we will take full ITC to the electronic credit ledger and then we will do the reversal? Yes. So as of now, 1,30,000. This is my inward supply. This is one figure. I'll mark it as 1. Right. Second one, my intrastate supply. Can we say 46 lakhs? This is my second inward supply on which I will get the ITC. Okay. Then pickup van. On this pickup van, again I will get the ITC. This is the third one. And for repairs and maintenance. For repairs and maintenance, can I say all of these taken together? Let's do the total. 3,60,000 plus 3,60,000 plus 80,000 plus 4 lakh plus 1,62,000. Can I say my total expenses is equal to 10,02,000 rupees? This I will get. Acha. Then on t-shirts also, this ITC also I will take, but later I will reverse it, later I will block it, but it will be at least credited to electronic credit ledger. It will come from my GSTR 2B. Yes. So that is this was my fourth figure and this is going to be my fifth figure. Yes, this much is done. This much is done. At least let's do the total of these, everyone. Let's do the total of these 5 figures. How much does it come to? That comes to 1 crore or 15 crore. 1 crore. 1 crore 59 lakh 82,000. Yes, on this I will get the ITC of 18%. Multiply by 18%. That gives me 28,76,760. 28,76,760. Yes. Okay. Now, this is my total ITC. Everyone here, this is my total ITC. Now, from this, can we say some ITC will not go, means I can, it will be shown in my GSTR 2B. This will be shown in my GSTR 2B, but this will not go to my electronic credit ledger. Yes, which is that? One is the t-shirt one. T-shirt one means on that 1,80,000. 1,80,000 multiplied by 18%. That gives me 32,400. 32,400, can we say this is totally blocked as per section 17(5). Yes, and then one more that was exclusively used for exempt supply. So the one which is exclusively used for exempt supply, that is also subtracted. Do you recollect in our textbook I had given that format of rule 42-43? Yes. So on 20 lakhs multiplied by 18%, that gives me 3,60,000, right? So subtract this. So that gives me 24,84,360. Yes. So that is going to be my ITC that will be credited to the electronic credit ledger. Yes. Okay. Chalo then. Now listen, why did I show you this calculation here? Because this is the way in which we do it while solving our descriptive questions. Okay, in exam, if this is a MCQ question, then while doing the basic calculation itself, you could have subtracted this 20 lakh here and you could have ignored that t-shirt ITC. Okay, but why did I show you the detailed calculation? Because this is how you are required to think when you solve a descriptive question. Because when you are solving a descriptive question, you'll have to show these calculations. Okay, then after that, the next one, compute the amount of common credit. Compute the amount of common credit as per rule number 42-43. As per rule number 42-43 of the CGST rules 2017. Common credit. Okay, so now can we say the above credit that we have just now got? Okay, the above credit that we have just now got, that is 24,84,360. Can we say this is for doing this supply? That is, it is for doing taxable supply also and it is for doing common supplies also. So can I say one of my common credit is same figure, that is 24,84,360. Yes, acha, but out of this there is some credit, out of this there is some inward supply which is used exclusively for taxable. So this is not my common credit. So can I say 15 lakh multiplied by 18%, that is 2,70,000. 2,70,000, this is my exclusively for taxable. Above one was my total ITC. Out of that I have subtracted the ITC which is used exclusively for taxable supply. So 24 lakh 84,360 minus this. So I'm getting the answer as 22 lakh 14,360. This is the final common credit which we are going to do the apportionment. Yes. If the question was different for you, please mark it as important so you can take it for revision once. Yes. Chalo, I am going to the next case scenario, everyone. Case scenario number 30. So finally we have landed into 30s. Yes, let's start. So Mr. Venkat, a practicing chartered accountant based in Hyderabad, is registered under GST in the state of Telangana. Okay, Telangana. Now he has undertook the following transactions during the current financial year. He provided consultancy services to Quick Tours, a US-based entity engaged in the business of e-commerce in the field of tours and travels, having its office at UK, export of services, kind of that. It paid a sum of 95,000 euros to Mr. Venkat, billed at rupees 75 per euro. Mr. Venkat made travel to UK several times during the year and incurred 5,000 euros at 75 as incidental expenses, including VAT paid at 10,000, which was ultimately charged from them. So basically this travel is in relation to the service provided, so it will be included in the value. Quick Tours also paid a sum of 5,000 euros at 75 to Mr. Venkat as interest on account of delay of payment. So even this will be included in the value. Mr. Venkat also hired the services of a professional firm based in UK to complete the assignment of providing the services to Quick Tours and paid 10,000 euros, and this was not recovered from them. Okay, this is my inward supply. I have taken this service. Okay. So now can we say this, we have done a clarification on this, that all these will form part of my outward supply, but this subcontracting thing that I have done, this will be considered separately. You cannot do net off. So this will be considered as my inward supply. So let's do the calculation, everyone. 100% they will ask you what is the value of the supply. Let's see. Yes, compute the value of supply made by Venkat to Quick Tour. We have the same question in our textbook also, in our question bank. Yes, let's do the calculation. In euros itself we can do. First of all, here it was 95,000 euros. Then for travel we charged 5,000 euros. Okay, VAT is already included, so don't add it again. And delay in payment of consideration is another 5,000. So are you getting the answer as 1,05,000 euros? In euros, it will be 1,05,000. Yes. Okay. Then after that, Mr. Venkat's taxable earnings. His taxable earnings for services provided in India for financial year are 85 lakhs. In addition to this, Mr. Venkat also provided return filing services free of charge to Indian residents who were economically weaker section. Open market value is 1,40,000. Open market value is irrelevant because we are providing the service to unrelated person and we have provided it for free. So the value of supply will be 0 itself. Further, in July, Mr. Venkat also provided financial services to his real brother, Mr. Kamath, who is working at an IT company and earning handsomely. Earning handsomely means not dependent on me, means he is not my family member. For rupees 75,000, invoice raised at open market value. However, Mr. Venkat offered him 90% discount on the invoice raised to him. Therefore, Mr. Kamath paid rupees 7,500. So, can we say 7,500 is the actual consideration and that will be considered as the value of supply. Okay, why not 75,000? That is the invoice value or open market value? Because here it will be assumed as if we are providing the services to an unrelated person only. And if you are providing it to an unrelated person, then as per section 15, the value of supply will be the transaction value. So, value of supply is going to be rupees 7,500, right? So now, how much will be the total value? How much will be his total turnover? How much will be his total turnover for the current financial year? So, can we say one of the turnover is the one that he made above? That is 1,05,000 euros multiplied by 75 rupees. That is my one turnover, 78.75 lakhs. And here, along with 78 lakhs 75,000, he has done a turnover of 85 lakhs plus 7,500. So my total turnover till here comes to 1 crore 63 lakh 82,500. Are you getting this answer? This is the first turnover also plus the second point, right? Okay. Then after that, now they are asking what is the value of supply made by Mr. Venkat to Mr. Kamath if Kamath is the son of Mr. Venkat and not his brother, and supply is made free of cost, other facts remaining the same. So if we are doing this to our son, means we are doing it to our related person, and if we are doing it to our related person, then valuation will be done as per rule number 28. If it is done as per rule number 28, then can we say value will be open market value, that is rupees 75,000. Right? Okay, then the next one, Dum Electricals Limited, registered under GST in Guwahati, Assam, approached Mr. Venkat to impart GST training to its accounts and finance personnel. Mr. Venkat imparted the said training to 50 employees of Dum at a conference room of Swaraj Hotel located in Siliguri, West Bengal on 25th August. Okay, now what the question they are asking, the place of supply of GST training services imparted by Venkat to the employees of Dum Electricals Limited will be. So can we say, we have studied this specifically in section number 12, I think subsection 5, that whenever we are providing training and performance appraisal services, and when it is provided to a registered person, B2B, then place of supply will be location of the recipient. Location of recipient is Dum Electricals, that is Guwahati, Assam. So Guwahati, Assam will be considered as the place of supply. Manageable till year, simple till year. Yes. Next case scenario number 31. We have already done the same before. Okay, a few case studies before we had done this. Okay, anyway, let's quickly discuss it because I don't want to leave anything for your homework, because I know as of now the time is very, very crucial for you. So you want to finish everything in the lecture itself. So let's do everything here in the class itself, everyone. Now, Jaskaran, a registered supplier of Delhi, is engaged in supplying a bouquet of taxable goods and services. He has made the following supplies. In the month of January. Supply of 20,000 packages at rupees 30 each to Sukhija gift shop in Punjab. Each package consists of 2 balloons, 2 fruit. Can we say this is considered as a mixed supply? Yes. Have they given the rates of GST? They have given the rates of GST. So chocolate, fruit juice and toy balloons. Chocolate, fruit juice and toy balloons. Highest rate, can we say it is 18%? So can we say on this, on the total value, 18% tax will be applicable? Right? Then 500 packages, each consisting of 1 chocolate and 1 fruit juice bottle, given as free gift to Delhi customers on occasion of Lodi. So anyway, we have given it to our customers, unrelated person, and it is given as free. So value of supply will be 0. Okay. Then catering services provided to elder brother free of cost for his business function in Delhi. Now, what is going to happen in this case? Can we say value is going to be nil? Why? Elder brother having a business. Okay, so can we say he is an unrelated person and we have provided it for free, so value will be 0. Now, following additional information is available. Penalty of 10,000 was collected in lump sum, means including GST. In the month of March from Sukhija gift shop, since the payment was received with a delay of 60 days. So here we have collected some extra amount also. One of the old customers of Jaskaran, Mr. Bahubali of Delhi, approached him requesting him to arrange the transportation of goods purchased by him from a local supplier. Jaskaran arranged the transportation of goods through a truck owned by him for local transport, and he did not issue a consignment note. If Jaskaran did not issue the consignment note, means he is not a GTA. Right? And they have given you the rates of taxes. Now they are asking you to give the answers. Now, GST payable on packages supplied to Sukhija gift shop in January and March will be how much? So can we say for Sukhija, this was the transaction for the month of January. So 6 lakh multiplied by 18%. 1,08,000 is the value. 1,08,000 is the value for January. Yes, that is this. And for March, in March, what did we receive? We received that penalty amount of 10,000 from Sukhija. And can we say we have already studied in time of supply chapter that penalty will be taxable in the month when it is received, and it was received in the month of March, and this was received in lump sum. So can we say this 10,000 includes GST also? So we'll have to go reverse. And then we'll have to do the calculation. Okay, now the main supply was taxed at the rate of 18%. So even the penalty will be charged at the rate of 18%, right? But this penalty includes GST. So this 10,000 is 118. So 10,000 divided by 118 into 18. We are just calculating the tax amount. That's why into 18. So that gives me 1525. Are you getting that amount? Yes, 1526. Okay. So C is the most appropriate answer there, right? Then the next one. GST on services of transportation provided by Jaskaran to Mr. Bahubali. Can we say no GST is payable at all on this transportation because he is not a GTA? And if he is not a GTA, he is not a courier agency, then anyway GST on transportation of goods by road is exempted. Then supply of 500 packages given as free gift is not a supply under GST. Yes, not a supply under GST at all. And for the purpose of GST law, value of supply of catering services provided to his elder brother free of cost. Can we say it is nil? Can we say because it is provided to elder brother, that is an unrelated person, so it is considered as if it is provided to any unrelated person, so value of supply will be 0 there because it is supplied for free. Manageable till here? Yes? Okay. Chalo, let's go to the next case scenario, everyone. Case scenario number 32. Sudarshan Transport Agency Private Limited, herein referred to as STAL, registered under GST in Jaipur, Rajasthan, is providing services by way of transportation of goods by road, for which it issues consignment notes to all the sectors of industries. Okay. So it is a GTA basically. Now it maintains trucks, trawlers, advanced carriages for heavy loads, lorries and small tractors for the purpose of transportation and renting purposes. It also maintains special vehicles which have special storage features and other advanced facilities for transporting defense equipments and other complex machinery, chemicals and food products. It has provided the following details for the current financial year. STAL rendered transportation services to farmers in Rajasthan for transportation of agriculture produce to nearby cities for rupees 2 lakhs. So transportation of agriculture produce by GTA, railways and vessel is totally exempted. We have studied special provisions for under exemptions. So this is going to be exempted. Then STAL gave buses on rent to ABC Travels, who provided services of transportation of students, faculty and staff to higher secondary school. And for that it charged 5 lakh. Even this is exempted. Remember that entire chain of type 1 educational institution transportation facility was exempted. Then STAL has also entered into a contract with local authority in Rajasthan to provide services by way of transportation of relief material to flood affected victims, for which 2,50,000 is charged. Even this was exempted. Yes. Then Money Bank, registered in Bhubaneswar, Orissa, sent its branch manager Mr. Champak on 1-year deputation on a special project to Bhopal, Madhya Pradesh. Mr. Champak's family is stationed in Kanpur. Money Bank, we have done this question. Money Bank enters into a contract with STAL for transportation of household goods from Kanpur to Bhopal. Transportation of household goods. Okay, we have done this point. This will be taxable. Then STAL transported defense equipment. This is exempted. Then STAL provided service of transportation of goods to a cooperative society in Rajasthan, which was newly constituted and hence was not registered under GST law, and the amount charged was rupees 3 lakh. While transporting the goods of the said cooperative society, STAL generated the e-way bill on Monday at 12:04 AM. The goods were to be transported for a distance of 220 kilometers. Okay. So basically transportation of goods service to a cooperative society which is not registered under GST. So this is a taxable thing, right? This is a taxable thing. And STAL owns and maintains its own petrol pump in Rajasthan, wherein the revenue from supply of petrol, can we say this is anyway not a supply as per section 9? This is not a taxable supply. All the amounts are exclusive of GST wherever applicable. Now give the answers. Determine the value of outward supplies made by STAL which are exempt from GST. Outward supplies exempt. So can we say one will be this 2 lakh? Yes, just go on adding. This 2 lakh. Right? Then after that the next one will be this 5 lakh. 2 lakh plus 5 lakh, 7 lakh. Plus next will be this 2,50,000, 9,50,000. Yes, next will be this relief material, that is 5,50,000. This one. Yes, next will be the petrol pump, petrol 20 lakhs, 35 lakhs. Can we say value of outward supplies which is exempt from GST will be 35 lakhs? A will be the correct answer here. Yes, then determine the place of supply of, determine the place of supply of services of transportation of household goods of Mr. Champak. So transportation of goods, place of supply. Can we say transportation of goods place of supply will be when it is supplied to a registered person? When it is supplied to a registered person, place of supply will be location of recipient, but when it is supplied to an unregistered person, it is the place where the goods are handed over for transportation. Can we say the goods were handed over for transportation? Where? Where was it handed over for transportation? Or is it provided to a registered person or unregistered person? Money bank enters into a contract with STAL. So STAL is providing the services to money bank, means it is B2B service. If it is B2B, then the place of supply is going to be location of recipient. Location of recipient is Bhubaneswar, Orissa, so that will be the place of supply. B will be the place of supply. Then calculate the aggregate turnover of STAL. Aggregate turnover of STAL for the current financial year. Aggregate turnover means exempt plus taxable. Exempt just now we calculated, that was 35 lakhs, and taxable will be the balance transactions, that is this fourth point, 1,50,000. No, this 1,50,000. We provided this service, na? 1,50,000 and then this 3 lakh. So 4,50,000 is my taxable turnover. So 39.50 lakhs. So B is the correct answer. Then determine the period of validity of e-way bill generated by STAL for transporting the goods of cooperative society. Okay. E-way bill validity. Let's do the e-way bill validity. Okay. When was this generated? This was generated on Monday at 12:04 AM, distance of 220 kilometers. Have they mentioned about the mode of transportation? It is using road only. It maintains trucks, trawlers, advanced carriages for heavy loads, lorries, and small tractors for the purpose of transportation. Okay, so can we say because it is having all of these big vehicles only, then we will assume that the transportation is done. We will assume that transportation is done by over-dimensional cargo. We are assuming that the transportation is done by over-dimensional cargo. If it is done by over-dimensional cargo, then for every 200 kilometers, we will get 1 day validity. But this is 220 kilometers. So for the balance 20 kilometers also, it is a part thereof. So we'll get 1 full day. So total 2 days. Total 2 days. Acha, but can we say it was generated on Monday at night 12:04 AM? So can we say the validity is going to start from next day night 12 o'clock? That is Tuesday night 12 o'clock. Yes. If it is Tuesday night 12 o'clock, then can we say from Tuesday night we'll take a validity of 2 days. So it will be Thursday, Wednesday, Thursday midnight. Wednesday, Thursday midnight. By the time that comes, it will be Thursday. Yes. Okay. Then after that, whether tax is required to be deducted under section 51 of the CGST Act for the service provided by STAL to a local authority in Rajasthan. STAL to a local authority. Wait. Where is that? Here. STAL has provided this transportation of relief material. No, it is anyway with supply. It is anyway an exempt supply. Na? If it is an exempt supply, then the question of TDS does not arise at all. Yes, forget about the value. It is already an exempt supply. Then going to the next one. Let's go to the next one, everyone. Case scenario 33. Let's try this. Messrs. Harimukund Hardwares, a partnership firm. One second. A partnership firm registered under GST in the state of Uttar Pradesh is engaged in the supply of door and window fittings across India. In the month of October, it has made the following supplies. Let's do the calculations. What they have given? Name of the receiver, that is state, taxable value, date of invoice, date of payment, date of removal of goods. To so and so people, it has done the supplies. Okay. Now the applicable rate is 18%. Goods are generally received by the parties in Punjab, Haryana and Rajasthan on the second day from the date of removal, whereas it takes 5 days to reach Karnataka. Okay. So from the date of removal on the second day, when it is Punjab, Haryana, and Rajasthan, it takes from the date of removal, it takes plus 2 days for reaching, and for Karnataka, it takes 5 days for reaching the goods there. Messrs. Harimukund gives 2% cash discount to its customers wherever the payment is received in advance or within 15 days from the date of removal of goods, and respective credit note is also issued immediately. The buyer also takes the necessary legal action required under GST, that is reversing the ITC is also done by the buyers. To supply such goods as aforesaid, it received services from a local GTA, namely Khatushyam Transporters Unregistered, who raised a consolidated invoice for rupees 1 lakh on 22 October, for which payment was made on 27 December along with the payment for the month of November. Okay, so we are taking the help of a GTA, and that GTA is an unregistered person. Applicable rate on transportation is 5%. Let's give the answers below. Now, what is the time of supply of goods in case of goods supplied to Messrs. Charanjot Hardwares and Fitters? Let's see what is the time of supply for the second one. What is the time of supply for the second one? Can we say this is in relation to goods? So, section number 12 will apply. Yes, and whenever normal time of supply for goods will be the date of invoice or the date of payment, whichever is earlier. Yes, and if the invoice was issued late, then the last day of issuing the invoice or the date of payment, whichever is earlier. Now see, when are we supposed to raise the invoice? On or before the date of removal? So can we say here the invoice was issued late? If the invoice was issued late, what is the last date of issuing the invoice? Last date of issuing the invoice is equal to 10th October, that is on or before the removal. So 10th October or 10th November, that is the date of payment, 10th October or 10th November, whichever is earlier. So can we say time of supply will be 10th October? B will be the correct answer. Yes. Okay. Then what is the time of supply of goods in case of goods supplied to Messrs. Rana Singhji Hardware Products? Rana Singhji Hardware Products, that is of Rajasthan. What is the time of supply? So here, can we say we have received some payment in advance? Before invoice and before removal itself we have received. Acha, but we have already studied in case of goods on advance, there will be no time of supply applicable as of now. So whenever we issue the invoice later, okay, the date of issue of invoice or last date of issuing the invoice, whichever is earlier. So can we say here we issued the invoice on 17th October, but the goods were removed on 20th. So can we say we issued the invoice properly? So can we say 17th October will be considered as the time of supply? Yes. Then what is the time of supply in case of services supplied by Messrs. Khatushyam Transporters? What is the time of supply in case of services supplied by Khatushyam Transporters? Let's see. Khatushyam Transporters was the GTA. What will be the time of supply for that? So can we say here GTA is an unregistered person? If GTA is an unregistered person and GTA is providing the service to us, so can we say it is RCM services? In RCM services also the supplier is unregistered. So can we say here we have to raise an invoice on ourselves within a time period of 30 days from the date of receipt of goods or services? We will have to issue an invoice on ourselves. Yes or no? Yes. Now, do you recollect after the amendment in RCM services, that is section 13.3 also, there are two options. Now, one is where the supplier is registered and he will issue an invoice, and second one where the supplier is unregistered and the recipient is required to issue an invoice on himself. When the supplier here is unregistered, so can we say second part of 13.3 will be applicable? That is the time of supply in that case will be the date of payment or date of invoice by the recipient. Okay, date of invoice by the recipient, whichever is earlier. Now, what is the date of payment? Date of payment is 27th of December. Or date of invoice by the recipient. Now here they haven't given any information that when are we issuing an invoice, and we have already studied that we are required to issue an invoice within a time period of 30 days from the date of receipt of goods or services. Let's assume that we have received the services. Let's say we have received the services on 22nd of October. So can we say we are required to issue the invoice maximum by 21st of November? by 20, that is within 30 days. We are assuming that we have received the services on 22nd of October. So can we say we will have to issue the invoice maximum by 21st of November? So 21st, and let's say that is the date when we have issued the invoice. So 21st of November or 27th of December, whichever is earlier. So ideally the answer should be 21st of November. Yes, but here they haven't given those options, because when you go and check the solution, they haven't given the effect to the amendment. They are still taking that 61st day. But when will we take the time of supply for 61st day? We will take the time of supply for 61st day only when the supplier is a registered person. Here the Khatu Shyam Transporters is not a registered person. Right? So your amendment provisions will apply, and that's why my answer is not there in the option here. Okay, please try to understand. Your time of supply will be the date of payment by the recipient or date of invoice by the recipient. When the invoice is issued by the recipient, out of these two, it will be whichever is earlier. Okay, so this is one question where the effect of amendment is not considered by the ICAI. So these options are wrong. Okay, and the last one, check what is the last question that they are asking. What is the gross tax liability attributable to outward supplies of Messrs. Harimukund Hardware for the month of October? What is the outward supplies? Okay, what is the outward supplies? Gross tax liability on the outward supplies. Let's do the calculation. So can we say whatever are the supply, for which month they are asking? For which month they are asking? They are asking for the month of October. Okay, they are asking for the month of October. So we have to be careful, because we have to consider the time of supply, and accordingly we will have to take. Right? Now see here. One more extra information that was given was, it is giving 2% cash discount if they do the payment within 15 days of removal of goods. Now let's check. In this case, is the payment done? In this case, is the payment done within 15 days of removal? From this day, from the date of removal, is the payment done within 15 days? Yes, exactly on the last day. So can we say here they will be eligible for the discount? Yes. Then after that, here the payment is done after a 1 month, so no discount. Here the payment was anyway done in advance. Yes. But the time of supply was 17th October. And here is the payment done within 15 days? No. So here there will be no discount. So what will be the value of supply for the first one? 5,75,000 minus 2%. 5,75,000 minus 2%. Then time of supply for the second one, 3,25,000. Yes. For the next one, here we have received the payment in advance, so discount will be applicable. Till now it was, just put that in M plus. 8,88,500, just put that in M plus. 2,70,000 minus 2%, 264,600, M plus. And 3,75,000 no discount, M plus, MRC. How much is the total value that you are getting? Total value is 15,28,100. On this 18% tax will be applicable. 275,058. 275,058 is the value of IGST. Yes, because all the place of supply is in other states. Now we are in Uttar Pradesh and rest all of them are other states. So IGST will be applicable. Yes, and then after that the last one, the total value of all the supplies involved in the above case scenario on which Messrs. Harimukund Hardware is required to pay the tax. Total value of all the supplies involved in the above case scenario. So can we say basically they are telling us to consider that transporter etc. also. So one we have already calculated, that is my outward supply. How much was my outward supply? My outward supply was 15,28,100. Here you don't have to calculate the tax, you just have to calculate the total value. So my outward supply was 15,28,100 plus value of inward supply on which tax is payable under RCM. That is the transporter. What was the value for the transporter? 1 lakh rupee. So just add that 1 lakh, because on this 1 lakh also we will have to pay the tax under RCM. So my total value of supply on which I have to pay the tax is 16,28,100. A is the correct answer. Simple everyone, manageable till here. Yes. Chalo. Let's go to the next one. Let's try the next case scenario. Next case scenario is case scenario number 34. Let's try it everyone. Chalo, let's continue ahead. Next case scenario number 34. ABC Private Limited, a company registered under GST in the state of Uttar Pradesh, manufactures products which are used in laboratories. The products are manufactured in the company's factory located in Lucknow, Uttar Pradesh, and sold in various parts of Uttar Pradesh. The company also provides intra-state repair and maintenance services for its products. The details of the turnover of the company for preceding 2 financial years are as under. The details of turnover of the company for preceding 2 financial years are as under. Now, financial year, last financial year and before that financial year, turnover from supply of goods, supply of services, interest income from extending loan, not included above. Now, the company procures the service of Messrs. Ram Enterprises, a GTA having its place of business in Lucknow. Okay, this is in Uttar Pradesh, for transportation of goods from factory to customer's location in April. Messrs. Ram Enterprises has not exercised the option to itself pay the GST on the services. Messrs. Ram Enterprises prepares a regular consignment note containing the details of consignor and consignee, and the services provided by them are chargeable at the rate of 5%. Following details are provided by ABC Private Limited for the first quarter of the current financial year. Acha, this is of financial year 1, financial year 2, and this is of financial year 3. Okay. Okay. So this is of current year, this is of the preceding year, this is even before that. Turnover of supply of goods, supply of services, interest income, amount paid for services received from your Ram Enterprises, raw materials received from other states, input services received is this much. Following additional information is also provided. See what are they telling? 2 information. The raw material mentioned in point 5 above received by ABC Private Limited in April in its factory located in Lucknow, Uttar Pradesh includes goods amounting to 2,26,000 received from Akash Enterprises on instruction received from Messrs. Abhijat Enterprises. Messrs. Akash Enterprises has its principal place of business in Uttar Pradesh, whereas Abhijat Enterprises has the office in Gujarat. So basically we have received some raw material here from the other state, but how it has been received? It is received under the bill to ship to model. Right. So now this includes, okay, this includes, that raw material includes the goods worth 2,26,000 received from Akash Enterprises on instruction received from Abhijat Enterprises. So basically Abhijat gave the instruction to whom? It gave the instruction to Akash Enterprises. Ulta. Yes, Abhijat gave the instructions to Akash Enterprises to ship it directly to whom? To ship it directly to us. Okay, we are called as ABC Private Limited. Okay, we are situated where? We are situated in Uttar Pradesh. Abhijat is, Akash is in Uttar Pradesh and Abhijat is in Gujarat. Okay, so this is how we have received the goods. Okay. Then, Vidhata Foundation, a charitable trust registered under 12AB, has been set up by founders of ABC Private Limited for conducting charitable activities in the state of UP. The trust organizes sessions on yoga and spirituality in the state of UP and charges participation fee that is exempted. The total fee collected is 2,50,000. The input services received by the trust during the said month is 1,25,000. No ITC will be available here. The trust is also analyzing the proposal of granting rights to ABC Private Limited to advertise on its premises. So that will be taxable. Only yoga, spirituality, etc. is exempted. All the above amounts are exclusive of GST. Outward supply taxable at the rate of 18%. Inward supply taxable at the rate of 5%. Let's give the answers, everyone. Whether the service provided by Messrs. Ram Enterprises to ABC Private Limited is chargeable to tax? If yes, who will discharge the tax liability? So yes, it is chargeable to tax. Ram Enterprises means that transportation services. So here RCM was applicable because Ram Enterprises did not exercise to pay the tax. So ABC Private Limited will be paying the tax liability. Yes. Then, whether ABC Private Limited could have opted for composition levy under subsection 1 and 2 of section 10 for the current financial year 3. So let's check the turnover. If we want to opt for a composition scheme for the financial year 3, then can we say for the last year, my aggregate turnover should not have exceeded. My aggregate turnover should not exceed rupees 1.5 crore. Okay, and while calculating the aggregate turnover, we will not take the interest income here for composition scheme. Okay, so these two will be included in our turnover. So can we say it will be 1 crore 11 lakh 25,000, which is less than 1.50 crore. So yes, it is eligible. Yes. Yes, it is eligible. Acha, now, if it is eligible for that, now along with that, if it wants to provide some services, okay, if it is going for goods and now then it can do some marginal supply of goods up to how much? 5 lakhs or 10% of the turnover of the preceding financial year. Do you recollect that figure? Whichever is higher. So last year turnover is 1 crore 2 lakhs plus 9 lakh 25,000. Okay, multiplied by 10%. That gives me 11 lakh 12,500 or 5 lakh, whichever is higher. So my marginal supply of services can be 11 lakh 12,500. So can I say this option fits perfectly? This option fits perfectly. Yes. Okay. Then after that, next one. Assuming ABC Private Limited has opted for composition scheme at the beginning of the current financial year, what will be the total GST liability for April to June quarter? Okay. Assuming it has opted for composition, what will be the liability for this first quarter of the current financial year? So can we say if it is engaged into what? It is engaged into what? It is engaged into manufacturing. So if it is engaged into manufacturing, can I say my tax liability will be 1% of the taxable plus exempt turnover, right? So for goods and services, see, on interest there will be no tax. Okay, this is my inward supply on which I will have to pay the tax under RCM at the rate of 5%. Okay, inward supply, no ITC will be available. Inward services, no ITC will be available. So my outward tax is 10 lakh, outward supply is 10 lakh 20,000 plus 92,550. That's it. On this, I will have to pay the tax. On this, I will have to pay the tax at the rate of 1%. So that comes to 11,125.5. Yes, and on RCM, whenever a composition person is also doing some inward supply on which tax is payable under RCM, it will have to pay as per normal rate. So on this 55,000, 1% is not applicable. 5% is applicable. That is 2,500. So my answer should be 13,625.5 or 13,626. So C is my correct answer. Because I am into manufacturing, I took it as 1% of the total turnover, right? Okay, then which of the following statement is incorrect? Incorrect. In case of Vidhata Foundation, services provided to charitable trust are not outside the ambit of GST unless specifically exempted. Yes, this is true. Okay, this is correct. All the activities of Vidhata Foundation are exempt. False. This is incorrect statement. Then, fees charged by registered person for sessions on yoga and spirituality are exempted since the objective is advancement. This is correct. So, only one is incorrect. They are asking about incorrect, na? So, only second one is incorrect. Can I say C is the correct answer? Yes. Okay. Then after that, next one. What will be the place of supply for the supply transactions between ABC, Abhijat and Akash? So we have already made the diagram with us. Here it is. Okay. So for the first transaction between Akash and Abhijat, the place of supply will be Gujarat. And for Abhijat and ABC, the place of supply will be UP. So first one Gujarat and next one UP. Let's see. First one Gujarat and next one UP. Here it is UP. This is incorrect. Principal place incorrect. Principal place. Can I say A is the correct answer? We had already made the diagram. That was the reason of making it. Simple till here, manageable. Let's go ahead to the next one. Everyone. Chalo. So the trick here is when you are reading the MCQs, okay, on some points they have deliberated so much, means 100% you will see a question on that. So while reading the question itself, analyze the question there itself, so that again you don't have to come back to the question and reanalyze it. Okay, that's how you are going to not waste your time. Yes. Okay. Chalo. Let's go to the next case scenario. Case scenario number 35. GQF Private Limited, registered under GST in the state of Maharashtra, is engaged in manufacturing of goods which are used for further production in automobile industry. The company sends some semi-finished inputs to job workers. Messrs. Yamuna Enterprises and Jamuna Enterprises for necessary processing. Okay, 2 job workers are there. The processed goods are sent back by the job workers to the company where they are used for manufacturing the finished products. Messrs. Yamuna Enterprises has its place of business in Maharashtra. Okay, it has its place of business in Maharashtra. Messrs. Jamuna Enterprises has its place of business in Madhya Pradesh, that is 35 kilometers away from GQF Private Limited. Okay. Then the company imports some raw materials and stores the same for few months in the warehouse operated by Gajanan Enterprises in the state of Tamil Nadu. Later on, it is transported to the company's factory in Maharashtra. Messrs. Gajanan Enterprises is not registered under GST. The aggregate turnover of Messrs. Gajanan Enterprises in the current financial year till date is 18,25,000. The company maintains all the records, documents and books of accounts at its place of business in Maharashtra. Following are the relevant details of our company for the month of August. Total turnover, total inputs received, total services received, goods sent to Messrs. Yamuna, goods sent to Messrs. Jamuna is so and so. All aforementioned amounts are exclusive of GST. GQF procures the service of Messrs. Speedofast Enterprises, a GTA, having its place of business in Maharashtra, Gujarat and Kerala. Messrs. Speedofast Enterprises is registered in all these states with same PAN. GQF Private Limited transports its finished goods to different customers located within Maharashtra through this GTA. Messrs. Speedofast prepares a consignment note containing all the details. Based on the facts, give the answers. Let's try. Now, Messrs. Gajanan Enterprises, who is the owner of that warehouse in Tamil Nadu, wishes to know as to whether it is required to obtain registration to conduct its business. So, we did not study anything about compulsory registration for a warehouse operator. So, compulsory registration is not required. Whenever its turnover limit is exceeded, at that time it will have to take a GST registration. But because it is storing some taxable goods, so it will have to obtain that unique enrollment number. Right, that was applicable for the transporter as well as the warehouse operator, right? So registration is not required. But it is required to obtain a unique enrollment number, right? Similarly, Messrs. Speedofast Enterprises wishes to obtain a unique common enrollment number for generating e-way-bills. Which of the following statement is true? Now, Speedofast is having offices in multiple places now. Maharashtra, Gujarat and Kerala. So now the confusion is, when it is preparing the e-way bill, it should prepare using which GSTN, right? So for that purpose, it can obtain the common enrollment number. So it is not eligible. No. Is eligible for obtaining a CEN as transporter is registered in multiple states, and after obtaining the CEN, it can use either CEN or its GSTN. Yes, B is the correct answer. That was the purpose of obtaining. Right? Then it can use only that CEN, not the GST number, because it was having multiple GST numbers. It obtained a CEN. So now while preparing the e-way bill, it will use its CEN. Yes. Then after that, D is the correct option, right? For the second one, D is the correct option. Here it can use any number for e-way bill. No, it can use only the CEN. Then whether GQF Private Limited is required to generate e-way bill in case of transfer of goods to Messrs. Jamuna Enterprises. When GQF Private Limited is sending the goods to Jamuna Enterprises, check where is Jamuna Enterprises means job worker, means GQF is principal. Can we say whenever principal is sending it to the job worker and both are situated in two different states, then e-way bill is mandatory irrespective of the amount. Acha, GQF was in Maharashtra only, right? Yes, but where is Jamuna situated? Yamuna is in Maharashtra, Jamuna is in Madhya Pradesh. We are sending to whom? We are sending it to Jamuna, that is Madhya Pradesh. So can we say states changes? So e-way bill is mandatory irrespective of the value of consignment. Yes, C is the correct answer. Then Messrs. Speedofast Enterprises wants to transport multiple consignments of GQF Private Limited in a single conveyance. These consignments are of different consignees and individual e-way bill with different validity periods have been generated. Can the Speedofast Enterprises generate one consolidated e-way bill? Yes, it can generate in EWB02. Yes, B is the correct answer. Done, manageable, simple now. Chalo, let's go to the next one. Case scenario number 36. Let's try this one, everyone. Looks like a nice question. Yes. So the previous question that we did, that was mainly on that e-way bill, then your common enrollment number, those procedural part from accounts and records and e-way bill chapter. It was from that. Chalo, let's go ahead. Case scenario number 36. Galgotia Travels Limited is established on 3rd April in the city of Bangalore, Karnataka, and primary objective of the company is to provide air-conditioned contract-based passenger transportation service at affordable fares. The company obtains voluntary registration under GST from 1st May. On 1st July, the company purchased motor vehicles omnibus of various seating capacities as follows. So seating capacity including driver is so and so, number of vehicles purchased is this, purchase price per vehicle and rate of GST is so and so. Now for the month of July, GTL associated with POCO Limited to enhance the business operation. POCO Limited owns and operates an electronic platform for supply of passenger transport services in Bangalore. The company developed an application called POCO. So it is an e-commerce operator through which the customers can access the nearest available motor vehicles and avail the services. POCO Limited collects the consideration for the services from the customers and remit the same to the GTL after retaining the commission. The details of few bookings of GTL for the month of July. These bookings are obtained by GTL on its own account and not through POCO. So this is not through e-commerce operator. So these were the order number. Can you see this? These were the order number. Order number so and so, date of travel starting from so and so. Residence of the customer is here, date of payment or booking is this, status of customer is given. Okay, so this way they have given you 6 types of bookings and they are registered. Okay, here wherever they have put the star, they are registered in the state where they are residing. Now, in all the above cases, journey is a single day journey and invoice is issued electronically on the date of travel immediately after completion of journey. The details of passenger transportation services supplied through POCO, that is through e-commerce operator, and GST liability is as follows. So, for July, August, September, so and so is the liability and so is the amount of taxes. All the amounts wherever given are exclusive of taxes. Booking is confirmed only after paying the total fare. There is no inward or outward supply of GTL other than these, and assuming all the other ITC conditions have been fulfilled, based on the scenario given above, choose the most appropriate answer. Now, first one, let's try one by one, everyone. Now, let's try one by one. Yes. amount of blocked credit in respect of motor vehicle purchased by GTL. Now can we say for motor vehicle purchased, here there will be no blocked credit. Why? Because this motor vehicle is an eligible motor vehicle which is going to be further used for providing taxable services. If they are going to provide further taxable services, now they are providing AC transportation services, that is anyway taxable. So whatever motor vehicle we are purchasing, ITC on that will not be blocked. Yes. Okay. So nothing is going to be blocked. Please be careful. Where is it? Nothing is going to be blocked here. D is the correct answer. D is the correct answer. Yes. Please be very, very careful with this. Yes. Then after that, the next one, amount of GST payable through electronic cash ledger by GTL on the services supplied by it through POCO Limited during the month of July. During the month of July, ignoring the provisions of Rule 86B of the CGST rules. Okay, so how much is the tax payable when the service is supplied through e-commerce operator? Through e-commerce operator. Yes. Let's do the calculation. Okay, let's do the calculation, everyone. Now, what did we study for e-commerce operator in section number 9.5? That whenever we are providing the services through an e-commerce operator of omnibus, okay, of omnibus, and if the main supplier is a company, then can we say section number 9.5 is not applicable? That is, there the eco is not responsible to pay the tax and the main supplier will be liable to pay the tax. So can we say if the main supplier is liable to pay the tax, main supplier, this for which month are they asking? They are asking this for the month of July. They are asking this for the month of July. So can we say for the month of July, so and so amount of tax is required to be paid by us, right? 9 lakh, 4 lakh. And while paying this, can we say the main supplier is paying this tax, can he also avail the ITC? Okay, for the month of July, what ITC will be available? Did we purchase anything during the month of July? Did we purchase any vehicles during the month of July? Yes, we purchased these vehicles. We purchased these vehicles during the month of July. 4 vehicles, 3 vehicles, 2 vehicles, 1 vehicle. Can we do the calculation? How much GST will be available here? So if I want to do it this way, CGST, SGST and IGST, how much credit will be available? Let's do that calculation, everyone. Yes, so for the first one, we purchased 4 vehicles. So total 40 lakh rupees was the purchase amount multiplied by 9%. So can we say 3.6 lakhs and 3.6 lakhs? For the second transaction, 12 lakhs multiplied by 3 vehicles. 36 lakh multiplied by 9%, that is 3,24,000 plus 3,24,000. Then 11%, 14 lakh multiplied by 2, 28 lakhs. 28 lakhs multiplied by 9%, 2.52 lakhs and 2.52 lakhs. And IGST, only 1 vehicle, 15 lakh multiplied by 18%, that will give me 2,70,000. Can we say this is the ITC available with us? Here it is 2.7 lakh. Here it is 3.6 plus 3.24 plus 2.52. That gives me 9.36. And here also it will be 9.36. Yes, this is the amount of ITC available. Can we set it off against our liability? Can we set it off? Yes, we can set it off. Everyone, can we set it off? Yes. So first we will set off which liability? First we will set off which liability? First, we will complete our IGST liability, but IGST credit that we have is only 2,70,000. How much is still payable? How much is still payable? Can we say 1,30,000 of IGST is still payable? For that, can we use our CGST credit? Yes. How much amount of CGST credit do we have? 9,36,000. 9,36,000. So can we say we will use 36,000 first, because 9 lakh we will leave it for CGST liability. Yes, similarly, SGST credit also I have got same 9,36,000. Out of that 9 lakh I will keep it for SGST liability. More 36,000 I will subtract here. How much will you get? 1,30,000 minus 36,000 minus 36,000. I am left with 58,000 of IGST liability. This I will have to pay in cash. Yes. Okay. So nil and 58,000. This is the amount that we will have to pay. Then amount of tax to be collected at source ignoring the bifurcation by POCO Limited on taxable supplies made by it during the months of July, August and September. How much amount of TDS is required to be deducted? So do you recollect TDS amount will be 0.5% of the net taxable value? Yes. How much was the value of supply during value of supply will be this. So on these we will calculate 0.5%. 1 crore 30 lakhs multiplied by 0.5%. 65,000 will be for the first one. TCS amount. For the second one, it will be 1 crore 25 lakh multiplied by 0.5%. That is 62,500. And then 1 crore 40 lakhs multiplied by 0.5%. That is 70,000. So 65, 62,500 and 70,000. 65, 62,500 and 70,000. This is the amount of TCS applicable. Yes or no? Yes. Then place of supply for order number 435, 534 and 987. Where is it? 435, 534 and 987. For these three we need to find out the place of supply. So normally for place of supply for passengers is when it is provided for B2B, it will be the location of the recipient. When it is B2C, then the place where the person embarks for a continuous journey. So here for 435 it was provided to an unregistered person, means where he is starting his journey. So here the place of supply will be Bangalore. Here it was provided to registered person, so his residential place will be the place of supply, that is Hyderabad. Yes. And 987 again unregistered person, so the place from where he is starting his journey, that is Hyderabad. So it will be Bangalore, Hyderabad, Hyderabad. Bangalore, Hyderabad, Hyderabad. Yes, A will be the correct answer. Yes. And then the last one, check what is the last one. What is the time of supply for order number 234, 777 and 001? Two 34, 777 and 001. Okay, for these we need to find out the time of supply. So now what are the time of supply provisions? Can we say here FCM is applicable? Yes, FCM is applicable. So in case of time of supply, FCM is in case of FCM, the time of supply for services will be as per section number 13(2). So the time of supply is going to be the date of, if the invoice is issued on time, then date of invoice or date of payment, whichever is earlier. If the invoice is issued late, then date of provision of service or date of payment, whichever is earlier, right? So now here, and within how much time are we required to issue the invoice? Within 30 days from the provision of service. Chalo. Now let's start calculating it for CA 234. For CA 234, what is the date of travel? Date of travel is 5th of July. Yes, so service is completed on this day. So invoice should be issued within 30 days. Now, have they given you the date of invoice? So we'll assume that the invoice is required. They had given that invoice is issued on the same day after the journey is over. This is what. So we'll assume this as the date of invoice also. This is the date of invoice and this is the date of payment, whichever is earlier. So for CA 234, it is going to be 3rd of July. 3rd July. Right. Then for 777, it will be 20th of July. And for this, it will be 23rd of July. So basically 3rd July, 20 July, 23rd July. C is the correct answer. Yes. Chalo then, let's go to the next one. Everyone, let's try the next one. Case scenario number 37. Let's try this. Chalo, let's go to the next case scenario, everyone. Case scenario number 37. Mr. A, registered under GST, is a practicing chartered accountant who is supplying the service in the field of auditing and assurance. His earnings during the current financial year are as follows. Income from auditing and assuring services, 1 crore 86 lakhs. Income from acting as an examiner from the ICAI and ICSI, not on their rolls, in the month of June is 2,50,000. Rental income from a commercial property during the year is 13,90,000. Rental income from a commercial property. Okay. Further, in the month of April, Mr. A purchased 10 computers at a price of 25,000 each for his office, as new staff has been recruited by his HR team and has availed and utilized ITC on the same. On 31st October, out of these 10 computers, Mr. A donated 2 computers to blind school within the state. Open market value of these computers is 10,000. Mr. A belatedly filed GSTR 3B for the month of December by 5 days. Delay by 5 days. Net tax liability for the month of December was 1,80,000 and gross tax liability was 2 lakhs. Applicable rate of GST is 18%. All the amounts are to be considered as exclusive of taxes wherever applicable. Opening balance is nil. Other conditions of ITC is fulfilled. They are filing the return on monthly basis. Give the answers for these 5 questions. First one, assuming that the current financial year is financial year 24-25, Mr. A is required to maintain the books of accounts for the said financial year under GST law up to. So can we say it is 32 months from the due date of filing the annual return for that financial year? So for this financial year, it will be 31st of December. 31st December 2025 is the due date for filing the annual return. From there, we will take 72 months. 72 months is nothing but how many years? It is 6 years. So it will be 31st December 2031. 31st December 2031 is the correct answer. Yes, or 1 year. What was the provision? 72 months from the due date of furnishing annual return, or 1 year after the appeal has been disposed of, whichever is later. Then aggregate turnover of Mr. A for the current financial year. What is his aggregate turnover? Take your calci, everyone. What is his aggregate turnover? Add up all the 1 crore 86 lakhs plus examiner 2,50,000 plus rental income from commercial property 13,90,000 and computers donated. Computers donated will be deemed as a supply, right? Why? Para number 1. Permanent disposal of business assets on which we had availed the ITC. Even if it is done without consideration, it will still be considered as a supply. So open market value will be taken of these 2 computers, that is 10,000 each. So plus 20,000. Yes, so 2 crore 2,60,000. D is the correct answer. Yes. Then after that, the total taxable turnover of Mr. A for the current financial year. What will be his taxable turnover? What will be his taxable turnover? Let's do the calculation, everyone. So 1 crore 86 lakh, this will be fully taxable. Commercial property, that will be fully taxable. Okay. Examiner, I am keeping it on hold, and that 20,000 of computers donation, that will be fully taxable. So now, whatever answer you had got about 2 crore 2,60,000. Okay, from that we will subtract this 2,50,000. Why? This 2,50,000 is exempted now. This is exempted. Why this is exempted? Why this is exempted? Can we say this is exempted because of entry number 66, educational institutions? Yes. Do you recollect that? Yes. What did we study in that education institution? Any services, any input services and any output services in relation to conduct of examination will be totally exempted, and that was exempted for all the types of education institution. Yes. So this is exempted. So that was included in your aggregate turnover, but that will be excluded from your tax for calculating the taxable turnover. So from the above one, you can straight away subtract 2,50,000. So you will get 2 crore 10,000. That will be the answer. So A is the correct answer if I am not wrong. Yes, simply do the calculation. Are you getting A as the answer? Okay, then which of the following transactions or activities are considered as supply under GST law? What is considered as a supply? So services provided as an examiner. Yes, it is a supply, just that it is an exempt supply, but it is a supply. Rental income is a supply. Donation of computers to blind school without consideration. Even this is considered as a deemed supply. So can we say all the three are considered as a supply, just that it is either exempted or it is taxable. And then, which of the following statements is correct with respect to interest liability of Mr. A for the month of December? Consider the year to be of 365 days. What was the default done here? What was the default done? He belatedly filed his GSTR 3B by 5 days. So can we say on the net tax liability, interest will be applicable? That is on 1,80,000 interest will be applicable at the rate of 8% and for 5 days. Calculate 1,80,000 multiplied by 80% multiplied by 5 divided by 365. That gives me 443 or 444 rupees. Check what is the correct answer. Interest liability is this. He can pay the same either from, no, this can be paid only from electronic cash ledger, na? He needs to pay it in cash. Because interest, penalty, etc. cannot be paid from electronic credit ledger. Only tax can be paid from electronic credit ledger. Yes. Chalo, then going on to the next one. Let's go to the next one. Case scenario 38. Dhairya Limited, a supplier registered under GST in Gujarat, is exclusively engaged in manufacturing textile products. It has opted to pay tax under composition scheme under section 10.1, 10.2. Yes, the following information is available for the current financial year. Total turnover during first quarter is 1 crore 50 lakhs. The option to pay lapses from 1st of July and it goes into regular scheme as a monthly return filer. Tax paid on inputs lying in the stock as on 30 June. Invoice dated 4th May. So it was purchased during the last 1 year. So we'll get the credit of this. Tax paid on inputs contained in semi-finished goods is this much. And invoice was dated 31st December of the preceding financial year. Can we say when this was purchased during the last 1 year only? So this ITC is also available. A machinery was purchased on 15th March of the preceding financial year for 10 lakhs. Applicable GST rate was 12%. Capital goods basically. When you are converting from composition scheme to regular scheme, will you get the credit? Will you get the credit of composition scheme on machinery? Yes, you will get the credit, but not fully. Some 5% per quarter for some months will be reduced. Okay. Then on 10th August, Dhairya Limited sold goods worth 2,40,000 to Ahmedabad Municipal Corporation. The contract was to supply only goods and not services. Okay. Then it sold 10 lakh to Fishing Department of Government Gujarat. Then apart from the above details, sales and purchases worth so and so were respectively also reported during July to February. Okay. Then during the month of March of the current financial year, Dhairya Limited manufactured 2,500 meters of fabric. Sale value of fabric is 200 per meter. ITC pertaining is so and so. Dhairya Limited exported 1,500 meters of fabric under bond and sold the balance 1,000 meters of fabric in Gujarat. Okay, so 2,500 meters was manufactured, 1,500 meters was exported and 1,000 was sold within the same state. Now, there is no other transaction or ITC conditions have been fulfilled. No due dates have been extended. Rate of GST is 18% on inward and outward. All the purchases and sales are intrastate except the export sales. All the amounts given are exclusive of taxes. Let's try to give the answer from question number 1 to question number 4. Chalo. The net GST payable in cash after setting of TDS credit, if any, by Dhairya Limited during the period from April to February is, how much is the net GST payable? Okay, after setting of TDS. Okay, so now let's try to analyze each one of it in detail. This is for which period are they asking? This is from April to February, means excluding March. Okay, only from April to February they are asking. So can we say on this first amount, that is on 1 crore 50 lakhs, you would have paid the tax under composition scheme. Because you are a manufacturer, you would have paid tax on it at the rate of 1%. That is separate from April to June. So 1 crore 50 lakhs multiplied by 1% will give me, I'll write in another ring. Can we say this will give me 1,50,000? This is one tax payable, but this is under composition scheme. Okay, then after that, can we take the credit of this 20,000? Yes, we can take the credit. ITC of 20,000 is available. Here can we say ITC of 10,000 will be available? Yes. Okay. Then for machinery also we can take some ITC. We can take some ITC, but this was purchased when? On 15th March of the last year. Okay. So can we say from 15th March of the last year till 1st of July of the current year? For this period we will have to reverse the ITC. 15th March of the last year means 1 quarter is in the last year itself and 1 quarter of the current year. So can we say for 2 quarters we'll have to reverse the ITC. So 10 lakhs minus 10 lakhs multiplied by 5% into 2 quarters multiplied by 18% rate of GST. So can we say 18,000 we will reverse? Achha, first of all, how much is the ITC on that? 10 lakh multiplied by 18%. 10 lakh multiplied by 18%. So ITC was 1,80,000. From that we will reverse multiplied by 5% for 2 quarters. We will reverse 18,000. So we can take the credit of 1,62,000. How much does it come to? Is it coming to this much? Or is there some mistake? 10 lakh multiplied by 18%, that gives me 1,80,000. Acha, then this 1,80,000 multiplied by 10%. GST rate is 12%. I forgot this. I did not read this. Mistake. So 10 lakhs multiplied by 12% is my total available ITC, that is 1,20,000. Then 1,20,000 multiplied by 5% for 2 quarters, that gives me 12,000 rupees. So how much does it come to? See the amount. So how much will be the credit available? Can we say 1,20,000 minus 12,000? That gives me 1,08,000. So 1,08,000 of ITC will be available here. Yes. Then after that, on 10th August, Dhairya Limited sold goods worth 2,40,000 to Ahmedabad. This is for the month of August. And the contract with AMC was to supply only goods and not any services. So can we say on this normally we will have to pay the tax at the rate of 18%? Tax payable. Yes, how much? 2,40,000 multiplied by 18%. So tax payable is equal to 43,200. Pay this much. Yes. Achha, no TDS will be applicable here because the contract amount is only 2,40,000. Then Dhairya Limited sold goods 10 lakh to Fishing Department of Gujarat. So on this 10 lakh again 18% GST will be payable. So can we say into 18% is equal to 1,80,000. This is the amount that we will pay now. Yes. Now on this can we say TDS will be applicable? On this TDS will be applicable. Yes. So 10 lakh multiplied by 2%, that will be the amount of TDS. TDS will be 20,000 rupees. That much credit we will get. Then apart from above, from July to February, these are your sales and these are your purchases. What is the rate of GST? Rate of GST was 18%, na? Yes. So on this 15 lakh, can we say 18% is payable? On sales, 15 lakhs multiplied by 18%, that gives me 2,70,000. This we will have to pay. Yes, and on this 12 lakh, we will get the ITC. 12 lakhs multiplied by 18%, that gives 2,16,000. This is the amount of ITC. Right? For March, anyway, they are not asking. Now let's do all the calculations, everyone. First, how much is my output tax payable? So for composition scheme, can we say this composition scheme we will take it separately because this has to be paid in cash. Achha, apart from that, how much we have to pay? Can we say this 43,200 we will pay? This 43,200 we will pay. Then this 1,80,000 we will pay. And this 2,70,000 we will pay. These are the figures that we will pay. From that we will subtract our ITC. ITC will be, first ITC will be this 20,000. So minus 20,000. Next ITC will be this 10,000 minus 10,000. Next ITC will be 1,08,000 minus 1,08,000. Yes. And then after that next one. Then after that the next one. What is the next one? TDS. How much will be the TDS? TDS will be 20,000. Are you getting it as 3,35,200? Yes, please do the calculations. Yes, and also yes, this ITC is also there. 2,16,000. Subtract that also. 2,16,000 ITC. After that, you should be getting something around 1,19,200. Are you getting that? After subtracting everything, you will get 1,19,200. This you have to pay in cash. Plus your composition 1,50,000 you will pay in cash. So total payable will come to 269,200 in cash. See if you're getting that answer. That is nowhere there in the option. Why? Let's go and check. Let's go and check. Where is the mistake? So 43,200 we paid, 1,80,000 we paid, and 2,70,000. 493,200 we had got as our output tax. ITC 20,000 is there, 10,000 is there. This is wrong. 2,16,000 we got, TDS of 20,000 we got, and composition scheme of liability 1 lakh. This is wrong. 178,200. Why? Array, they have taken the rate as 18%, whereas the rate is 12%. So this entire calculation is mistaken. This is a mistake in ICAI. This is the mistake in ICAI. Way of calculation is correct, but the rate of tax that they have taken is wrong. Right? Because on that particular machinery, how much was the rate given? The rate was already given. The rate was already mentioned as 12%. So this is the ICAI mistake. Please rectify it. Please rectify it. Here it will be 12%. So it will be 1,20,000 minus 12,000. So that will come to, this will come to 1,08,000 instead of 1,78,200. Accordingly, your answers will change. 20,000 plus 10,000 plus 1,08,000 plus 2,16,000 plus 20,000. This will become 3,74,000. 493,200 and plus 1,50,000. So my final answer will be 269,200. My final answer will be 269,200. Mistake area. Yes. 269,200. Yes. Then ITC available. How much is the ITC available? Just now we did the calculations. ITC on that inputs 20,000, next inputs 10,000, then that machinery 1,08,000, and that purchases 2,16,000. These were the ITCs available now. ITCs other than TDS credit now. So how much are you getting? Answer should be 3,54,000. It will not match because they have done the calculation as per 18%. Yes. Then the amount of GST refund available to the area for the month of March. How much GST refund will be available for the month of March? Very, very important. Let's do the calculation. This is from refunds under GST chapter. Let's give it a try, everyone. How much will be the amount of refund available? So can we say there was a formula for taking in the month of March there was exports, right? So whenever there is any export, what is we apply rule number 89.4. How do we calculate the refund? How do we calculate the refund? Whatever is our net ITC. Okay, that whatever is our net ITC. Do you recollect the formula? Yes, I will write it fully. I will write it fully. Whatever is my turnover of zero rated supply plus zero rated supply of goods as well as services. Okay, that divided by adjusted total turnover multiplied by net ITC. This was my formula. Now, how much is my zero rated supply? Zero rated supply during the month of March. How much is it? So I exported 1500 meters now at the rate of 100. So multiplied by at the rate of 200. So 1500 into 200. 1500 into 200 is going to give me 3 lakhs. Yes. And then my adjusted total turnover will be total turnover, that is 2500 multiplied by 200 rupees per meter, that is 5 lakh. So my ratio of export is 3 lakh divided by 5 lakh multiplied by net amount of ITC, multiplied by net amount of ITC. How much is my net amount of ITC? How much is going to be my net amount of ITC? So ITC pertaining to such output is 27,500, 27,500. That is 55,000. See how much does it come to? 55,000 multiplied by 3 lakh divided by 5 lakh. That gives me 33,000. Is it giving you 33,000? Yes. Okay, this 33,000 is what? This 33,000 is the calculation of refund as per rule number 89.4. But how much is the maximum refund available to you? Do you recollect there was a restricting clause there? The restricting clause was whatever is the formula of refund, as per the formula, whatever amount of refund that you get, that or the balance which is available in the electronic credit ledger at the time of filing the refund application. Do you recollect? Or the balance in the electronic credit ledger at the end of the tax period for which the refund claim is being filed. Right? So now as per the formula it is 33,000. What about your electronic credit ledger and what about your electronic cash ledger? Let's see what is your let's see the balance. So can we say when we see your balance in electronic credit ledger, can we say for the month of March, before that anyway we had paid this amount in cash, so we did not have anything in our electronic credit ledger. So now for the month of March, how much is my output liability? See, on export my liability will be 0, but on local sales there will be some tax liability. That is 1000 meters into 200 rupees per meter multiplied by 18%. So my tax liability will be 36,000 minus ITC. ITC just now we saw it was 55,000, 27,500, 27,500. So how much is my balance in electronic credit ledger? My balance in electronic credit ledger is a positive balance of 19,000 rupees. But I am asking for a refund of 33,000. Will I get 33,000 or will I get only 19,000? I will get only 19,000. So this is the correct answer. Yes, very, very important. Very, very important. Yes. And then assuming that the goods have been sold by Dhairya Limited to fishing department for a value of 1 lakh instead of 10 lakh. Net GST payable by Dhairya Limited in cash during the period from July to February will be. Means they are asking instead of 10 lakh if that value is 1 lakh only. Instead of this 10 lakh if the value is only 1 lakh. So where all will it make a difference? Can we say everything will change now? Now calculate the net liability. How much is the net liability then? Then it will be liability will be 43,200. Yes. Then for the 7th point, the liability instead of 1,80,000 it will be only 18,000. Then for the next one it will be 2,70,000. Yes, this will be my output liability, that is 3,31,200 minus from this ITC of this 20,000 will be available minus 10,000 will be available. Yes. Then what about this 1,08,000? Yes, even that will be available. Okay. Then what about this 20,000? There will be no TDS credit because now the value has reduced to 1 lakh rupees only. So no TDS. And then this ITC of 2,16,000 will be available. So can we say there will be a refund? Means nothing will be payable in cash. I am getting a refund of 22,800. Yes. So nothing is payable. Amount is nil. Okay. But please do the correction in your calculations. Here also they have done the calculation as per this 18% only. So it will be 12%. Either you change this or simply change the question. In the question, make the rate of GST as 12%, whatever it is. Yes. Chalo, last case scenario was important. 38th one was important. Please mark it as important. Please consider it again for your revision. Chalo, then going ahead, case scenario 39, same question is there in our book. Same to same, ditto, copy paste question is there in our book. Just that there we had a descriptive question. Here they have just converted into a MCQ type of a question. Let's give it a try. Now, Avient Limited, registered in Noida, Uttar Pradesh, is a supplier of machinery used for making bottle caps. The supply of machinery is effected as under: wholesale price at which it is ordinarily supplied is 42 lakhs. However, the actual price ranges, there will be plus or minus 10%. Apart from the price of machinery, Avient Limited charges the so and so things from the customer, incidental expenses. So this will be always added to the value. The machinery can be dismantled and erected at another site. For that, separate charges will apply. Transportation of the machinery to the customer's premises is arranged by Avient through its third-party service provider, that is GTA. The customer enters into a separate service contract with GTA and pays the freight directly to it. The cash discount of 2% on the price of the machinery charged from the customer, means whatever we are collecting from the customer, okay, at the time of supply, on that 2% discount will be available if the customer agrees for a payment within 15 days from the date of receipt of machinery at his premises. In event of failure to make the payment within 15 days, the company will recover the discount. From the customer, no separate amount of GST. So this discount will be including GST that we are going to recover, and charges simple interest at the rate of 1% per month or part of the month, no separate amount of GST. So simple interest also which they are recovering at the rate of 1%, even that is inclusive of GST. Okay, this is provided they are not doing the payment within 15 days. This is a simple interest is on the total amount due from the customer towards the machinery supplied from the date of making the supply till the date of making the payment. However, no interest is charged on the tax dues. For every machinery supply, Avient Limited receives a price-linked subsidy of 2 lakh from its holding company Diligent Limited. So Avient is not receiving this from the customer, but it is receiving the subsidy from its own holding company. So can we say this will form part of the value? But this is not recovered from the customer, right? This is not charged from the customer. This is not to be included in the price charged from the customer. Then Avient Limited has supplied a machinery to an unrelated party, Daffodil Limited, on 29th August at 40 lakhs excluding all taxes. Invoice was issued on 29th August. Corporate office of Daffodil is at New Delhi, has entered into a contract with Avient Limited for supply of machinery. However, the machinery is installed at its registered manufacturing unit in Gurugram, Haryana. Can we say in place of supply where the goods involve installation, the place of supply will be the place where it is installed, that is Gurugram. So this will be the place of supply. Yes, location of recipient is New Delhi and location of supplier is Noida, Uttar Pradesh. Okay. So it is the interstate supply. Daffodil Private Limited has paid the freight directly to the GTA. Discount at the rate 2% on the price of the machinery excluding taxes was given to Daffodil as it has agreed to make the payment within 15 days. However, it paid the consideration only on 30th September, means there was a delay. Assume the rates of taxes. On the machine, this is the rate of tax. On transportation, this is the rate of tax, and other services, this is the rate of tax. All the amounts are exclusive of GST. Opening balances nil. Other conditions of ITC have been fulfilled. Based on the facts, give the answer for question number 1 to question number 4 below. Now, the place of supply of the machinery by Avient is the place where it is installed, that is Gurugram, Haryana. Gurugram, Haryana will be the place and it will be considered as interstate. Then GST liability of Avient Limited for the month of August, okay, only for the month of August is how much? Let's do the calculation. What is the value of machinery? Machinery is supplied at what value? It is supplied at 40 lakhs. Take 40 lakhs in your calci, everyone. Take 40 lakhs in your calci. Yes. 40 lakhs plus 10,000 plus 1 lakh. Okay, these values has been added. Transportation to the customer is arranged by Avient through a third party, but customer enters into a separate contract. So it is not the responsibility of the supplier. Okay, so it will not be included in the cost. Okay, then after that we received cash discount of 2%. Okay, 2% is on the price of the machinery charged from the customer. Price of the machinery was 40 lakh. So 40 lakh multiplied by 2% minus 80,000 rupees. Yes. Then after that discount is over. Simple interest etc. we are going to receive because later when that person is going to do us the payment. Acha, price link subsidy will be added because this is not a subsidy from government. So till here it is 42,30,000. That's it. Yes. So on 42,30,000, the rate of GST will be 18%. 12%. So can I say my tax is 5,07,600? Yes. Chalo, then supply of machinery and supply of installation is, can we say it is a composite supply? And time of supply of interest will be what? Time of supply for interest will be when it is received, na? Can we say when are we receiving the payment from that person? They paid the consideration on 30 September. So can we say 30 September will be the time of supply for that? So composite and 30 September. A is the correct answer. Yes. And the next one, the GST liability of Avient for the month of September. For the month of September, that is for interest and discount. Remember, when the person was not doing the payment within 15 days, we were recovering the amount of discount given and we were also recovering the interest. How much amount of discount had we given? We had given the discount of 80,000 rupees. Yes, and how much will be the amount of interest? Check what is the percentage of interest. Interest is 1% per month on the total amount due from the customer. How much was the total amount due from the customer? Total amount due from the customer was how much? It was 40 lakhs for the machine plus 10,000 and plus 1 lakh. 41 lakh 10,000 was the amount due from the customer. 2 lakh was the subsidy that was received from my holding company. So amount due from the customer is 41 lakh 10,000. On this, interest will be charged at the rate of 1%. For how many months? From the date of making the supply till the date of payment. When did we do this supply? When did we do the invoicing? Acha, invoicing was done on 29th of August and payment we received on 30 September. Can we say 29th August to 30 September will be 2 months? 29th August to 29th September will be 1 month and then 1 more day. So it will be considered as 2 months. So multiplied by 2 months. So 41 lakh 10,000. 41 lakh 10,000 multiplied by 1% multiplied by 2 months. That gives me 82,200. That gives me 82,200. That is the amount of simple interest. Discount was 80,000. We will recover it back. So the total supply amount will be 162,200. But this is including GST. So go reverse. 162,200 divided by 112. So basic value will be 1,44,821 and GST amount will be 17,379. 17,379. See what is the GST liability. 17,379. Are you understanding this? Manageable till here? Yes, same question we have it in our question bank. Chalo, then let's go ahead everyone. Let's go to star card. Same question again we have got in our question bank. Same to same question. We have it in our book. Yes, let's give it a try. Case scenario number 40. Chalo, let's start. Starcart Limited owns and operates a web portal in the name of Starcart and is registered with the jurisdictional GST authorities in Delhi as an e-commerce operator. So Starcart is e-commerce operator based in Delhi and is liable to collect TCS under section 52. Starcart provides listing service to various sellers for selling the goods to ultimate customers, and plus Starcart also sells its own products through the same web portal. For listing services provided, it charges a listing fee at the rate of 10% of the turnover of the goods sold by the seller in a particular month. Such listing fee is recovered from the seller irrespective of any return of the goods sold. So basically, whatever is the turnover of that 10% is the listing fee. The customers can choose from wide range of goods listed on the web portal and place an online order for goods. The payment is made by the customer through payment gateway in online mode. At the time of monthly settlement, Starcart makes the payment to the seller after adjusting the TCS at applicable rates. Invoice for the goods sold is issued by the seller in the name of the customer and tax is charged on the basis of location of seller and the customer. Goods are shipped directly by seller to the customer and there is no responsibility on the star cart to ship the goods. In case of return of goods by the customer, the shipping is arranged by star cart, for which it is charging a fee of 20% of the value of the goods returned as cancellation charges and refunds the balance amount to the customer. So basically two incomes of star cart. One is the listing fee, that is 10% of the turnover. Another income of star cart is cancellation charges, that is 20% of returns value. For the 10% of the value of the goods returned is collected from the seller by star cart as handling. Okay, third income is handling charges, that is 10% of returned goods. In the month of January, Pulkit, a resident of Rajasthan, purchased following goods from star cart. Customer is purchasing now. Laptop having a value of 50,000, printer having a value of 10,000. Both products are sold by Infocom. Infocom is one of the main suppliers who is listed on star cart and registered in Uttar Pradesh. Mobile phone having a value of 30,000 sold by star cart on its own capacity. Can we say on this TCS will not apply? But normal GST liability of star cart will come in between. Yes. Acha, CCTV camera system having a value of 1 lakh sold by Secure World listed on star cart and registered under GST in the state of Gujarat. Okay. All the amounts are exclusive of GST. Opening value is nil. All other conditions is fulfilled. Further, there is no other transactions mentioned other than those given above. Rate of GST is 18%. Choose the most appropriate answer. Same question we have done in our class. Multiple choice question. The net tax liability including TCS of star cart for the month of January is, what is the tax liability of star cart? Okay. So now for that, can we say first of all we'll have to see the TCS liability also. So whatever supplies are done as an eco, okay, whatever supplies are done as an eco, on that TCS will be applicable. On that TCS will be applicable at the rate of 0.5%. So can we say here on this 50,000 and on this 10,000 TCS provisions will be applicable? Yes, it will be applicable. So on this 60,000, what is the TCS amount? 60,000 multiplied by 0.5%. That is 300 rupees. Can we say here TCS will be 300 rupees? Yes, this it will have to collect and pay to the government. Acha, on this there will be no TCS. Then on CCTV camera, again there will be TCS. Yes, that is 1 lakh multiplied by 0.5%. That is 500 rupees is the TCS liability. Okay, this is at least my TCS liability. Then think from star cart. What other liability is there? Can we say star cart is going to collect? Acha, on these goods, can we say GST liability will be there? On 30,000, 18% GST liability. So here 5,400 will be GST payable. Yes. Acha, what were the other incomes on star cart? What were the other services provided by star cart? Can we say listing services, etc. was there? Acha, listing services. So 10% of the turnover of the goods sold by the seller. How much turnover of the goods were sold by the seller through star cart? Can we say here 60,000 was the turnover and here 1 lakh was the turnover? Yes, so 1,60,000 was the turnover multiplied by 10%. So the listing fee is equal to how much? 1,60,000 multiplied by 10%, that is 16,000. This is also taxable supply. On this we will have to pay the GST multiplied by 18%. 2880 is the GST payable. That's it. Acha, returns, handling charges and return charges were there, but there is no information given about any cancellation. So see how much is my tax total payable including TCS. 300 rupees of TCS, 5,400 of GST, 2880 of GST and 500 of TCS. Can we say 9080 is payable? 9080 is payable. Yes. Acha, we were situated in which state? We were situated in Delhi. Okay, we were situated in Delhi. E-commerce operator is situated in Delhi. And for the first transaction, that is for this one, Pulkit is based out of Rajasthan. Seller is based in Uttar Pradesh. Can we say here the place of supply will be the place where the movement of the goods get terminated? Movement of the goods will get terminated in Rajasthan and the location of supplier is Uttar Pradesh. Main supplier is Uttar Pradesh. POS is Rajasthan, LOS is Uttar Pradesh. So this will be IGST. Similarly, here we have sold it to Rajasthan person and we are of Delhi. So even this is going to be IGST liability only. Next, similarly, listing fee. Listing fee, we are providing it to the seller. So that is also IGST. And last, TCS is also going to be IGST. So all are IGST liabilities only here. Then after that, let's go ahead. Let's go to the next one. Second question. The net GST payable in cash after set off of credits, if any, of Infocom Limited and Secure World for the month of January. Okay, means what is the liability of Infocom and Secure World? First, let's calculate the liability for Infocom. So can we say here, the main tax is required to be paid on this 50,000 and 10,000. The main tax is required to be paid by Infocom Limited only because it is good. So here there is no liability of e-commerce operator. E-commerce operator's liability was limited to TCS. So can we say Infocom will have to pay tax on the 60,000? 60,000 multiplied by 18%. That will give me how much? That will give me 10,800 rupees. That is the first liability. Acha, then second one was sold by Starcart and third one was of Secure World. Acha, let's calculate the liability for Secure World. Secure World sold it for 1 lakh multiplied by 18%, that is 18,000 rupees. Then this is their output liability. What about their input tax credit? Can we say they have availed credit from, they have availed the services from Starcart listing services? Acha, listing fee was how much? 10% of the turnover. So your listing fee will be 6,000 rupees multiplied by 18%. 6,000 multiplied by 18%. ITC will be 1080. Yes, here the listing fee will be 1 lakh multiplied by 10%. That is 10,000 multiplied by 18%. That is 1,800. Right? Acha, then here they collected my TCS Infocom, from Infocom point of view, if you think, they collected TCS of how much from Infocom? 300. So it will get a credit of that. And from Secure, TCS of 500 was collected. So they will get a credit of that. See how much is the final tax payable. 10,800 minus 10,800 minus 1080 minus 300. So here it will be 9420. And here it will be 18,000 minus 1800 minus 500. So 15,700. See, are you getting that answer? 9420 and 15,700. Yes, C is the correct answer. Last question. Assuming that Pulkit returns the printer purchased from Infocom in the month of January as per return policy, and Starcart charges 20% as cancellation charges and 10% as handling charges. The net liability of Starcart. Okay, now you have to think only from Starcart point of view. Okay, or you have to think only from Starcart point of view. Chalo, let's do the calculation. Okay, so what will be the liability of Starcart now? First, what will be the TCS liability? Can we say TCS will be applicable on 0.5 at the rate of 0.5% on the net supplies? So we had done a supply of 60,000 to Pulkit. From that, 10,000 is returned. Printer is returned. Na? Printer value was 10,000. Go and check it in the question. Printer value is 10,000. That was returned. So Starcart will deduct the collect the TCS only on 50,000. 50,000 into 0.5%, that will give me 250. This is one of the liability of Starcart. Okay, this is one thing. Another thing. The liability of Starcart on its own account. It was selling, it was selling mobile phone on its own account. Liability for that will remain the same, 5,400. Yes. Next, what is the liability? Next, TCS liability from Secure, that will remain the same because there is no return happening from Secure. So TCS liability for Secure will remain the same, that is 500 rupees. Then listing fee liability will also remain the same. Total listing fee was 1,60,000. Na? Our total sales was 1,60,000. Turnover multiplied by 10%. So listing fee 16,000 multiplied by 18%. So liability on that will be 2,880. Now the new liability that will be added here is first cancellation. Cancellation, how much was the charges? Cancellation, how much was the charges? 20% of the return value. Return value was 10,000 multiplied by 20%. This is my cancellation. On that 18%. This is my income now. So we'll have to collect GST also on that. So 2000 multiplied by 18%, that is 360 rupees. And next sixth one, handling charges. Handling charges was 10% of the return value, that is 10,000. 10,000 is the return value of printer. 10,000 multiplied by 10% multiplied by 18%. So 180 rupees. All these are the liabilities. Calculate the total. Calculate the total. 250 plus 5,400 plus 500 plus 2880 plus 360 plus 180. Are you getting it as 9570? C should be the correct answer. Are you getting it as 9570? Yes. See, because returns happened, my TCS changed. Okay, and because returns happened, I am going to get more income in the nature of handling charges and cancellation charges. So in such a case, my income will increase. So income on GST on that income is also going to increase. Manageable. Chalo, done. Let's go ahead. Next one, case scenario number 41. Let's go to the next one. Chalo, let's go to the next one, case scenario 41. Advanced Traders is a partnership firm in Jaipur, Rajasthan. The firm has obtained GST registration at its HO in Jaipur and is a monthly return filer. Further, the firm is having its depot for storage of goods in another districts in Rajasthan, and they are simply added as additional place of business in the GST registration obtained at HO. Following details are provided about the firm for the month of July. Okay. Advanced Traders received goods worth 5 lakh for which GST is payable on reverse charge basis. The goods were received on 25th July. Supplier issued an invoice dated 24th July and payment for the same was debited in the bank account on 30th July. Due to absence of accountant, the transaction was recorded in the books of accounts on 1st of August. Maybe they are going to ask you about time of supply, right? Time of supply in case of this goods. Maybe they will ask about it. Okay. So we will do it if they ask. Yes, next. Mr. X, a partner in the firm, booked a hotel in Udaipur, Rajasthan for wedding of his daughter in the month of October. An advance of 5 lakh for the booking of hotel was paid by way of online payment from the current account of Advanced Traders. Hotel charged GST of 28% on the amount received as advance and issued a receipt voucher. Advanced Traders made a supply of goods worth 25 lakhs during the month of July. Out of the aforesaid supply, goods worth 5 lakh were not liable to GST. However, it inadvertently charged GST on such goods and collected the same from the customers. Okay. It should not have collected. Now that it has collected, it will have to pay it to the government. Otherwise, penalty under 74A11 will apply. Opening balance is nil. Other conditions have been fulfilled. All amounts are exclusive of GST. GST is applicable on all inward and outward supplies at the rate of 18%. Give the answers to the below questions. Compute the net GST liability to be discharged from the electronic cash ledger for the month of July. Okay, for the month of July, let's start doing the calculations, everyone. Yes. First of all, how much is the tax payable on outward supply? So we have Advanced Trader received the goods. Okay, this is my inward supply. I'm leaving it for the timing. This is also, I have booked the hotel on this also as of now. This is not my outward supply. Yes, this is my outward supply, 25 lakhs, out of which 5 lakhs were not liable to GST. Okay, out of which made a supply of goods worth 25 lakhs during the month of July. Out of the aforesaid supply, goods worth 5 lakh were not liable to GST. But it inadvertently charged the GST. So basically it has collected GST on full 25 lakhs. So 25 lakhs multiplied by 18%. Can we say 4,50,000 is payable here? This you have to pay. Yes. Acha, this is my output tax liability. Now what about my inward supply? Okay, what all ITC will be available? So can we say about this? Advanced Traders received goods worth rupees 5 lakh for which GST is payable on reverse charge. Means the recipient is required to pay the GST on it. So can we say we will pay the GST here? Yes, we will pay the GST and then we will take the credit. So 5 lakh multiplied by 18%. So 90,000 two effects. First pay 90,000 and then take the credit of 90,000. Right? And then after that, for this hotel, is there any ITC etc. available? No ITC will be available. Achha, one second. Can we say this is a personal expenditure? Even if ITC is available, it is going to be blocked? Yes, because here the hotel is also in Rajasthan and we are also in Rajasthan. So the hotel will charge CGST, SGST. But can we say the ITC on that will be blocked? Because it is for personal expenditure, it is not for business. So can we say my net tax liability will be 4,50,000 only? My net tax liability will be 4,50,000 rupees only. Yes. Okay. Now listen. Yes. Now when you see 4,50,000 is your answer. It is nowhere present in the answers, but so options are incorrect there. Let's see how they have solved it. Can you see the first one? They have done the calculation. Final answer is 4,50,000 only. Okay, but the options are wrong there. So maybe you can change this option. This is 4,50,000 and then you can pick the D option. Then the next one, amount of ITC available to advanced traders against hotel booking expense shall be dash. Would there be any change? Can we say no ITC will be available because this is personal expenditure? Doesn't matter even if the hotel is located outside India. Then what is the time limit for issue of show cause notice? In respect of that inadvertent, there is no time limit for show cause notice for that, right? See, show cause notice time limit is there. It is there for what? It is there for normal tax, short paid tax, not paid, erroneous refund, ITC wrongly availed or utilized. But for that 74A11 under section 76, there was no time limit for show cause notice. We have done this in MCQs earlier. Done. Let's go to the next one. Case scenario number 42. Everyone, let's go ahead with that. Simple one. William and Sons is a partnership firm, registered Rajasthan, filing the return on monthly basis. In the month of July, following transactions were done. Intrastate sale of goods worth rupees 10 lakh, out of which 5 lakh were liable to GST at 28% and balance at 18%. Okay. So basically on 5 lakh, 28%, on another 5 lakh, 18%. How much is the tax payable? 5 lakh multiplied by 28%. Here it will be 1,40,000 and 5 lakh multiplied by 18%. That will be 90,000. This is my tax payable. Then, okay, this is intrastate. So CGST, SGST. Intrastate purchases of goods. Okay, so 10 lakh multiplied by 28%. So can I say 2,80,000 of ITC will be available? This will be CGST, SGST if at all they require the breakup. Even this will be CGST, SGST. Now, WS intended to transfer the business as a going concern to Morgan and Sons on 31st July, and as per the terms of transfer, it will transfer all business assets worth 50 lakhs and liabilities at 20 lakhs. So we have studied this is specifically exempted. Transfer of business as a going concern is totally exempted. And WS on account of such transfer paid gift worth 50,000 to 3 employees as a reward. So even this is exempted, value is not exceeding rupees 50,000. Now, during the month of September, MS received the notice from MS. Who is MS? WS. It will be WS. WS received the notice from the GST department for the outstanding liability of 5 lakh pertaining to the period before transfer of business by WS. Such liability, sorry. MS was the new company. Morgan and Sons, MS. Okay, MS received the notice for the earlier period for 5 lakh pertaining to the period before transfer by WS. Such liability was determined after the liability arise later, but it was relating to the old period. For this purpose, assume that all assets and liabilities were transferred by WS to MS. The balance of ITC is nil. All conditions of ITC has been fulfilled. GST rate is 18%. Ignore the bifurcation. All amounts are exclusive. Very simple question. Okay. Now, the gross GST liability without set off of ITC. Gross GST liability. So, can we say my gross GST liability will be this 1,40,000 plus 90,000. How much is it? 1,40,000 plus 90,000. 2,30,000. Then this was my ITC. Going concern is exempted. Gift is exempted. Nothing. 2,30,000 should be the answer. Yes, D is the correct answer. Then in case of transfer of business to MS, what is the amount of ITC which will stand transferred? Can we say full ITC will stand transfer? Full ITC, if you are transferring full assets, basically in the ratio of assets, whatever is the balance ITC available with you, that you will transfer. Yes, because see, whenever you're transferring the ITC, in whatever ratio you have transferred the business, in that ratio the ITC is also apportioned. But here you have transferred 100% of the assets and liability. Yes. Now, how much is the balance ITC available with you? We had ITC of 2,80,000, but we have a liability of 2,30,000 also, na? So, from this 2,80,000, you will set off 2,30,000. You will be left with 50,000 rupees of the ITC. That 50,000 rupees will be transferred to the new company. Then, who is liable to discharge the liability of 5 lakh on account of notice? Both will be jointly and severally liable. We have studied this in liability case chapter. Yes, liability to pay tax in certain cases. Then, as WS transfers the business as a going concern, let us suppose that it transfers all the assets and liabilities for a lump sum consideration. So, can we say it is exempt? It is exempted from GST. I have already told you about this. Done. Then after that, going to the next one, that is case scenario number 43. Case scenario number 43. Let's go to the next one. Everyone. Simple na, manageable. 43. Chalo. KLM Limited is a large publishing and a printing house registered under GST under a single GST number in Maharashtra. It is engaged in supply of books, letters, cards, envelopes, guides and reference material. KLM Limited has front offices in Mumbai and Nagpur. Mumbai office being principal place of business, Nagpur as additional place of business. So only single registration. For receiving the orders are supplied to front office and supplied to recipient directly from the workshop located at Nagpur depending on the order. To save the time, workshop has in-house mess for the employees working in the workshop where lunch is provided free of cost as a part of agreement. During April, KLM Limited received a proposal for printing 5,000 copies of taxation book from a renowned author where only content was supplied by the author. KLM Limited agreed to supply the books. As per the requirement of the author, 2,500 copies were supplied to Nagpur office and 2,000 to the Mumbai front office where the author will collect the books. So can we say we have done a circular on this where it is a composite supply of goods as well as services. But here because the author is providing only the content, so your content is more important. So this composite supply will be considered as supply of services. Right? Satisfied with the quality of printing, the author placed order of another 10,000 pieces of letterhead during May. The design and logo was supplied by the author for printing. So in case of letterhead, we know that what is more important is the paper. So this will be considered as supply of goods. Due to these orders, KLM Limited earned a handsome amount of profit and decided to gift employees for their performance, and it gifted mobile phone worth 36,500 each to all of its employees. So the value does not exceed rupees 50,000 per employee. So this is not a supply. Now give the answers. Supply of taxation books is a composite supply, but the principal supply will be supply of services. A will be the correct answer. Then letterhead, again it is a composite supply, but main supply will be supply of goods. Then mobile phones will not be considered as a supply because the value is less than 50,000 rupees per employee. So B will be the correct answer. And the last one, in relation to taxability of supply of copies from workshop to front office, that will not be considered as a supply because they are not distinct persons. Can we say they are registered within the same GST number? Can we say C is the correct answer? It will be considered as a branch transfer but are not liable to GST. Simple, everyone, manageable? Yes. Chalo, let's go to the next one. Let's try the next one. Case scenario number 44. Yes. Chalo. Now, Divakar Private Limited, registered under GST in Delhi, is engaged in trading of cement as well as providing services by way of renting of commercial property. On 2nd Jan, it received a contract for supply of 1000 kg cement from Pakija Private Limited, registered under GST in Punjab. Pakija Private Limited directed our company to send the consignment to Gajab and Sons, registered under GST in Gujarat. Okay. So basically, who received the contract from whom? And we send the consignment to whom? To Gajab and Sons. So can we say Gajab and Sons is the person who is actually going to receive the goods? Yes. We are Divakar Private Limited and Pakija is there. So Divakar is based out of Delhi. Yes, Pakija is based out of Punjab and Gajab and Sons is registered in Gujarat. I hope now if you get a question on place of supply, you should be able to do this. Yes. Bill to ship to model. Okay. Now, Divakar Private Limited prepared the consignment on 4th Jan and dispatched the same on the next day from its warehouse in Gurugram. The invoice was also issued on 5th of Jan. On 7th Jan, it received the check and the accountant entered the payment in the books of accounts. However, he presented the check in the bank on 14th January after a week, which was credited in the bank on 15th of January. In the meanwhile, on 10th Jan, the rate of tax on the cement was reduced from 28% to 18%. Okay. Section 14. On inspection of the said goods, it is found that there is some deficiency in the quality and therefore the defective goods were returned, and Divakar Private Limited issued the credit note for the same on 20th January. Divakar Private Limited let out its property in Delhi for in lieu of monthly rental income and received rent from Pakija on 10th of February. Pakija will establish its sales outlet on the same. However, as per the contract enter, rent should have been received by 7th of the following month, but it paid on 10th of the next month. Now give the answers for question number 1 to question number 3. Now, what will be the time of supply and rate of tax to be charged in respect of supply of 1000 kgs of cement? So can we say we will have to, because there is a rate change, we will have to check the supply, we will have to check the invoice date, and we will have to check the date of payment, and then we will get the time of supply. Okay, the rate change happened on which date? On 10th of January. Okay, when was the supply done? It prepared the consignment on 4th Jan and the supply was done before itself, right? The supply was done before itself. When was the invoice issued? Invoice was issued on 4th of Jan. Date of payment. Okay, now date of payment is very, very important here. Date of payment is generally whichever is earlier, received the check or credit, means entered in the books of accounts or credit in the bank account, whichever is earlier. So here we received it on, we entered in our books of accounts on 7th Jan and it was credited. It was credited in our bank account on 15th of January. But can we say when there is a rate change, we have to also check that when is the check credited within 4 days from the rate change. When did the rate change happen? Rate change happened on 10th of January. So within 4 days, was the check credited? Was the check credited till 14 Jan? No, the check got credited on the next day. So can we say what will be the date of payment here? Date of payment will not be whichever is earlier. Date of payment will be the date when it is credited in the bank account, that is 15th of Jan. Very, very important, right? So supplies before, invoices before, date of payment is after. Can we say this matches with this? So the time of supply will be the date of invoice. Date of invoice means 5th of Jan will be the time of supply. If 5th of Jan is the time of supply, means old rate will apply. The rate reduced from 28% to 18%. So can we say 5th Jan will be the time of supply and 28% will be applicable. 5th Jan and 28%. Yes. Next one. What is the place of supply in respect of transaction between Divakar and Pakija and Gazab? Okay, we have already made the diagram. Divakar and Pakija will be Punjab and Pakija to Gajab will be Gujarat. So Punjab and Gujarat respectively. Punjab and Gujarat respectively. Yes. Then Divakar has not issued any invoice in respect of services provided by way of renting of commercial properties in the month of January. What is the last date for issuing the invoice? Now can we say renting it is the continuous supply of services? So in case of renting, if renting is a continuous supply of services, what is the last date for issuing the invoice? The last date for issuing the invoice is where the due date is ascertainable. When the due date is ascertainable, then on or before the due date, the invoice should be issued. Here, what was the due date for paying the rent? It was 7th of the next month. So can we say invoice should also be issued by 7th of the next month? That is 7th of February. Yes. Chalo, then let's go ahead to the next one. Case scenario number 45, everyone. Let's do it. Jain Bhagwan Private Limited deals in supply of air conditioners. It also undertakes installation of ACs at the premises of the clients. The company has provided the following details for the month of February. Okay, let's start. Now, on 2nd Jan, it supplied and installed 10 ACs at the, we are based out of, they have not given yet. Supplied and installed 10 ACs at newly established office of Messrs. Ram Mohan and Associates, a CA firm registered under GST in New Delhi under the cover of an invoice. The company charged 21,000 per AC from the CA firm. Payment was received on 28th February. Okay. Here the place of supply will be the place where it is installed. So your place of supply will be New Delhi. Then provided service of installation of 15 ACs at Mr. Varun's mansion in Chandigarh. Mr. Varun is an individual and is unregistered. Company charged 2,000 rupees per installation. This is service now. So company forgot to issue the invoice for the service in February month. However, payment was received in advance on 13th of Feb. Then on 20th February, it received advance of 2 lakh from Sunshine Limited for service of installation AC at factory in Bhavana, Delhi. AC is installed on 28th February and invoice is also issued on the date of provision of service, that is 28th Feb. The client is registered. Other information, standard price charged for AC is 20,000 per piece, installation is 2,000, AC plus installation is 21,000. Okay. Applicable rate of taxes before 22nd Feb for AC is 18% and for AC installation is 5%. After that, the rate got changed. It is now 12 and 12% for both. Jain Bhagwan is registered under GST in Delhi. Okay, so we are based out of Delhi and we are registered under GST. One order for supply of 100 ACs in Hong Kong has been received by the company. The company is unable to determine the time and value of supply. Let's see what is that. Now, let's give the answer for question number 1 to question number 4 below. Okay, each one. Now, what rate of tax should the company charge on supply made to Messrs. Ram Mohan and Associates? So, the rate of tax will depend. The rate of tax will depend. For that, we will have to find out the time of supply first of all. Yes, we will have to find out the time of supply. How will we find out the time of supply for this? First of all, can we say it is a composite supply? Yes, if it is a, when did this transaction take place? The transaction take place on 2nd of February and the payment was received on 28th of February. Yes, so now can we say there was a rate change happened now. So supply is before, invoice is also before. Okay, payment is after, that is it is on 28th Feb. So time of supply will be the date of invoice. Date of invoice means earlier, that is 2nd of February. Now on 2nd of February, what was the rate? On 2nd of February, the rate was 18% and 5%. But because it is a composite supply and principal supply is supply of AC, so can we say rate of tax will be 18%? A will be the correct answer. Then what is the time of supply of service provided to Mr. Varun? Okay, so for Varun, that is for this service. For this service, what will be the time of supply? Again, can we say there is a rate change that is happening? Acha, the supply was done on 15th of March. No invoice was issued. The company forgot to issue the invoice. However, the payment was received in advance on 13th of February. Can we say in case of service, if the payment is received earlier, that will be the time of supply of paying the taxes? Yes. Acha, but because there is a rate change, we will also have to check section number 14. So supply was done before. Yes, invoice is going to be done after only because till now we have not issued. And payment was received before only. So can we say before is matching? So my time of supply will be date of payment. Date of payment is 13th of Feb. 13th of Feb means the old rates. Anyway, they are asking me only for the time of supply. So time of supply will be 13th of February. Then after that, Sunshine Limited contended that GST should be 12% since supply is made after the change in rate. Let's go and check it for Sunshine. Where is Sunshine? Yes, the last one. Again, there is a rate change. Let's try section number 14. When is the supply done? Supply is done before the rate change. That is 20th of February. Okay. Acha, wait. Supply AC is installed on 28th of February. 28. Supply is done on 28th of Feb. That is after. Okay. Invoice is also issued on 28th Feb. That is after the rate change. Okay. Then date of payment. Date of payment was 20th of February. That is before. Right. So what will be the time of supply? This after is matching with this after. And we know that time of supply can be only from either date of invoice or date of payment. So can I say my time of supply will be the date of invoice? It will be the date of invoice. Date of invoice means 28th of February will be my time of supply. That is after the rate change. After the rate change, my rate has changed to 12%. So 12% should be the rate of GST. Yes, so B will be the correct answer. New rate will be applicable. Okay, then after that, next one, last question. Since GN Bhagwan Private Limited is unable to determine the time and value of supply of AC to be supplied in Hong Kong, it decides to seek the advance ruling in the given case. Which of the following statement is true? So can it go and seek the advance ruling? Yes, it can go and seek the advance ruling to the AAR. And after, yes, it can seek, after seeking, if it is aggrieved, it can go to the AAAR. Yes. But advance ruling cannot be sought for value. No, advance ruling cannot be sought for place of supply, but it can be sought for time and value. So A is the correct answer, everyone. Yes. Done. Let's go to the last 10 case scenarios, everyone. Yes. Chalo. Can we start with this one? Simple question, very simple question. They have taken this from your descriptive questions only. We have got this question in our question bank. Case scenario number 46. Bright Public School, New Delhi, under the aegis of Bright Mind Society, has received or provided the following services in the month of March. It has provided transportation services to students, teacher and other staff for commuting. Such transportation services are provided to the school by Ambaji transporters. So this is exempted. Now, any services provided to student, faculty and staff is exempted. An amount of 1500 per month is charged from the students, whereas such services are provided free of cost to the teachers under the employment contract. Consolidated amount of 2 lakh per month is paid to Ambaji. Can we say even this is exempted from tax? Because this is for, assuming this is for school, means this is for type 1 educational institution. Then it conducted entrance examination for students of class 11 for upcoming academic year. It charged entrance fee of 1 lakh from external students and nominal fee of 200 from internal students. Both is exempted. And a total of 2000 students gave the entrance. Doesn't matter. Bright Public School also provides boarding and lodging facility to its students belonging to other cities of India. A consolidated amount of 1,75,000 is charged. Can we say this is a composite supply, where main supply is education? So entire service will be exempted. The above amounts are exclusive of GST. Give the answers. Assume it is intrastate. Choose the most appropriate option in relation to service of transportation service. Transportation service, we already know. Can we say it is exempted from GST? When it is provided to students, faculty and staff, it is exempted. Then choose the most appropriate option in relation to entrance fee. Can we say entrance fee is also exempted? Can we say entrance fee is also exempted? It is an exempt. So you will have to report it in the return as an exempt supply, but no GST is payable because it is exempted. Okay. Next one. Choose the most appropriate option in relation to boarding and lodging facility. It is a composite supply where principal supplies educational services. Since the principal supply is exempt, the entire consideration is also exempted, right? This is what we discussed. And choose the most appropriate option in relation to supply of service by Ambaji transporters. Can we say even that is exempted? Even that is exempted. GST is payable, no. GST is payable, no. As it do not qualify. It is a supply. Yes. It is a supply, but just that GST is exempted. Yes. Chalo, next one everyone. Let's go to the next one. Case scenario number 47. Let's try this. Nice question based on a circular. Chalo. Now, let's start with it everyone. Zoom Air is an airline company operating domestic as well as international flights. Airline company operating domestic as well as international flights. The head office of Zoom Air is in Mumbai and the company has also obtained registration under GST in each of the states from where the flight operations are being conducted. Okay. During the month of Jan, Zoom Air sold the tickets worth 5 lakh during the month from its head office and the breakup of airfare is given. Basic airfare excluding GST is 4 lakh. Passenger service fee and user development fee inclusive of GST is 1 lakh. PSF and UDF are remitted to the airport authority. So basically we are just collecting it from the customers and we will pay it to the airport authority. And this is separately disclosed in the invoice along with the applicable GST. The airport authority pays an amount of 5% of PSF and UDF inclusive of GST as collection charges. Okay, so this is our income. Right? We are getting something called as collection charges from the airport authority on which GST is applicable. There is no levy of PSF and UDF on the tickets book for its own crew or other employees. Now, Zoom Air head office has collaborated with Supertrip, an online travel portal providing services to the customers by way of booking air tickets through its electronic commerce platform and registered under GST in the state of Maharashtra. During the month, Supertrip India booked tickets for 2 lakhs base fare excluding GST, PSF and UDF for customers of Zoom Air. The amount was remitted to Zoom Air after adjusting the TCS. In addition to the aforesaid amount, it charged commission at the rate of 5% of the basic fare. Zoom Air charged 100% cancellation fee from the customers for booking made in the prior months. The amount of cancellation fee charged was 1 lakh inclusive of GST. Instead of actually collecting the cancellation fee, such amount was adjusted against the booking amount and GST discharged at the time of initial booking. However, PSF and UDF amounting to 10,000 charged from the customers were refunded. Okay. Zoom Air, they provided gifts in the form of air ticket to 10 of its employees, equivalent to 60,000 each. No amount was recovered. So this is taxable. Zoom Air has a corporate tie-up with Welcome Hotel located in Rajasthan for stay of its crew members. For January, the hotel issued an invoice of 1 lakh in the name of Zoom Air, head office Mumbai. Hotel is in Rajasthan. Okay, we are based in Mumbai. Haryana office of Zoom Air has provided services by way of sale of online advertisement sales space to Amazing Private Limited, OIDR kind of a service, a company registered in Haryana for promotion of its products. The amount charged for such service is 5 lakh rupees. All the amounts are excluding GST, no ITCs available, all other conditions have been fulfilled, no other transactions are there in the month of January, GST rate is 18%. In case of cancellation of tickets, Airport Authority and Zoom Air had an agreement that PSF and UDF related adjustments shall be finalized at the end of the financial year, that is during March. Further, separate GST invoices shall be issued to carry out adjustment in the books of accounts. Hush. And now give the answer for the 5 questions. Let's see what they are asking. It is simple. Okay. Chalo, let's give it a try. The gross GST liability of Mumbai head office of Zoom Air for the month of January is, what is the gross GST liability? Let's do the calculation. Yes, so now here it will start from the air tickets sold. Yes, it will start from the air tickets sold. Chalo. Now for the base fare, on the base fare, can we say GST will be applicable? 4 lakh multiplied by 18%. Okay, in green I am writing the liability. 72,000 is payable. Acha, on passenger service fee and user development fee, we are just acting as a pure agent. We are collecting and we are going to give it to the airport authority. So on this, we don't have to pay any GST, right? Then after that, but for collecting that passenger service fee, we are getting some collection charges at the rate of 5%. How much are we getting? 5%, 5%. How much is the total amount collected? 1 lakh, na? So our collection charges is 1 lakh multiplied by 5%, that is 5,000 rupees. On that, I will have to pay the GST at the rate of 18%, that is 900 rupees. Yes. So this we will have to pay, right? Okay. Then after that, the next one. Then we collaborated with Super Trip, an online travel portal, for booking the air tickets through the e-commerce platform and registered under GST in the state of Maharashtra. So that e-commerce operator booked ticket worth rupees 2 lakh. Amount was remitted by Super Trip after adjusting the TCS. So Super Trip is just collecting the TCS. So can we say main responsibility? Main responsibility to pay the tax is on Zoom Air itself. So on this 2 lakh rupees of sales, we will have to pay the GST at the rate of 18%. That is 36,000 is payable. Acha, then cancellation fee. There is no cancellation information given, so no tax will be there. Oh yes, here it is there. Here it is there. Cancellation fee of 1 lakh rupee was charged. But can we say this cancellation was from the amount that we had collected? Yes, this cancellation is from the amount that we have collected. So on this cancellation fee, there will be no extra tax liability. Yes. We have not collected this cancellation fee from the customer. This was adjusted against the booking amount. Yes. So there will be no GST on the cancellation fee. Then after that, then the next one. Gift to its employees. This will be taxable. 60,000 to 10 of its employees. 60,000 into 10, 6 lakhs multiplied by 18%. That gives me 1,08,000 rupees here. Let's see how much. That's it, na? And this is of another office. This is Haryana office. This online advertisement. So that is different. Calculate how much is your tax liability. 72,000 plus 900 plus 36,000 and plus 1,08,000. Are you getting it as 2,16,900? Yes. Are you getting it as 2,16,900, everyone? Yes. Chalo. Then after that, going to the next one. Let's go to the next one. Determine all kinds of credits available to Mumbai head office of Zoom Air for setting off its GST liability. All types of credits that is available. ITC also and TCS also. Okay, let's see how much ITC and let's see how much TCS is available. So TCS will come in case of that e-commerce operator. How much TCS that person would have collected? 2 lakh multiplied by 0.5%. So TCS that it would have collected is rupees 1,000. Acha, what about the input tax credit? Can we say input tax credit here? This is my own supply. On PSF and UDF, there will be no charges. Commission. Can we say commission will be our inward supply? Commission will be our inward supply because we are going to pay it to the e-commerce operator. How much commission? 5% of the base fare. How much was the base fare? Base fare was 2 lakh rupees. So 2 lakh multiplied by 5%, that is my commission amount. On that, I will get the ITC 18%. So 1,800 rupees. Yes. Hotel accommodation, you will not get any ITC because those are in two different states. So can we say total that we will get is 2,800? A is the correct answer. Yes. Then assuming that the customers in point 1 above are registered customers and all the conditions for availment of ITC are compiled, what is the amount of ITC available to the customers? For the first point, what will be the amount of ITC available to the customers? Can we say base fare that we charged from them The amount that we charged from them was this 1 lakh rupee. That was this 1 lakh rupee. On this we charge 72,000 rupees of tax. So 72,000 rupees of credit will be available to them. This will be one ITC. And we also collected passenger service fee and user development fee from them. How much did we collect that? That was 5% inclusive of GST. So can we say 1 lakh multiplied by 5%? So we collected 5,000 inclusive of GST from them. Sorry, passenger service fee was 1 lakh rupee. This 5% was the collection charges. Passenger service fee collected was 1 lakh rupee. So this 1 lakh that we collected, that was inclusive of GST. So 1 lakh divided by 118 into 18. This much amount of ITC will be available to them. 15,254. 15,254. This much amount of ITC will be available. Plus 72,000. 87,254. C is the correct answer. Yes. Then choose the most appropriate answer in relation to the transaction between Haryana office and Amazing Private Limited. Haryana office and Amazing Private Limited. So can we say here who was providing the service to whom? Who was providing the service to whom? Zoom Air. Zoom Air was providing the service to the Amazing Private Limited. Yes. And Zoom Air is registered. So can we say Zoom Air will be required to pay the tax on it? Acha, where is Zoom Air situated? Zoom Air is situated in, it is registered, we are talking about the which office? We are talking about the Haryana office, and we are providing the services to Amazing Private Limited, which is also in Haryana. So CGST, SGST will be payable by Zoom Air. It is OIDR, but when OIDR is provided by a registered person, by a registered person to another registered person, normal FCM will be applicable. So Zoom Air will be paying the taxes, CGST and SGST. Yes. And the last one, Super Trip India purchases 1,000 air tickets in bulk for an amount of 1,000 per ticket from Zoom Air and made these tickets available for sale at its electronic portal to the customers on its own account. Super Trip India was able to sell only 800 tickets, for which total amount collected from the customer was 15 lakh rupees. As per the agreement, the remaining 200 air tickets purchased lapsed and the amount was forfeited by Zoom Air. Choose the most appropriate statement. What will be the most appropriate statement? So basically, Super Trip has purchased 1,000 air tickets in bulk from Zoom Air, and then Super Trip could sell 800 tickets for 15 lakhs. Yes. Okay. Then after that, as per the agreement, the remaining 200 tickets, how much is the sales of Super Trip? It is 15 lakhs. Purchase price for those tickets will be 8 lakhs. $1,000, 18%, 1,80,000. Okay, so can we say Super Trip would have purchased this at rupees 10 lakh? ITC on that is equal to 1,80,000. Yes, so Super Trip's ITC is 1,80,000. Now it has sold at 15 lakh. So output tax payable is equal to 15 lakhs multiplied by 18%, that is 2,70,000. Output minus ITC, 2,70,000 minus 1,80,000. Can we say net tax payable is 90,000 rupees for Super Trip? Yes. And then after that, what about Zoom Air? It purchased this much from Zoom Air. So what is the liability of Zoom Air? Liability, output liability of Zoom Air. It has sold at 10 lakh rupees, na? 1,000 tickets into rupees 10,000. 10 lakh is the sales multiplied by 18%. That is 1,80,000. That is the liability of Zoom Air. So can we say C is the correct answer? Super Trip's liability will be 90,000 and Zoom Air's liability will be 1,80,000. Chalo, done. Manageable. Let's go to the next one. It was a nice question. Let's go to the next one. Case scenario number 48, everyone. Chalo. Infotel Limited. Infotel Limited, herein referred as Infotel, is a telecom company operating in India. The company has obtained registration in all the states in India and has head office in Haryana. The Office for Telecommunication Service in India is issued, the invoice for telecommunication service is issued to the customer by the HO located in Haryana for all the services. During the month of Jan, following transactions were undertaken. Receipts from postpaid mobile customers 25 lakhs. 5 lakh is from the customers in Haryana, remaining is from customers located in rest of the country. Apart from this, Infotel collected 20 lakhs as subscription income identifiable separately on postpaid bill from the customers. This amount is not included in the first one. The same was collected for payment to CloudZone Limited, an online content provider located in Maharashtra. Full amount was remitted to CloudZone by Infotel on behalf of postpaid customers. CloudZone issues invoice to the customers in its own name. As per the agreement, Infotel is not involved in any sort of facilitation or arrangement of supply between CloudZone to customers. The customers on their own avail the facility to pay for the services provided by CloudZone. So basically, we are providing the service to CloudZone. CloudZone is providing the service to its own customers. Everything is independent. Subscription income is charged from the customers on actual basis, and no fees is charged by Infotel from their customers. Infotel receives an amount equivalent to 10% of the total collected amount from the customer. As so, our income is the collection charges, right? Direct receipt from prepaid mobile customer is 50 lakh. Entire payment received from customers located outside Haryana. Mobile telecommunication revenue received from PayQuick Limited, a reseller agent of Infotel, is 30 lakhs. Location of PayQuick is Maharashtra. Commission paid to PayQuick is 10% of the revenue received. Okay, then Infotel collected 5 lakh rupees from the customer located in Haryana against DTH services. Maybe it is going to talk about that entire place of supply that we studied about telecommunication services in that chapter. So one-time installation charges is 50,000. Infotel purchased certain equipment for installation of its towers in Rajasthan. Goods were delivered and installed by the supplier. Invoice was charged to Infotel. Total amount charged was 75 lakhs. ITC on telecommunication towers, it is blocked. Then Infotel collaborated with Amaze Inc., a company based in US, for technological support in relation to cloud storage services to its customers. Amount paid by us to Amaze is 5 crore for technology support. Further cloud storage services were provided by Infotel to its unrelated premium customers on free of cost basis for trial period. Open market value is 75 lakhs. As per the agreement with Amaze Inc., in case of failure in provision of services by Infotel, Amaze Inc. shall provide the backup server access to Infotel customers for data storage. The customer is not aware of the fact that data is being stored on Amaze Inc. server in case of failure at Infotel's end. Amaze Inc. charged an amount of 50 lakh from Infotel for this instance. All the amounts are exclusive, no amount is available in ITC, tax rate is 18%, bifurcation is to be ignored, no other transaction for the month of January. Give the answers. Yes. Let's give it a try, everyone. The GST payable in cash for the month of January by HO of Infotel in Haryana, assuming no ITC is utilized. Okay, assuming no ITC is utilized. Let's do this. Okay, now how much is our liability? Let's try to determine our liability. Anyway, bifurcation is not required, so place of supply kind of becomes irrelevant here. Now see, can we say we collected how much amount? We collected 25 lakh from our customers. So on this 25 lakh, how much is our liability? 25 lakh multiplied by 18%. 4 lakh 50,000 is my liability. This you have to pay. Okay, then we collected 20 lakh as subscription from the customers, and this amount was not included above. Now listen, this amount we have collected it from our customers so that we can pay it to CloudZone Limited. And CloudZone issues the invoice to the customer in its own name. So can we say we are simply acting as a pure agent? Yes, we are simply acting as a pure agent. So on this 20 lakh, there will be no tax. We are collecting it from our customer by showing it separately on the invoice. And then we will pay it. We will pay it to whom? We will pay it to CloudZone Limited. So for this, there is no GST. For this, we will get something called as collection charges. On that collection charges, GST will be applicable. How much is our collection charges that we are going to get? 10% of the total amount. So can we say collection charges will be 2 lakh rupees? Acha, on that GST will be payable 2 lakh multiplied by 10%, that 18%, that is 36,000. 36,000 is my liability. Acha, then direct receipt from customers. On this 50 lakh GST will be applicable 18%. That is 9 lakh rupees will be payable. Then telecommunication revenue received from PayQuick Limited, that is the reselling agent, is 30 lakh. So on this 30 lakh, again we will have to pay the tax. Basically, agent is giving me 30 lakh rupees, he is collecting 30 lakh and he is giving it to me, that is my revenue. And we will pay commission to the agent then. So 30 lakh multiplied by 18%, that is 5 lakh 40,000 is again payable. Right? Then after that, for DTH services, we collected 5 lakh rupees. Taxable at the rate of 80%. 90,000 is the GST payable. Yes. Acha, then we purchase some equipment, that is okay. Then we collaborated with Amaze. Amount paid by Infotel to Amaze is 5 crore. Again, this is gone. Then further, the cloud storage services were provided by Infotel to its unrelated premium customer. Value for that will be 0. I think that's it. Yes, this is the amount that we will pay to Amaze. Okay, calculate how much is your liability under forward charge mechanism. Add 4,50,000 plus 36,000 plus 9 lakh plus 5,40,000 plus 90,000. That's it. 20,60,000. 16,000 is the amount that you have to pay as of now on your outward supply under forward charge mechanism. Is there any RCM liability? Check, is there any RCM liability? This is India only, so there is no RCM liability. On this there is no tax payable. This is again India, no tax, tax is over. Here also tax is over. Here also tax is over. Here we installed the tower. Can we say here we are going to pay 5 crore rupees. Here we are going to pay 5 crore rupees to whom? We are going to pay 5 crore rupees to Amaze Inc. Yes, for providing cloud storage services. So this is import of services. We are importing the services from Amaze Inc. So can we say on this we will have to pay the tax under reverse charge mechanism? So on this 5 crore we will pay the tax at the rate of 18%. So can we say 90 lakhs will be paid here? 90 lakhs will be paid because of RCM. Acha, this 75 lakh open market value was irrelevant. And then similarly we are also paying 50 lakh again to Amaze, that is also import of services. So on this 50 lakh also again 18% means 9 lakh. Again we will have to pay this under RCM. Again this is import of services. So can we say 99 lakh again we have to pay in cash. So 20 lakh 16,000 plus 99 lakhs. That gives me 1 crore 19 lakh 16,000. See if this is the liability, everyone. Yes, 1 crore 19 lakh 16,000. This is the liability. Then how much ITC will be available? So can we say first of all whatever we paid under RCM, that will be fully available. That is 99 lakh will be fully available because this we had paid under RCM and then we'll get the credit. Acha, any other ITC that will be available? Any other ITC that will be available? This was my sales. This was my sales. This was my sales. This was my sales. Commission paid. Commission paid. The commission that we are paying, can we say that is my inward supply? Means I am availing the services of the agent for which I am paying the commission. How much will be the amount of commission? 30 lakhs multiplied by 10%, that is 3 lakhs. On this 3 lakh, 18%. That is on this 3 lakh, 18%. That is 54,000 will be available as ITC. So 54,000 will be the ITC. Acha, then on the telecommunication tower, anyway the ITC is blocked. Yes. So you will not get any credit. Acha, another, even if you are considering that telecommunication tower as goods, as it is mentioned here, if you are purchasing certain equipment for installation of tower. Okay, so now here the goods were delivered and installed by the supplier based in Rajasthan at its site in Rajasthan. Right, so now where is the supplier situated? Supplier is based in Rajasthan. Infotel is based in Rajasthan. Can we say where installation is involved? Where installation is involved, the place of supply will be the place where it is installed. So can we say place of supply will be Rajasthan, and the location of supplier is what? Location of supplier is what? Location of supplier is also Rajasthan, but location of recipient is Haryana. So it will be considered as an intrastate supply. But will we be able to take the credit of that? We will not be able to take the credit because we are situated in Haryana. We are situated in a different state. So ITC of this will not be available at all. So only what ITC will be available? 99 lakh and 54,000. A should be the correct answer. Can we say here ITC is not available? The logic is same as that of hotel. Yes. Then select the correct statement for transaction between Infotel, CloudZone and the subscribing customer. Infotel is a pure agent of CloudZone. No, Infotel is a pure agent. It is a pure agent but only for the customer. Only for the customer. Yes, why it is a pure agent only of the customer? Because it is taking the service from Amaze and then it is providing it to the customer. Infotel is in between. Okay. Then for direct to home services, Infotel is exploring the possibility of providing equipment like dish antenna, cables liable to GST at the rate of 18% to customer at additional charge of 2,000. Currently, the company collects 1,000 from new customers as installation and 1 month charges for services liable to GST at 18%. In case dish antenna and cables are also provided, the combined charge would be 3,000. Please select the most appropriate option. So can we say if along with direct to home service, if dish antenna plus cable is provided to the customer along with the service, so can we say here it will be considered as a composite supply where the main supply will be the dish antenna. Dish antenna is liable to GST dish along with here you are providing dish antenna and along with it you are providing the services also. Yes, so combined you are collecting how much? Combined here you are collecting how much? Combined here you are collecting 3,000 rupees. Yes. So now can we say your main service was providing the service. Your main thing was providing services, D2H services, direct to home services. Now along with that you are providing that equipment also. So can we say main supply will be supply of service here. Main supply will be supply of DTH service. So DTH service was taxable at the rate of 18%. So entire 3,000 should be taxed at the rate of 18%. So C should be the correct answer. Yes, nice question again. Chalo, let's go to the next one. Let's try the next one. Case scenario 49. Again, Dhairya Limited. Let's try this question. Dhairya Limited, India, a registered supplier under GST in the state of Kerala, is engaged in supplying goods and services. Dhairya Inc., San Francisco, USA, is a subsidiary of Dhairya Limited, India, and is engaged in supply of IT services to customers in US. So Dhairya Limited is basically in Kerala, and Dhairya Inc., San Francisco, is a subsidiary of our company which is engaged in supplying services of IT in US. Dhairya Limited, India, has undertaken the following transactions during the month of April. Supplied large paper rolls to Ford Mount School, Bangalore for printing. Paper rolls were supplied for printing of question papers as directed by the school. Dhairya Limited delivered the paper rolls at printing press located in Trivandrum, Kerala. So can we say this will be taxable? This will not be exempted. Only supply of services are exempted for school, but not supply of goods. bond amount recovered from the outgoing managing director of Dhairya Limited since he had left the employment before the contracted period. Before the contracted period. So can we say this is not a supply? Why? If this is because here the consideration that we have received is for tolerating an act. Okay, we are tolerating quitting of his employment, so here this is not considered as a supply. Then supplied steel sheets in territorial waters to Dhruvang Builders. It is located at 12 nautical miles from Kerala and 15 nautical miles from Tamil Nadu. So nearest is Kerala, right? Nearest here, the nearest location will be considered as what? Location will be considered as Kerala. Remember? Then received an advance for future supplies of goods from a customer based in Kerala. So this is advance money for goods. So time of supply will apply later. Advance receipt for future supplies of services. So time of supply will be now. Computer used for business on which no ITC has been taken, given free of cost. Because no ITC was taken, can we say it will not be considered as a supply? Yes. Then Dhairya Limited provided the additional information for the month of April. Check what are the additional information. The company paid sitting fees of 6 lakh rupees to an independent director based at Cochin for attending meeting. Can we say RCM will apply? Then the company availed the services of arbitral tribunal in Kochi, Kerala to settle a business dispute and paid rupees 7 lakh. Again, this will come under RCM. Further, Gooooo Events Limited, an event management company located and registered at Karnataka, had organized a cultural event in the month of May for Dhairya Limited in Dubai. Dhairya Limited paid a sum of 10 lakh to Gooooo Events for the same. Okay, now here what are we supposed to find out? Maybe they will ask us about the place of supply. Yes, so now here Gooooo Events is an event management company which is located where? Which is located in Karnataka. Had organized a cultural event in the month of May for us in Dubai. So can we say here location of supplier is Karnataka, location of recipient, our location is also India. So basically can we say at least section 12 is only applicable? Yes, if section 12 and if it is provided to a registered person, then the place of supply will be the location of such person. Our location was Kerala. Yes, so can we say here the place of supply will be Kerala? It will be Kerala only. Yes, so it will be considered as interstate supply. Rate of GST is given. All the amounts are exclusive of taxes. Opening balance of input tax credit. Opening balance of input tax credit is nil. Yes, opening balance of ITC is nil. No other outward or inward supply is there in the month of April or May except for the given cases. Now, multiple choice question. Which of the following activities or transactions undertaken by Dhairya Limited do not amount to supply? Can we say computer will not be considered as a supply? And recovery of bond will not be considered as a supply. So 2 and 4, A should be the correct answer. Everyone, are you getting it? Yes. Then, which of the inward supplies? Which of the inward supplies received by Dhairya is liable under reverse charge? So, inward supplies, na? Director is inward supply, arbitral is inward supply. Independent director is inward supply. Arbitral is inward supply. That's it. 1 and 3. 1 and 3. So D is the correct answer. Yes. Then the next one. Compute the total GST payable on outward supplies before setting of ITC. Total GST payable on outward supply. Chalo, let's calculate. And here we have to do it separately for CGST, SGST. Okay. So here we are based out of Kerala. We delivered the goods in Kerala. So this will be considered as, this is taxable first of all. Yes. Dhairya Limited is based out of Kerala. We delivered the paper rolls at a printing press located in Trivandrum. And this we did it for Bangalore, right? This we did it for Bangalore. Now here again, as directed by the school. As directed by the school, we delivered it to Trivandrum, Kerala. So can we say this will become bill to ship to? If this will become as bill to ship to, then for the first transaction, the place of supply will be the location of the recipient, that is Bangalore. Kerala, Bangalore, two different states. This will be considered as IGST. So on this 15 lakh multiplied by 18%, how much? 2,70,000 will be the IGST payable. Here this is not a supply. Then supplied steel sheets. This will be considered as a supply. On this GST is applicable. Kerala only. So CGST, SGST. 6 lakh multiplied by 9%. 54,000 will be the tax payable. Then on this 2,10,000 as of now there will be no tax because this is advance on goods. Later we will pay the tax. Okay, but on the services we will have to pay the tax. 4,90,000. Customer based in Kerala, na? So 9%. 44,100 will be the tax payable. Computer not a supply. On this we will have to pay the tax under reverse charge mechanism. Okay, that we will pay it separately under cash. That's it. Chalo, let's calculate the liability. IGST liability is 2,70,000. CGST is 54,000 plus 44,100. Okay, 98,100 and 2,70,000. B is the correct answer. Then after that, whether GST is applicable on event organized. Yes, GST was applicable and place of supply will be the location of the recipient, that is Kerala. B is the correct answer. Manageable till here. Can we go ahead to the next one? Yes. Chalo, let's start with the next case scenario. Case scenario number 50. Shreyansh Limited, herein referred as a company, is a conglomerate having diversified businesses including hotels, FMCG, etc., IT, etc. It has its corporate office in Delhi and operations across multiple states in India. As an internal policy, the company has obtained single GST registration in each state irrespective of the diversified business. During the month of April, the company undertook the following transactions. FMCG division of the company is in Jaipur, Rajasthan, agreed to use the vacant godown within the premises of hotel division in Udaipur, Rajasthan for storage of its goods. So Jaipur division is using the vacant godown of Udaipur hotel division. Can we say both of them are in Rajasthan only? So they are not distinct persons because they have taken only one registration. For every state they have taken only one registration. Yes. Now the value of such arrangement was agreed at 5 lakh rupees per month. Said amount was agreed to be adjusted by way of a intra-division book adjustment on monthly basis. Anyway, no GST will be applicable on this. Then the hotel division of the company in Maharashtra used the IT platform owned and managed by IT division of the company in Delhi. Value of such services was 12 lakh per month. The IT division treated the same as deemed supply and charged GST on deemed supply in the invoice issued on 25th April. The hotel division availed the ITC in April. However, no payment was done for such services. Okay. So here we are using Maharashtra is using of Delhi. Distinct persons. The hotel division provided accommodation services to a US citizen and resident for a wedding ceremony organized at its hotel in Udaipur, Rajasthan. 2 crore was paid for such services, was paid by an Indian individual residing in Delhi on behalf of US resident in Indian currency. The amount was received by Mumbai, Maharashtra office. The company received long-term lease of industrial plot from MIDC in auction against payment of upfront premium as lease premium of upfront amount as lease premium of 20 crore for a period of 50 years. The company paid location charges of 5 crore. This is exempted from GST. We have already discussed. The rate of GST is 9918%. All the divisions are eligible for 100% ITC. Give the answers for the question. Let's try. Now, which of the following statement is correct in respect of services related to usage of vacant godown? So it will not be considered as there will be no GST applicable, right? No GST will be applicable. Why no GST? Because it is not a supply, because they are not distinct persons. Then, assuming that payment for utilization of IT platform has not been made by hotel division to IT division till the end of October month of the current financial year, the hotel division Okay, so now we are talking about the second point where within the same company, one division was using the IT platform of the other division. So can we say that was considered as a deemed supply? Yes, because it was a supply between distinct persons. But can we say, and now they have not done the payment till the end of October month of the current year, and we have studied one of the provision in ITC that if the payment is not done till October or till within 180 days from the date of issue of invoice, then in such a case the proportionate ITC is required to be reversed. But do you recollect in that reversal we had studied few exceptions when we are not required to reverse that ITC? Do you recollect that? In case of deemed supply under schedule number 1. So can we say this is a deemed supply as per schedule number 1? So your reversal is not required. Yes, very, very important, very nice point. And other points there was where the consideration amount is 0. Okay, where the consideration is 0, or when the recipient has already paid the amount to the third party. Do you recollect that? In those cases that 180 days condition of ITC is not applicable. So B is the correct option. Then for accommodation services provided to US resident, the place of supply. Can we say for accommodation the place of supply? Here, can we say here, will you determine the place of supply as per section number 12 or as per section number 13? Can we say it will be determined as per section number 13? Why it will be determined? Because the supplier is in India and the recipient is outside India. Yes. So it will be determined as per section number 13, but the place of supply will be the location where the property is situated. Property is situated in Udaipur, so Udaipur will be considered as the place of supply, right? Then in respect of long-term lease of industrial plot received from MIDC, full amount is exempt now. Full amount is exempted. We have studied this entry number 41 of your GST exemption. Yes. Then after that, going to the next one. Acha, one more thing which I realized just now. Do you recollect that case scenario number 47? This case scenario number 40, that passenger service fee and user development fee. Do you recollect that? Yes, in that one of the point was there. I wanted to tell you there itself, but I forgot. For this, here they had told that this passenger service fee that we are collecting from the customer on behalf of the airport authority, this 1 lakh is inclusive of GST. Okay, so whenever we are doing the further calculations of commission, etc., can we say we should do reverse and then we will have to do the calculation? Yes. So basically, when the commission, see, in what way you can think is, now passenger service fee that we collected is total 1 lakh rupee. Okay, and the amount later we are going to get some collection fees from the airport authority. So here they are telling 5% of the PSF and UDF inclusive of GST amount. So commission also that we are going to get is 1 lakh multiplied by 5%. Okay, this is what your ICAI has assumed. Okay, but later when they were doing the calculation, do you recollect later when they were doing the calculation, they were doing some reverse calculation there? Yes, here. Later when they were doing the calculations, they were doing the reverse calculation because this 1 lakh was inclusive of GST. Yes, so just be careful there. Here what they have assumed is whatever commission we are paying, okay, even that is 5% or 10%, whatever is the commission, that is also on the total amount inclusive of GST. This is what they are assuming. Yes, chalo, let's go to the next one. Which is the next one? Uh, 50 we just completed, right? Okay, last 5 case scenarios, entry number 51. Let's start with it, everyone. Case scenario number 51. Yes, okay. Chalo, let's read this case study, everyone. We Look Smart Limited, herein referred as a company, is a leading retail chain of India. It has retail stores in multiple states with its corporate office located in Mumbai, Maharashtra. The company has GST registration across all the states from where it operates its retail stores. The company undertook the following transactions during the month of April. supplied goods worth rupees 100 crore through its retail store in Jaipur, Rajasthan, and offered a cash discount of 2 crore to the customers in the state of Rajasthan during the month. Okay. Then Ghanshyam Das, a retailer in Gujarat, purchased goods worth rupees 5 lakhs in the month of January of the preceding financial year. Subsequently, the company offered an incentive discount on such purchases to Ghanshyam Das by issuing a commercial credit note. So, if it is a commercial credit note, means there will be no impact. Okay. That means there will be no impact of what? There will be no impact of reversing any GST, etc., or reducing the GST liability. The company received an amount of 2 crore in April as penalty for delayed receipt of consideration from its customers for sale of goods made in the month of January of the preceding financial year in the retail store of Jaipur, Rajasthan. Okay. So, it will be taxable when it is received. The company incurred an expense of 50 lakh in transportation of empty cargo containers to its centralized warehouse in Mumbai from all the states through a GTA. Okay, the rates of GST is 9900%. They are eligible for 100% ITC, and then you have to give the answer. Simple small question. Let's give it a try. Okay. Now, the value of supply on which GST is payable for the month of April for Rajasthan state. For April. So, can we say, okay, for Rajasthan. So, this is for Rajasthan. This is for Rajasthan. Okay, that's it. So, can we say, in this, the taxable value will be 98 crore. Yes, it will be 98 crore. And then this 2 crore will also be added when it is received, that is in the month of April. So, my total taxable value for April for Rajasthan will be 100 crore rupees. That is 90, we can write it this way, 100 crore minus 2 crore plus 2 crore. Yes. Then after that, the next one, what is the next one? In relation to incentive paid to Ghanshyam Das in Gujarat. That was through commercial credit note, right? So, there is no GST implication at all. We have already discussed. The tax on penalty received on account of delayed payment is at the time of filing the return for the month of April, when it is received. Whenever it is received, at that time we will have to pay the tax. For empty cargo containers, transported to Mumbai warehouse, no e-way bill is required to be issued because it is empty cargo container. It is there in that exemption list of e-way bill. Done. Let's go to the next one. Case scenario number 52. SR Associates is a partnership firm registered under GST in the state of Rajasthan. Okay, in the state of Rajasthan. In the month of July, the following transactions were made by SR Associates. Purchase of commodity on 1st July from a registered person for an amount of 1 lakh at the rate of 1000 per ton from the open market. The said commodity was deposited in the warehouse of NCDEX in Rajasthan as a security against transactions entered by SR Associates on the same day. Commodities of other vendors are also being kept in the same warehouse. In order to hedge the aforesaid transaction on 1st July, SR Associates undertook a derivative sale at so and so rate. SR Associates took subscription for an AI-based platform from an unrelated party from US to get real-time updates about the pricing of the commodity in international market. It charged 50,000 for subscription. We are importing this service. Invoice was issued to SR Associates on 1st July, but the payment was made on 20th August. Let's see. NCDEX registered under GST charges rent from SR Associates at the rate of 10,000 per month and service charges of 20,000 rupees per month. On the date of expiry of future contract of month of August, that is 31st August, the rate of commodity was 900. So, he squared off the contract without physical delivery. Gone. NCDEX charged brokerage on the transaction at the rate of 5,000 per contract for both sale and purchase in the month where transactions were entered and when transaction was squared off. On purchase of commodity X, additional levy in form of mandi tax was applicable at the rate of rupees 10 per ton, which is not included in the rate mentioned in point A above. All the above amounts given are exclusive of GST wherever applicable unless otherwise mentioned. The opening balance is nil of ITC. All other conditions have been fulfilled. No other transactions are there. GST rate is 18%. Now give the answers. Yes. Chalo. Now, compute the taxable value of inward supply of commodity X for SR Associates in the month of July. So can we say we are purchasing something physically? If we are purchasing something physically, then it will be considered as an inward supply. Okay, for the month of July, how much did we purchase for the month of July? We purchased for 5 lakh rupee. Yes, we purchased for 5 lakh rupee. Then after that, this is we sold something. Here we took the subscription for AI. Here NCDX charged rent. It charged rent. Then it squared off something. It paid brokerage on the transaction, both purchase and sale, at the rate of 5,000 per contract in the month when the transaction was entered and when such transaction was squared off. And so brokerage is a service. And on purchase of commodity X, additional levy of mandi tax. So mandi tax is a other tax. So as per section 15(2)(a), we will have to add it. Okay. So can we say 5 lakh rupees is the basic value of purchase, and along with 5 lakh rupees, this mandi tax of rupees 1,000 per ton. How much tons? How much tons? Can we say 5 lakh was at the rate of 1,000 per ton? So can we say 500 tons were purchased? So 500 tons means 5,000 rupees of mandi tax. So 5 lakh plus 5,000. 5 lakh 5,000 should be the answer. Yes. Okay. They are asking only for commodity X. They are asking only for the goods. Then compute the value of outward supply made by SR Associates in the month of August. In the month of August. So this sale was done in the month of July. This was an inward supply. And this supply was done in the month of August, but this was without physical delivery. So this will be considered as a transaction in securities. So there is no supply actually. Nil should be the answer. Yes. Then what is the time of supply for subscription of AI based platform by SR Associates? Okay, we took that subscription, right? From whom did we take? We took it from an unrelated party who is there from outside India. So basically it is about import of services. Yes, if it is import of services, then it is normal services on which we have to pay the tax under reverse charge mechanism. Yes, under RCM we are going to pay the tax. So can we say time of supply will be calculated as per section number 13.3? Yes, as per section 13.3, as per section number 13.3. And can we say supplier is an unregistered person? So again the new provisions will apply. If the supplier is an unregistered person, then can we say we will have to issue an invoice on ourselves. So the time of supply for that will be the date of payment or date of invoice. Date of payment or date of invoice, whichever is earlier. So date of payment is 20th August, right? And when was the supply done? Let's assume the supply was done on 1st of July. So we should have issued the invoice maximum by 31st of July. Let's assume we have issued the invoice by 31st of July. So 31st of July or 20th August, whichever is earlier. So answer should be ideally 31st of July. Yes, see what they have done. 31st of July should be the correct answer. But they have given the answer as August 20 because they have not applied the provisions accordingly. 13.3 they have applied normal RCM provisions, but can we say here the supplier is unregistered? If the supplier is unregistered, then the second time of supply will apply. So this is not amended. Then the next one, compute the net GST payable in cash for the month of August. Net GST payable for the month of August. How much GST will be payable for the month of August? Now can we say for the month of August, anyway there was no outward supply here, right? Then this was the time of supply. For this the time of supply was what? 31st of July. So as per my answer now, there will be no tax payable in the month of August. On this the tax will be payable in the month of July itself. Yes. And then after that, what else? Nothing else, right? There is no other tax payable. So ideally the answer should be nil. Okay, they would have got some answer. They would have got this 9,000 answer, that is that reverse charge mechanism, because their time of supply was August. So they took this liability in the month of August. Our time of supply is July. So this 9,000 liability for me is going to arise in the month of July, not in the month of August. Manageable? Please be careful. Yes. Let's go to the next one. Case scenario number 53, everyone. Let's read it. Nice question. We have done similar question earlier. Or it is there in our question bank, but I have seen this question before. Chalo, let's read it. Disha Enterprises Private Limited is a finance service company having its office in Kolkata, West Bengal and Mumbai, Maharashtra. The company is registered under GST in both the states. The company operates through two segments. One is banking services and the other one is advisory and consulting services. The aggregate turnover of the company during the previous year was 80 lakhs in West Bengal and 60 lakhs in Maharashtra. Bouquet of services provided is, for banking services, they are providing recovery agent services and DSA services, and advisory. We have this question, same question we have. For advisory, we are providing these services. Now, the company has carried out the following transaction during the month of September. These figures are excluding GST. Kolkata office is providing what? Achha, both of them are providing both the services. Okay. So, sale and purchase of foreign currency in course of business. So, and it is a financial service company. Then amount received from Devidas Private Limited for sponsorship. Commission received as DSA. Commission received from private banks for acting as recovery agent. Professional fee received for return filing. Participation fee received for business exhibition. Legal fee paid. This is my inward supply. So we have paid the consideration. And this is again my inward supply, that is payment made for security services. Okay. And to whom it has been paid, that is mentioned here. Depending upon that, we will have to understand whether it is RCM or FCM. Now, the participation fee of 50 lakh rupees received by the company's Kolkata office is in respect of business exhibition organized at St. Petersburg, Russia. So, exhibition is held outside India, in which 10 Indian companies had participated. A participation fee of 5 lakh from each of them was collected. Participation fee of 4 lakh is in respect of business exhibition organized by the company's Mumbai office at Chennai, in which 100 companies had participated. Out of the professional fee of 80,000 received by Kolkata office for formation of the company, 15,000 was towards reimbursement claim from the client. It was separately mentioned that it was deposited with the ROC. Okay, so 80,000 professional fee here. Out of this, 15,000 was in the nature of pure agent. Fine. Then after that, following purchase and sale of foreign currency was made by the company during September. It purchased 10,000 USD from Messrs. Moneywise, a forex dealer, at 73. RBI reference rate was 74. Mumbai office sold this much USD at so and so, and RBI reference rate was not available. In an order dated 14 September issued to Disha Enterprises, the Joint Commissioner has raised a demand of 600 crore in respect of interstate supply. The company is disputing the entire demand and wants to file. So maybe they will ask you about the pre-deposit. Now, all the amounts given are exclusive. No other transactions are there. Disha Enterprise Private Limited is not an authorized forex dealer. GST is applicable at the rate so and so. Let's try to give the answers, everyone. Multiple choice questions. Let's try it. Yes. Chalo. Now, determine the value of taxable supply in respect of sale and purchase of foreign currency by Kolkata office and Mumbai office as per rule 32.2a. 32.2a means there were two methods, remember? 32.2a means the first one, 32.2b means the second one. So, what is the value of taxable supply here? What is the value? As per the first method. So, as per the first method, if the currency exchange is Indian currency, okay, then whatever is the rate difference multiplied by the number of units, right? And then that multiplied by the rate. In case of rate difference, it is normal, and if rate difference is not available, then whatever is the currency exchange in Indian rupees multiplied by 1%. This is what we had studied, right? 1% of the gross amount which we had exchanged in rupees, right? Now, when Kolkata office is purchasing 10,000 USD from Messrs. Moneywise, a forex dealer, at 73 per USD, RBI reference rate was available. So, can we say 10,000 multiplied by 1 is the difference? Yes, 10,000 multiplied by 1, that is the difference. So, the value of supply will be 10,000 here. The commission amount will be considered as 10,000. And here, in the second case, RBI reference rate is not available. If RBI reference rate is not available, then in that case, what are we supposed to do? At whatever price we converted it, multiplied by 1%. So 5,000 multiplied by 73.20 into 1%. So that gives me 3660. So that will be the value. So now let's see. 10,000 and 3660. This is the correct answer. Then the value of taxable inward supply received by Mumbai office in the month of September on which tax is payable under reverse charge. Very, very nice provision. Let's try to do it carefully. Mumbai office inward supply RCM. Okay. Now here it is, Mumbai office. Now anyway, this is my outward supply. 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 This is outward supply. This is outward supply. Can we say legal fee and payment for security services? These two are my inward supply. Now we have to check whether RCM is applicable or not applicable. So we have paid legal fee to Mr. Sundaram, an advocate, intrastate. So, and are we a business entity? Are we a business entity? Yes, my last year turnover was exceeding the limit for registration. So we are a big business entity. So any services provided by advocate to a big business entity will be taxable under RCM. So can we say this will come under RCM? And payment made for security services when it is provided by other than body corporate to a registered person. Now, partnership firm is not a body corporate. Yes, partnership firm is not a body corporate. So partnership firm, it will be assumed that it is not a body corporate and it is providing the services to us. So again, RCM will be applicable. Yes, partnership firm is not a body corporate, right? So can we say 15,000 and 25,000? 40,000 is the amount on which RCM is applicable. C should be the correct answer. Then compute the value of taxable outward supply made by Kolkata office on which forward we have to pay the tax under forward charge. Kolkata office outward supplies forward charge. Okay, let's see. Now, in case of Kolkata office, first of all, for this we referred the note number 3. For this we referred note number 3. What was note number 3? Note number 3 was this. Okay, that we have already computed separately. Now, amount received from Devidas Private Limited for sponsorship. Yes. So, in case of sponsorship, when sponsorship services are provided, can we say here sponsorship services are provided by whom? By us to Devidas Private Limited. So can we say here the sponsorship services have been provided by a body corporate? If it is provided by a body corporate, then RCM provisions is not applicable, then FCM is applicable. So we will have to pay the tax. Then commission received as DSA. In case of DSA, only when individual DSA is providing the service, then only RCM is applicable. So your FCM will be applicable. Okay, then commission received from private bank from acting as recovery agent. When we are acting as a recovery agent for a private bank, at that time can we say RCM is applicable? So we will not pay the tax, the private bank will pay the tax. Then professional fee received for formation of a company LLP. Normal FCM is applicable, but only the difference 80,000 minus 15,000. Do you recollect that? Why 15,000 we had excluded? They had told us that was as a pure agent. Then professional fee received for GST TDS, even this will be FCM. Yes, even this will be FCM. Then participation fee received from customers for business exhibition organized by the company. So here this was held in Russia. So can we say this is exempted? Done. That's it. So FCM outward supply is how much? Here 90,000, here 48,000. 90,000 plus 48,000 plus 65,000 and plus again 65,000. 2,68,000 should be the correct answer. Yes, 2,68,000 is the correct answer. Manageable till here. Then the amount of pre-deposit that we have to deposit before appellate authority, that is the first level of appeal. Here we did not agree to a single rupee, right? If we did not agree to a single rupee, then can we say 10% of the tax amount? Because it is IGST, we will restrict it to 40 crore. So 10% of this is 60 crores. 60 crores will be restricted to 40 crore. 40 crore should be the correct answer. Oh, 40 crore is not there. Arey, they have not done the amendment, Ray. What, yaar? Here they are still taking it as 25 crore and 50 crore. So this is now changed to 20 crore and 40 crore, right? So 40 crore will be the correct answer. Ideally 40 crore should be the correct answer. Done? Chalo, let's go to the next one. Case scenario number 54, everyone. Case scenario number 54. Can we start? I hope you are able to see the screen properly. Yes. Sure. Aspire Solutions Private Limited. Aspire Solutions Private Limited, herein referred as Aspire Solutions, is engaged in providing multi-dimensional services to its clients through its office in Haryana registered under GST. During the month of July, the following transactions were undertaken by Aspire Solutions. Import of certain cloud services from BizCard for an amount of 51 lakh. So RCM will be applicable normal. Aspire Solution pays sitting fees of 25,000 to each of its 4 directors per month. Further, these 2 directors who are in executive roles and are withdrawing 2 lakh each per month as salary from the company, and applicable TDS under 192 is deducted. So can we say here, whatever we are paying to the employees who are in employment, that is the 2 directors, that is not a supply, but whatever we are paying to the other 2 directors, on that GST is applicable, and that too under RCM. Right? So can we say on 50,000 RCM will come, and the balance 50,000 is not a supply at all because it is paid to the employees of the company. Then Aspire Solutions paid for LIC of its employees in compliance of its internal policy. Can we say ITC will be blocked? Because if you are paying LIC for your employees as per statutory obligation, then it will be allowed. Otherwise, it is blocked. Then Aspire Solutions provided consultancy services to its client Zoom Corp based in Bangalore and issued an invoice of 30 lakh. No problem, taxable supply. Empowering India is the NGO located in Haryana. It aims at empowering the eligible companies to grow their business in India. Aspire Solutions, being one of the eligible companies, received a subsidy of 5 lakh in lump sum from Empowering India for the month of July. So it received a lump sum subsidy. Let's see what type of question they will ask. Aspire Solutions provided sponsorship services to Mr. X, an individual, for an event organized by it in the state of Haryana. So we are providing, we are a company, right? Body corporate is providing. So RCM will not be applicable, your FCM will be applicable. Normal, let's start everyone. GST 18%. The liability to pay the GST for cloud services, that was RCM, right? How much is the liability? What is the value? Value is 51 lakh. So 51 lakh multiplied by 18%. 9 lakh 18,000. 9 lakh 18,000, and that too we have to pay. That is the recipient will have to pay the tax on it. Then Aspire Solutions seeks your advice on taxability of sitting fees paid to directors and salary payable to executive. So already studied. Sitting fees paid to directors is liable under reverse charge, and salary paid shall not be liable to GST. A should be the correct answer ideally. Yes. Then what shall be the amount of ITC available with Aspire Solutions for the month of July? So one of the ITC available will be the amount that we paid as RCM just now. Acha, any other inputs is there? Any other inputs? On this 50,000 also we will pay the tax under RCM, and then we will take the credit. So 9,000 more. 9,000 more. Okay. 25,000 into 2, 50,000, 50,000 multiplied, 9,000. Yes. Yes, so this 9,000 credit you will get. Can we say here total sitting fee paid is 50,000 plus 50,000? Yes. Now here on this 50,000, this is as good as salary. So there is no GST applicable. So forget the question about ITC also. And this 50,000 is your business expense as director fees on which you are paying the tax under RCM, and then you will take the credit on the same. And then LIC ITC was anyway blocked. So answer should be 9,27,000 rupees. What have they given the answer as? The answer is given as 9,36,000. Why? 9,18,000 is okay. ITC on LIC is blocked. This they have taken as 18,000. Can we say here it will be only for 2 directors? Because the director sitting fees that you are paying, that is considered as a business expense only for 2 directors. Rest for 2 it is considered as this, na? For the rest 2 it is considered as salary. So salary is not a GST expense. On that GST is not applicable. So this should be 9,000 rupees. Yes. So my answer here should be 9,27,000 rupees. Then, yes. So, alternatively, before going ahead, alternatively, what can be assumed here? Okay, alternatively, what can be assumed here is the company is paying sitting fee to its directors. Okay, and for the 2 directors, whatever sitting fee it is paying, on which it is paying the taxes under reverse charge mechanism, and when it is paying the sitting fees to the other 2 executive directors, on that they will pay the tax, they will issue the invoice and they will charge it under FCM. If that is the case, means the directors are providing the service to the company. So directors, if they are registered under GST, nothing is told. So generally we don't take GST on that. But anyway, if you are assuming it that those directors are registered and they are paying they are receiving the sitting fees from the company, they are paying the GST. So in that case, the company will get the ITC of the same. So in that case, it will be plus 9,000. So your answer will be 9,36,000, right? But provided the directors are registered and then they issued the invoice to you and you paid the GST to the directors along with the sitting fees, and then you are taking the credit. All these assumptions are there. Then compute the value of outward supplies made by Aspire Solutions in the month of July. Outward supply made in the month of July. Let's calculate in the month of July. Okay. So here it is. This was my input. This was my input. This was my input in the month of July. Okay. So 30 lakhs is one of my outward supply. Okay. Then 5 lakh is subsidy, and we provided sponsorship services. So we are providing sponsorships, FCM is applicable. So can we say 30 lakh plus 5 lakh? This 30 lakh plus this 5 lakh. 35 lakh is the value of outward supply? Yes, here it is. And compute the amount of net GST to be deposited in cash by Aspire Solution. So net GST. So on this 35 lakh, first we will pay the tax. 35 lakh multiplied by 18%. Okay, same 35 lakh multiplied by 18%, 6 lakh 30,000. Yes. From this we will subtract the ITC. If you take their ITC, that is 9 lakh 36,000 minus 9 lakh 36,000. That will be 3 lakh 6,000. 3 lakh 6,000 is the refund. So nothing is payable. Yes. Nothing is payable. But in cash, you had to pay that RCM liability of how much amount? 9 lakh 36,000. RCM liability was there of 9 lakh 36,000. How much liability was there under RCM? We just now calculated now. How much was it? One is on that 51 lakh multiplied by 18%, 9 lakh 18,000. Yes, and another one is going to be on the director sitting fees. Yes. So 9 lakh 36,000. That is the amount that you have to pay in cash. So in short, whenever we are paying any director sitting fees, multiple aspects, multiple ways out there will be. If we are paying anything called as director sitting fees in their individual capacity, then the tax on that director sitting fee is required to be paid by the company. Okay, the tax on that will be required to be paid by the company under reverse charge mechanism, and the company can take the credit of the same, provided you are paying it in the name of sitting fee. But if you are paying it as a salary to them, then anyway there will be no GST applicable on it. Okay, so here we are assuming that whatever we paid, the ICAI, as if we go as per the ICAI assumption, we are assuming that whatever you paid, that is as sitting fees only. So if you are paying it as sitting fees, then you will have to pay it under RCM, and then you can take the credit of the entire amount. Yes. Chalo, then going on to the next one, that is the last case scenario number 55. Let's start with it. Rishi is a registered supplier of goods and services under GST in the state of Karnataka. During the month of April, Rishi provided the following outward supplies: taxable supply of goods, insurance agent services to an insurance company. So this will be taxable under RCM, so it will not be taxed for me. Interest received, this will be taxable. Recovery agent service to a company, not to a bank. So FCM, normal. This will also be taxable under FCM. This will also be taxable. This will also be taxable. Then security and housekeeping service provided to Bachpan school. We have done the same case law, I think. Bachpan school up to higher secondary and unregistered person under GST at an annual day outside the school campus. Because it is outside the school campus, it will be taxable, and that too under FCM. Renting of motor vehicle designed to carry passengers provided to Cover Crest Limited, wherein cost of fuel is included. So we are what? We are an individual and we are providing it to a body corporate. So can we say other than body corporate, providing it to a body corporate? So your RCM will be applicable, that is my liability will not be there. And amount received for contract for taxable supplies of goods awarded by PSU registered under section 51 in the state of Tamil Nadu. PSU instructed Rishi to make the supply in the state of Karnataka. Value of contract is 5 lakh. Okay, and as of now we have received 1,50,000. I think same question we have done, right? Instructed word, I had told you that is important. PSU instructed Rishi to make, so the place of supply will change there. Anyway, we'll just complete it. What is the taxable value of supply for the month of April on which tax is payable by Rishi? Okay, let's calculate. On which we have to pay the tax. I'll highlight it. So can we say on this 4 lakh we will have to pay the tax? Then this 10,000 we will have to pay the tax. 40,000 we will have to pay the tax. 50,000 we will have to pay the tax. Yes. And on this 1,50,000 we will have to pay the tax. How much is the total amount? 4 lakh plus 10,000, 40,000, 4 lakh 50, 4 lakh 50, 5 lakh, 5 lakh plus 1 lakh 50, 5 lakh 50,000. Did I do any mistake? 4 lakh, 4 lakh 50, 5 lakh and 1 lakh 50, 6 lakh 50, 6 lakh 50, 6 lakh 50. A is the correct answer. Yes, then amount of TDS required to be deducted under section 51 by PSU. Amount of TDS required to be deducted. So here IGST will come, CGST, SGST will come, or no TDS. So we had assumed that this is going to be a bill to ship to. This is what we had studied. This was considered as a bill to ship to. So here who instructed whom? PSU instructed Rishi to make direct the supply in the state of Karnataka. Where is PSU registered? PSU is registered in Tamil Nadu and Rishi is registered where? In the state of Karnataka. Here it is. Right? So here because for the first transaction, what will be the place of supply? Place of supply will be location of the recipient, that is Tamil Nadu. So we both are situated in two different states. So this was considered as interstate supply. Therefore TDS will come. As of now TDS will come on 1,50,000. At the rate of 2% IGST. So 3,000 will be the amount of IGST. Then which of the following outward supplies provided by Rishi are not subject to reverse charge? So insurance was subject to reverse charge. Recovery agent was not provided to bank, na? Recovery agent. So recovery agent will be under forward charge mechanism. Renting of motor vehicle will be under RCM. So which is not under RCM is the second one, that is only 2. B will be the correct answer. That's it. Okay, so this is all about our case scenarios. We have completed all the case scenarios. I hope the discussion was helpful to you. Yes, wherever possible, I have provided you with the explanations, with the multiple answers possible, etc. Yes. See, there are some or the other mistakes in the solutions which is provided, because some of them are not updated. Okay, so in the exam, you don't have to worry about it, because whatever they are going to give you, they are going to give you with clarity, and they are going to like expect the answers from you only on the basis of amended provisions. Okay, so nothing to worry about it. Just be very very open minded and broad minded while giving the answers. Like whenever you must have seen when we were reading the questions, okay, at that time you saw at the time of reading itself we derived the conclusion out of it. So because of that we will be able to save out on some time. Yes, and whatever efforts you are taking for your descriptive questions, that is numerical questions, etc., same efforts is required for MCQ. Means you need not take any separate efforts. You must have seen there are so many questions. If you have done my question bank, there are so many questions which are there in our question bank, and the same to same questions are there in this case study scenarios also. Okay, so what they have done is the descriptive questions itself they have modified it and they have put it here in the MCQ scenarios. Okay, anyway, now I hope you are done with the case studies. Now you can go back to the concepts and you can revise there. Okay, now you must have got the knack of doing it. So this much is sufficient. Yes. Okay, I hope this lecture was helpful for you, and yes, please like the lecture, please share it with your friends, and please let me know in the comment section if this was helpful and if you have completed the video. Yes. Okay. If you need the books, the concept book, compiler book, etc. For IDT, it is available on my website, that is ArpitaTulsyan.com. If you want to go with any exam-oriented batch or any regular lectures, etc., even those lectures are available on our website, that is ArpitaTulsyan.com. If you have any issues, feel free to WhatsApp me. The details are there below. In the description. And yes, this marked file I will put it on my website in the free note section. You can just go to the website to the free note section and you can download it from there. Yes. Okay, I wish you all the best for your exams. Thank you so much, everyone.